You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
All right, guys, and we are back. New theme, new month. November is here. And our theme for the month, and to kick off this 6-hour stream we're doing today, which is crazy, we're switching to space theme. And as you guys can probably imagine, there was a lot of work that went into facing the entire stream. Last month we had spooky season. We had a lot of fun with it. I hope you guys enjoyed it. Now we're off to space. We just launched into space. A1 trading to new heights kind of thing. So welcome back, everybody. Thank you for being there. There's 170 of you in here. If you guys would do me a quick favor as we kick off this mega stream, what I would love is your help by smashing that thumbs up button. Let's have a great stream today. Please feel free to tune in and out throughout the day. We will be here. Like I said, we're going to stay live for several hours with guests from all over the world to help you guys prep for the big meeting this afternoon where JP will get up on the stands, talk about monetary policy, and shake the markets every which way. All right, guys, we are back and talking trade setups, getting started here. Got a couple things to keep on your radar. The dollar index trading just at resistance, guys. The question will be today with all of this news, which, by the way, we start with a banger with ADP numbers coming out here in just a few minutes. Let's get that on the radar so we don't get blindsided here. So today we have ADP on non-farm employment change, which came out here today, this morning, less than what was forecasted. Now, the market's not taking this too seriously, and it actually makes sense. ADP has been so all over the place in terms of predicting what NFP actually comes out to be on Friday. This is an early look or estimate of what job change is looking like. Jobs, of course, being a major indicator of the economy. Well, it's been really inaccurate in the last several months. And so I think the dollar moving here, or the markets, taking it with a grain of salt, as they probably should. However, we kick off the stream here with some big news in front of us here today. We have going at 10 a.m. We've got PMI numbers and JOLTS job openings. Both of these metrics, by the way, guys, they give us key insights into the labor market here in the United States, which of course is going to be a big USD mover. If you're trading USD pairs, if you're trading gold, if you're trading indices today, This is the place to be. We will be bringing people in, like I said, from all over the globe today to take a look at charts with us, share trade setups, so on and so forth. So again, a recap of ADP non-farm employment change. We came out 113. That is lighter than what we were expecting in terms of employment change. And let's see how the markets are reacting. So again, dollar index trading higher here, still just barely above that resistance point, guys. And for the bulls out there on the dollar, I want to make you very aware that I think if the dollar is able to break through this level, right? If we close with a nice bullish candle, apexing or beating out this level of resistance at 106.9, give or take, if we can close strong on this, I think it's a good solid chance we retest the previous highs. Now, that's not saying a whole lot because you look at the 4-hour chart, that's not a massive move, but it is a move nonetheless that could lead to perhaps a bigger push. And that bigger push meaning taking us to new highs. We've been consolidating on the dollar index. And I don't want to get too far ahead of ourselves, guys, because again, we have really big news throughout today's stream, which again, we will be going all day long on this stream until we get to Jerome Powell's speech later on. Okay, so dollar index in terms of where we are at with this. If we close bullish, meaning what I would like to see, guys, to be a little bit more clear about this, let's get our fib tool out and I want to show you something. So it's obvious we have big resistance here that price is flirting with trying to break out of. If we get a crest above this area, and what I'm talking about when I say crest is I'm talking about probably enough to get us a nice retracement that marries up nicely with support. So let's say a bare minimum break up into this 107 mark. If we get up into the 107.15, let's call it, that perhaps signals that buyers have taken over this area and that from there price could be supported for a bigger push to the upside. Okay, so for dollar bulls, that is probably what we look for in my personal opinion. And I want to talk a little bit about all this dollar strength in reference to a market that I know a lot of traders here are paying attention to. Is the bullish scenario beaten down for gold? I want to get you guys' thoughts in the audience right now. Can you guys let me know, do you think gold is bullish from here? Or do you think it's bearish? Just comment in the chat really quick. I'd love to get you guys' thoughts on that. And we can kind of sense what the audience is saying. As you guys do that, I'd love to just take a quick look at what on average retail traders are thinking. So let's pull up retail sentiment for a moment. I'd like to get a look at gold here. So we can go to the commodities section. I've added on gold and you can see we added this cool feature, guys. This gives us a bullish or bearish signal based on sentiment. Quick high-level education on retail positioning. What we look for is we look for this to be a contrarian indicator to the markets. So if, for example, retail traders are very long on something, we view that as a bearish signal. And if retail traders are very short something like they are on dollar yen, we view that as a very bullish signal. I've got to talk to you guys about dollar yen. That is an incredibly interesting story happening right now. And that should be definitely a storyteller to say the least. So in terms of what we've got for gold, we're sitting at a pretty neutral reading. So gold currently pretty neutral in terms of retail. Now, in terms of overall setups, let's see if we can find something out for gold. So gold's not giving us a strong reading. Currently, our strong readings are looking like dollar CAD, dollar yen, Aussie CAD, bond market, bullish side. Actually, very interesting that we're getting a bullish reading on the bond market. That is incredibly interesting. And I might have to look into that. It seems like a big score driver is COT data going into bonds. Fascinating. Pound USD, very bearish. Kiwi dollar and euro dollar poking back into the very bearish camp, guys. I bet you this was alerted inside of the Discord. Let's see. Let's see if we did get that. Yes, we did. There it is. The signals from the EDGEFINDER are currently online, and that is really exciting. So we did get a strong bearish reading yesterday on the EDGEFINDER as this switched from kind of a neutral camp into a bearish reading. So for euro dollar bears who have the alerts, I know a lot of you guys just signed up. The alerts are available today. I know a lot of you guys probably caught some of that action if you were watching Euro Dollar. So we had some people who got early access to the EDGEFINDER Smart Alerts. And by the way, if you do not have them, they are currently available. You can now get notifications from the EDGEFINDER. It is a notification system we built from the ground up that works with Discord. So you basically get into the Discord and you get notifications whenever the EDGEFINDER spots an idea. So it turned bearish and alerted people in the Discord. So if you would like access to that, and also I should have said this a while ago, in case you're a regular stream viewer, first of all, I just want to say thank you for your support in making this show possible. And second of all, if you are somebody who supports our campaign as a software company, we build what we believe to be superior tools for traders. And if you do not have the EDGEFINDER, or you do not have Discord access to where you can see the trades being taken by Frank and myself, today is your day. Because today we launched our Black Friday sale. We do this all month long so that it gives people who need to make arrangements to purchase our stuff, gives them some time, gives them some heads up. If you are somebody who would like the biggest discount of the entire year on anything we have in our store, today is your day. If you send a message in the chat right now, we are dropping a 45% off chat link. If you send a direct message to us, let me show you this. Again, click this link. You can get access to the EDGEFINDER, the trade alerts, the smart alerts, all of them, anything you'd like, 45% off. That's nearly half off. All you have to do, shoot us that DM, direct message in on the website. Again, you'll be connected to a real person. We even changed this theme to be blacked out because it is Black Friday. Get the black shirts on. We're doing Black Friday early this year. Black Friday sale, 45% off. Take it or leave it is the best option the entire year will give you in terms of a discount rate off of our software here at A1 Trading. We work all year long to build the best tools for traders. And if you're somebody who supports our stream, supports our channel, we appreciate you. And we want to say thank you by giving you our access to our stuff that we work so hard on for super, super slashed prices. So do not miss it. Click the link down below in the description or in the chat and message in. We'd love to hear from you. And again, we'll see if we can get you a copy of the EDGEFINDER, Discord access, whatever you'd like. It's all pretty much almost half off right now. So yes, breaking news, guys. Sorry about that. Well, actually, did we have breaking news? I think we already had the news. We have 8:30, 8:40. We have something, but the ADP number came out earlier, so we had 8:15 news. So all good on that front. Don't worry about it. False alarm there. Guys, what we will do, though, is we're going to take a quick break. We're going to come right back after this with Marco. We're going to go through some trade setups with him. I'm very keen to hear what he's got to say about this market right now. It's been moving quite a bit. I know he trades things like Euro Dollar, trades things like some yen crosses. So we'll hear from Marco in just a second after this quick break, thanking our sponsor. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free EDGEFINDER, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
All right, guys, and we are back with Marco. Hey, Marco, what's going on? Do you like our space theme stuff?
Yeah, I like it. I was laughing all the way.
Yeah, we it's kind of a crazy thing, Marco. Obviously, with being on the content side as well as the trading stuff, we end up doing some really funny things at work. I mean, we're all getting dressed up and coordinating these really silly skits, and sometimes I just kind of like take a step back and I'm like, is this really what we do day in and day out? Like this is our lives now. We make silly skits talking about brokerages and stuff, but what's not silly is 8cap. 8cap is a wonderful brokerage. Again, if you guys want access to that, you can also message us. Marco, big day today. Today is game day, if you will, with FOMC later on today. Now, I know you don't trade the news themselves, but we've talked about this at length about how important news days are. Actually, Tom from Simply Forex, he came on yesterday. He'll be back on today, later on in our marathon stream. He talked about how news is not something that he uses to, of course, like make a decision based on what the news is, but we rely on those news candles to give us the volatility. So, Marco, what's your game plan today? What are you watching, and what would you be looking for some setups?
Sure. So quickly about my position on news candles. So I don't pay attention to any news or calendars, only the NFP, of course. That day I don't trade. But when considering news, they do push the markets. So I'm a trend trader and I need the news for trends to happen. Usually after a news candle, I can definitely see some really nice trends to start. What would be an example? Well, this to me looks like a news candle, and you can see one move to the upside or a move to the downside. So usually after a news candle like this one, we do get some nice volatility and you can squeeze out some profits. So they're an essential part of any trend trader, I would say. Now, what am I looking for? Well, I'm going to quickly run through my 6 pairs at a glance and see if anything is setting up right now. So EU actually is looking, let me get the tools out, like it's going to go down a bit more. So I'm seeing this formation, this pattern, which I like to trade. It's called the V reversal and the range. And usually what that signals is further downside price action. Now, I do need confirmation. I do need to get a large impulse down, and then I will be looking to sell either on a flag or on a break and a retest entry. Euro Japanese yen, large move up from a descending channel, which I do expect will actually push further to the upside. So currently, am I in a trade? No. Why? Well, because I saw selling pressure inside of this leg, so I wasn't interested to be a buyer. What am I looking for? I'm looking for this to actually continue up, and then I would be looking for buys, since then I would be seeing a nice established uptrend. So waiting for the break of this level or this level right here. Okay, then we have the Aussie US dollar. Aussie US dollar for me personally is flat. I'm not seeing much on it. I'm being more patient and I'm waiting for cleaner price action, waiting for some nice formations, some nice trends to the upside or some nice trends to the downside like this. Okay, Aussie Japanese yen.
Sure.
Same thing, slowing down here a bit. I'm sorry.
Keep going. Sorry about that. I thought you were you were pausing, but keep going.
Oh yeah, so I'll just run through the rest. Yeah, AJ flat. Not looking for anything here. Looking for large impulse up or down. Pound, for me it's flat. Not looking for anything right now, but again, we do have some news, so we may start an uptrend or start a downtrend. We will see what will happen. Okay, then we have the final one I trade, which is New Zealand Japanese yen. And right here on the top of this formation, we had a flat range here. Then we had a bit of a move up, bit of an impulse up, and now we're flat right here on the top as well. So looking for a push up or a push down. In summary, only thing on my radar is EU to go down and EJ to go up. Rest of the pairs, sleepy, range bound, flat, looking for momentum, but again, the news may push up or down. We will see what will happen.
Yeah, thanks for going through those, Marco. And again, I think for anybody who's in the audience, I mean, think about what Marco just did. He was able to very quickly run through his game plan. And when you do this stuff for a while, you know what you're looking for. You know that you don't need to spend super long periods of time going through absolutely every which way. You know which charts to look at, you know which things you're comfortable with, and you can get through it pretty quick. So Marco, with these yen crosses, I expect there to be quite a bit of volatility with the Japanese yen, as well as with pretty much everything with what's coming later today. As I mentioned briefly, we do have Jerome Powell speaking, and there's mixed sentiment about what is going to be said and what is going to how that's going to shape up going forward. But before that, we
Okay.
do also have something, as Chandler shared in the audience here in the chat for us. We do have ISM Manufacturing PMI. So for those of you guys who are watching charts right now, whether you're talking gold, whether you're trading USD pairs, please be careful with the next next hour or so. We've got PMI numbers, jolts. These things are set to move the market as well. And I guess, for me, Marco, I do have a bias going into today. I've talked at length about my bullishness on the S&P 500 and the NASDAQ, both of which I've had terrible trades recently on. But so far, we've got a nice little pop. I think November has some interesting dynamics to it that could stay strong going into it. Again, November and December historically, seasonally, are really strong for certain markets. Like, for example, the S&P 500 tends to do well in November and December. And of course, by proxy, same thing with the NASDAQ. And then, you have all these different variables. So I know that can get complicated compared to what your technical setup. You're looking for a very specific pattern. You're looking for momentum. And I want to ask you, let's just say that later on we get something very decisively bullish or bearish for that, say, Aussie JPY. What do you think?
Okay.
Let's say, risk on sentiment blasts off. And you mentioned, you have this kind of concept going on the 1 hour chart, this kind of breakout here.
Okay.
How do you position yourself to possibly be bullish? Like on that note, Aussie yen specifically, I'd love to get your thought on like a setup there.
Yeah, let me run through a quick potential setup on AJ. So let's say we get like 3 really nice bullish candles following the news to the upside. Then I have my confirmation. So I have my confirmation that the bulls are winning. What I now need to see is I use 2 entry patterns, either a flag formation like this, or a simple pullback, break of the high, and then retest of the high, get in on a buy limit order like this. Now, what's key is that anywhere in these 2 entry formations, either the flag or the break and the retest formation, that I do not see selling pressure. So when I'm a buyer, in the impulse and in the entry, I do not want to see any sort of selling pressure. What would be an example? Well, let me show you an example on a recent trade on, let's say, the pound US dollar. Okay, so let's say something like this happens. Let's say the market just melts to the downside. We get this really, really nice long impulse going down, which can happen after news. I mean, it's very likely. And let's say I get a flag formation looking like this. So let me just print it out. Okay, this would be my entry. Now, this is exactly what I want to see. So I want to see 0 buying pressure if I'm a seller in this market. And the size of these candles, the look of these candles are just telling me there is 0 selling pressure, and this is very likely to continue melting down as it was. So that is actually what is the key in the entry part of the strategy that I trade.
Sure.
So that is kind of what I'm looking for on AJ just reverse. So something like this, right? Yeah, I would like to see this on AJ.
Yeah, that makes sense, Marco. And I think one thing that's kind of cool about that, I think people underestimate just how powerful weak retracements can be. I know that's something that's pretty core to your strategy.
I love it. I love them the most. Yeah, they're the best.
Yeah, it makes a lot of sense if you think about it, because you're basically looking for what some might call like a dead cat bounce. Like it's this very, very weak attempt to find a bottom. And, it's almost like if it's selling out, right? Sellers are going to take a look at that and be like, yeah, that's not going to hold support. And then it's like it falls through. And then I notice about your strategy, after I know we've spent a lot of time together on streams, I know that when you look at something like this, I'll show my screen here for a second.
Sure.
Here's euro dollar, right? I know that you make this point very often. When you get a different reaction, which is, okay, lots of strength, clear buying, but then you get a big push the other way, I don't think I've ever seen you be like, oh yeah, now that's a buy there. You're always kind of in the camp of, okay, V movements, you stay away because they oftentimes are full reversals. And I really like that.
Yep, yep. So it's all about, for me, it's momentum. Who is winning, the buyers or the sellers? If I'm looking to buy, I do not want to see any indication of sellers. And also, you talked about November and December being really good months. What I actually found, the strategy that I trade, November is okay, but December is usually a losing month. For example, in my back testing in the last 10 years, almost every December was actually a losing month for the strategy that I trade. So that is very interesting that you found December is very good for you personally.
Yeah, no, and that's the thing in terms of. Let me clarify just a bit what I meant by that. So I was purely meaning in terms of the returns on average of like the S&P 500. So I've got S&P selected up here. The month of November and December, you can see historically, and this goes back decades, not this particular data, this is just a last 10-year trend. But if you broaden the horizon on seasonality, it shows that historically November and December are pretty bullish, which is why I picked up a long position this morning in the group, went ahead and went long on the S&P for partially this reason as well as some other things. But again, recognizing these things, Marco, whether it's you trading seasonality or just your strategy and back testing, I think 99% of traders do not know what you just said about your own strat, Marco. You were like, I know that in November, this happens. And I know in December, it's a rough month. So maybe you're less.
I'm less likely to take a trade. I'll be more careful. I'll look for A+ setups. I'll not take, let's say, B setups or even C setups. I'll focus on the A+ things.
Yes, exactly. And I think that's a wonderful, everybody always wants to catch the next big giant mover, and that's how they think they're going to become profitable. But sometimes it truly is refining the losses and minimizing the losses. Because if you were able to take less losses, let's face it, it's the same thing as taking more wins. $1 saved is $1 gained, right? So next concept for us, Marco, we've got a few minutes here before I'm going to bring on Kenzo, which will be we'll be doing a little bit more fundamental side. I want to ask your thoughts on gold today. I think the easy kind of answer is, we're range bound, which makes sense. Yeah, I know, me too, right? Like it's the easy answer is it's range bound, it's not doing anything. But and again, I think if you look fundamentally, it makes sense, right? The whole market is waiting to get some resolution from the numbers and the commentary that we get today. But again, same question. I like to do this because I know, you have a very thorough plan. So I always love to get your take. I know you don't even trade gold, but in terms of what you would be looking for, how would you size up gold to look for possible trading opportunities if it were to get some explosive price action today?
Okay, let me open it on my chart quickly.
Cool.
So gold and 1 hour chart. So what I would be extremely careful of is these areas below and above this flat range. So any sort of a move that has a push to the downside like this or to the upside like this, I would be very careful to see what happens in the next few hours, because easily this can just be a liquidity grab, go back into the range and continue being very flat. So what I would need to see, I would first need to see a nice strong breakout in these areas. And why would I need to see a nice strong breakout? Well, because the range bound traders are most likely buying here, buying here. Where are their stop losses? Well, probably below these wicks, below here, selling the tops, stop loss above here. So these areas are full of stops and full of liquidity, and in these areas, anything can happen. So what I would need to see, let's say we drop, I would need to see a push, nice clean close here. So a nice close of the candle, and then I will need to see the next few hours continue melting to the downside for me to be even interested to look for a sell setup. So I would need to look for at least like 5 or 6 hours of consistent selling, because this range seems very large and very strong as well, since these rejection wicks are also huge. So yeah, very patient, very careful with this current position that gold is in.
Okay, fair enough. Yeah, and thanks for breaking that down. Again, I think it's one of the things that I've been trying to move more in the direction of on the stream is sizing up game plans, because what I think, viewers, audience, people who come to this for insights each day and ideas for this each day, at the end of the day, Marco, we're servants to our audience here. We're trying to help the community
Yep.
in some way, and that's why we have a show. So I think it's kind of useful to do that, where when we talk about a chart, it's like, let's talk about game plan. What changes need to happen for entries to occur, for setups to play out? Because let's face it, and this is the reality of trading, is most of the time there's not a snappy entry to be taken every 15 minutes. It's a lot of
Exactly.
waiting and understanding, kind of speaking, kind of trying to understand ahead, looking ahead at where we could find setups that could be really, really useful. So
Yeah,
Marco,
most
I
days.
want to. Yeah, go ahead.
So I just want to say, most days I look at the chart and I say to myself, this is looking like purely range bound price action. I don't see anything here. Like 80% of the days, trading days, I come to the charts and I don't see anything. But that 20%, I see something, and then you can make a lot of profits. But it's tough to be patient and wait for those 20% of the days that are actually trending. And it's easy to lose all of your profits in the 80% of the range bound days. So yeah.
That's so true. And Marco, I want to just offer another point of view on the gold market, because I know for a lot of you guys who trade the 1 hour chart, I think Marco made some very good points. If you're a day trader, if you're trading the 15-minute, the 1 hour chart on gold, you're stuck in a range on the 1 hour. I think for the 4 hour, things get a little bit more interesting, and I want to add my opinion on this. We've been in this really strong upward trend, and a lot of people, I think, would look at this and they would say, well, the trend looks like it might be breaking back the other direction, right? You've got this trend line. Clearly buyers were strong here, which I would agree with. The easy money, I guess, is no longer there, right? The easy money, what I mean by that is it's trending. Buyers are in full control. And I know Miko too, we usually have him on here. Marco, yourself, Miko, and myself, when we're looking for trades, we're looking for dominance, right? We're looking for one directional winning. Because again, we don't want to mess around in those range bound markets. My context for gold traders out there on the 4 hour chart is a lot of people might be very quick to jump ship and say, oh, the bullish trend is over. But you also have to understand, markets don't just do this. They don't just trend and then they start trending the other way. Oftentimes, markets trend, then they enter consolidation, then they could trend further or they could trend the other direction. But oftentimes, just because you get consolidation, I think sometimes people will say, oh, gold is going to fall apart here. But you just have to recognize, I think this is your easy money period where it's just obvious uptrend. When you enter into this range bound market, I think, Marco, you would agree, this is where it's tougher to make money because the market's indecisive. Yeah. It could go either direction. So just the 4 hour context, I think, is key there.
And what I'm seeing on the 4 hour, so let me just quickly run through that.
Yeah.
What I'm seeing is, I'm seeing an ascending channel, which I really like to trade, which usually reverses. But what I also like to see in an ascending channel, I like to see major selling pressure. So huge red candles, which I'm not seeing currently. All of the red candles that I'm seeing are pretty small, so meaning the sellers are not really winning that much. So what I would need to see is again a meltdown like this of some large red candles. That would be the confirmation of this slowdown of the move. So this may as well just continue trending up. This may as well just continue doing this. It wouldn't be a surprise for me.
Yeah, no, thank you for breaking that down, Marco. And again, Marco, we've got a 6 hour stream that we're doing. I will not be on camera for 6 hours. I can tell you that right now. But we have a wonderful list of
I wanted to ask you.
No way. I will be in and out throughout the day. If you're around, we might ask you, keep your phone on you just in case if you do have time later on. I think we have a full schedule, but if there's any fallouts, we'd love to bring you back after. Obviously no requirement or pressure, but if you'd like to, you're more than welcome to loop back in. Marco, thank you for kicking us off today. You were our first guest and started off with a good one. So thank you for coming on the show. And I want to just say to everyone who is watching, Marco's got his link to his YouTube channel right here. Please go support our guests. We do these shows with collabs with people from all over the world, all over YouTube, and Marco being a absolute gem to the show. So Marco, thank you for coming on.
Thank you. See you. Goodbye.
See you, Marco. Yes, always good to have Marco on, guys. Again, very, very practical guy, big on back testing, big on patience and setups and waiting for your setups. He's great to have on the show. And again, if you do not already subscribe to him on YouTube, please do that. It's one of the ways that we don't pay these people to come onto the stream. It's a collab. So they get something out of it. We get something out of it. And obviously the viewers get something out of it. So let me just remind you guys, we got 390 people in here. If you could do me a quick favor and hit that thumbs up button on the stream, we're doing 6 hours straight today. Is anybody going to try and stick it out with us? If you're planning on sticking around or trying to, let's get some I'm here all day in the chat. If you're somebody who thinks they're going to do it, if you're going to marathon with us, I'm here all day. Maybe not me, but we are. I will be in and out. I'm just going to I'll have some breaks, some coffee breaks, some pass out breaks, and so on and so forth. But we've got a couple lined up here. We've got, I believe it is, let me check the schedule. We've got Kenzo coming in at 9 o'clock, which is in about 5 minutes. We'll be chatting with Kenzo. We got Ivan at 9:30. Then we got Jolt's numbers as well as PMIs at 10. We got Tom coming in after that. We got some giveaways and games and prizes. If you guys are marathoning with us like Mr. J, hey, you guys are awesome. All day, baby. Let's do it. Never done before. We've never done this before, but you guys are super supportive, and we appreciate it. There's Julie. She's in monitoring the stream as well. And lots of you guys say you're going to be. I don't know if I believe all of you. I don't know if you're as crazy as you say you are to stick around on stream all day. Anyways, I just want to finish out my thought here on gold, guys. So gold, again, real strong upward trend. I think, like I mentioned, the easy money, not really there anymore. It's kind of gone into a range. When I say easy money, nothing is actually easy money in trading. But what I mean by that is the dominance of one player in the market, meaning in this case, the bulls just in charge, right? Every area of support was held so easily. Well, this area of support kind of fell apart. So I think that change has kind of come into play. Now, if you're a bull, you might still point to, well, 1980 holding really well here today. The question is, can that get backed up to the highs and perhaps break out? I'll tell you what could potentially do it is all the numbers and data that we have coming out today, as well as JP at 2 o'clock giving some speech. So in terms of gold, I want to give you some more context in terms of where we are at with that. Seasonally, gold turns bearish in the month of November. I think I've got that right. Let me check that is in fact the case. I don't want to just say it and not know it. So yes, November historically on a 10-year average is a negative month for gold. So we will see. We've got that working against us, and in December. We've got something must have happened in the last 5 years to really skew the data, but overall pretty flat in December. Most bullish time of year for gold, guys, is actually January. Interestingly enough, it's almost like the new year. Maybe, I don't know, maybe a bunch of people are buying jewelry for their wives. I don't know what causes that. I'm not entirely sure, to be honest. I want to take a quick look at the dollar. Of course, the dollar is the pulse of the market. I always kind of stand by that. It is a really important key indicator by itself. Why? Well, because everything is quoted in dollars, and it sets a narrative as to whether risk sentiment is bullish, bearish, fearful, concerned, etc. The dollar right now is still very strong. We put in a low here and bulls just flew back up to this resistance. We are now testing the limits. We're stress testing the limits of this high at 106.85. I think if you break this, as I mentioned, I think any strength, any close outside of this leads us to a dollar rally through this high. But be very, very careful as you do have major market moving news that none of us know the answer to. Nobody knows what Jerome Powell is going to say, right? He could say, I don't know, he could say that he's feeling sleepy and the market would roll over, right? It depends what he says. And so in terms of dollar price action, what I'm looking for is decisiveness in terms of the bulls. If they close strong, I might be looking to get back into some trades. Dollar CAD was a winning trade for me this week. I ended up closing profits on dollar CAD. Here is the 1 hour view. This was a trade taken inside of our Discord channel, which let me make sure to drop that plug really quick. If you guys did not hear already, it is Black Friday. We are doing it all month long here in November. We've got our space theme to go along with it. And Black Friday currently gives us 45% off anything in our store. If you'd like access to the EDGEFINDER, if you'd like access to the EDGEFINDER's new smart alert system, if you'd like access to the Discord channel, which gets you, of course, all the trades that Frank and I are taking, you can join right here. We've got a link in the chat. Click this link if you'd like information. Again, you'll see the trades being taken. You'll see the new EDGEFINDER smart alerts if you go up and sign up for that. In terms of the Discord, though, you can see yesterday, here was my dollar CAD trade. Picked it up in the morning and it just shot right up. It was a wonderful pullback into support, right? You had support, nice upward trend line, and I liked the bull case fundamentally for the dollar this week. And so again, picked that up and it just shot to the moon. I was able to trail stops a few times before tagging out for a profit. So will I play dollar CAD again? Maybe. Where did I get that signal? Well, I was watching the EDGEFINDER. This popped up as a strong, very bullish setup. Got that alert and went ahead and picked it up on the long side. So dollar CAD, will I watch it again? Well, here's the thing. You might say, well, Nick, it's back at support. Why don't you buy? Here's where I would say, hold your horses for just a second, right? Hold your horses. We're at resistance here. We've kind of done this little bit of a triple top concept. And price is waiting. I would say if you do get something like this today, breakout, retest, very interested, very intrigued in possible continuations. Let me talk about another trade I'm in. Let's go take a look at SPY. Of course, the S&P 500. I am long. Picked it up here this morning, sent out this notification inside of Discord, and we are looking at a nice profit so far. Let's actually get our entry here. I like to mark it out in blue with a horizontal line so we can see it. So we'll go template buy entry. So again, we are long S&P. Part of that being seasonality, guys. We talked about that at length. Seasonally, S&P looks a little hotter in November. So I'm betting on that. I've got to stop below the lows. And if I'm right, we'll make some good money. And if I'm wrong, we'll lose money. And that's trading 101. There's no such thing as no risk trading, right? There's always risk. So I like the S&P long. I'm willing to take a position in it for better or for worse. And again, that's kind of back to seasonally. It is something that I like in terms of holding on to for the month if I can. I've got, a pretty wide stop on this one, with the idea being, if it runs, it has plenty of room to rebound in what I think is a pretty oversold market condition. So broke this trend line to the upside on the 4 hour. And again, that kind of triggered me to look for bullish setups. So we'll see if we can hold on to this one for the week. Yeah. So again, dollar strength, can it coexist with the S&P 500 rally? Well, we'll see, but I think it is actually possible. It's a bit of a weird one, but I think it is possible, right? Strong economic data, not necessarily bad for stocks. What's more important, I think, is the disinflation trend continuing and the Fed not throwing a rock at the glass room that is the S&P 500 right now. So we'll watch that close. Of course, we are here all day. Literally, we're doing an all-day stream today. So stick around with us. And in just a second, we're going to bring in Kenzo just after this quick break. So we'll take a quick break. It's just going to be 30 seconds, a minute, and we'll come back with Kenzo to talk fundamentally what we can expect here for today's super hot lineup. We have, again, just a reminder, we have PMI numbers coming out in an hour. We have JOLTS numbers coming out in an hour. In a couple hours, we have Fed speak from Jerome Powell, the FOMC statement, and the federal funds rate decision. To say today is a heavy day is an understatement. It's a wild day in the market. So we are here. We've got coverage for you all day. We'll be back with Kenzo in just after this. Just a second.
When your trade goes to the moon with 8-cap, this is what it feels like.
3, 2, 1.
There's your second 8-cap stream ad of the day. We're back with Kenzo. Hey, Kenzo, how you doing?
I'm great, thanks, and you, my brother?
I'm good. I'm good. And it's good to have you back on the show. We've got, as I was just mentioning, we've got a long day ahead of us in terms of stream commentary. And I couldn't be happier than to have you on here with me for a little bit just to talk about where this market is going, what's going on with it. The dollar's hot today. And as mentioned, got some things lined up. Got PMI numbers, JOLTS job openings. You've got manufacturing prices, federal funds rate, FOMC statement. Where are you looking? What's on the Kenzo radar today in terms of markets that you're watching as well as news? What are you looking for out of these events?
Yeah, on my side, actually, the most important thing currently is the FOMC press conference. So that actually will help us to understand what might happen next. Actually, let's say next year. I think that statement or that conference is going to be way too important for us to actually understand what can we do next, whether we're going to sell or we're going to buy. So other ones, PMIs, and maybe NFP on Friday, I think that to me, it's not really that important like interest rates. So if interest rates is going to pause, and maybe they might signal anything about maybe cutting the rates maybe in a few months to come, that to me it's something that can help me to follow the trend, because actually the trends actually follows the trends, you see. So I mean the interest rates follows the trends. If they say they're going to increase the rates, you know that it's going to be maybe in 2 months or 3 months. So most likely the market will be going up. That's why we see if you check your yield, they were actually pushing up because of CPI, and that is actually long term. And also on our side, I can see DXY quite stronger. Maybe it's because of the interest rates later on. I don't really see it pushing lower that much. I think Powell is still going to say inflation is still very high. We saw the last CPI was a bit higher, and retail sales were also doing good. So I don't really see them saying they're going to cut the rate anytime soon, but I don't really see them increasing any interest rates. So which means we're going to be a little bit balanced. But I think this DXY is still going to push up. I think dollar is going to still get stronger and stronger for quite some time.
Sure. Yeah, no, that's kind of where I'm at too with it, Kenzo. I think, the path of least resistance for the dollar is still higher because, you also have to remember the way the dollar instrument itself works, right? It's a comparison of the US dollar with other currencies, right? With the euro, with the Japanese yen, both of which those two have had really tough times recently, right? Europe is concerned about recession. I mean, you listen to Lagarde speak. She's pretty much mentioning that the slowdown is a serious thing in Europe. And then, of course, you've got the Japanese yen falling out of bed here today, just selling off. I mean, we haven't even talked about dollar yen, but look at dollar yen, guys. I mean, my screen here is it's a scary looking chart. If you're a bear, this is a nightmare chart, right? This is a breakout here above that 150. We've been calling for this idea on the streams on the channel for some time. Dollar yen, that peg of 150, I have casted doubt on it since there was a Bank of Japan intervention fear weeks ago. I pointed out I do not think that is a ceiling that will certainly hold, just because, again, as you mentioned, Kenzo, you've got yields going higher because inflation concerns are still elevated, and meanwhile, just because the Bank of Japan says, "Hey, we're gonna buy our own bonds," does not mean it can just take the full force of the dollar rising. So I think that 150 breakout here is really intriguing on something like dollar yen. Big pop here over the last few days. And I would say personally, path of least resistance looks like further upside here if we do get that pullback. But just an interesting chart that I was watching here this morning.
Yeah, I think if you still remember, but it's a few months ago, actually Bank of Japan, they, just because inflation was a bit higher, they actually came with this law of saying we're not going to increase the rates for quite some time. They stick with that for quite some time, but Japanese yen has been like seriously suffering for quite some time. I don't know if maybe that is still the case. I'd never checked their economic news that much, but I think anything actually against the yen, it's quite stronger because they're not actually increasing the rates. I don't know if maybe they're now trying to change that, but I think we will see actually a very nice buy, because I also did check actually USDJPY on a daily time frame. That was a very strong resistance. I thought maybe the market was going to respect that, but I'm surprised when it's broken out. You can check maybe on a daily time frame. I think we had actually stronger resistance there. Yeah, I think you can see that. If we go back, you can see that actually that was quite stronger. And the market actually, it's been playing around these areas for quite some time, but now we see a smaller breakout. Let's hope that maybe the market is going to continue, but it's a bit difficult to say we're going to get in very quick, as I think maybe if, later on, if we check interest rates for US, maybe things might change. Maybe they might say something which is not really positive. Then maybe we might see a sell-off.
Yeah,
Maybe.
no, and that's it's going to be a big maybe today with all of the Fed speak stuff. And I've made this point earlier in the stream, and I want to reiterate: none of us know with certainty what is going to be said by Jerome Powell. Anything he does say will cause markets to move aggressively. But I think the consensus right now for today's announcement is another hawkish hold, meaning essentially they're going to hold rates steady. They're not going to raise further. That's at least almost with certainty that is what they're going to do. They're going to hold rates at current levels. But there's going to be a hawkish tone to it, as Kenzo, you pointed out, right? That concern about inflation is still very real. And it just kind of comes down to what's going to move the needle for the markets. Well, anything more hawkish, meaning we are looking into possible further rate hikes, or we have pushed out a lot further than we thought we would need to for interest rate cuts, right? We won't see those for quite some time. If there's commentary that leans very much on the defensive hawkish side, the markets will rally. If there's any mention of seeing progress, if there's any satisfaction detected from Jerome Powell's speech and his of course the press conference following, anything of that nature will cause the dollar to drop very quickly. So again, Kenzo and I are not fortune tellers. We are here talking about, if this happens, we may look for these setups. If this happens, we may look for these setups. I would love to get your thoughts, Kenzo, here on gold, right? Gold here, of course, kind of range bound. I've got let's actually look at the 4-hour chart real quick. So 4-hour chart, I made mention just briefly before you joined us here on the show, Kenzo, that the easy money train has kind of slowed down, right? For a little while here, gold was just every single dip. Buyers were stepping in, pushing it to new highs and supporting their gains. That kind of ended here. Exactly. However, I don't necessarily think it's full-blown reversal at this point. It's just, I think the easy money may have left the building, and now we enter into a consolidation. What do you think about gold? I'd love to see your chart on gold as we go into, again, today's huge day.
So on gold, actually, I can say we might see maybe another push to the upside. Let me go maybe on a 4-hour time frame. On my 4-hour time frame, I think we have quite similar charts. I just removed my resistance and support because they were no longer making sense. The market was just breaking up and down. So I just, let me just remove that. And now I am left with this. So I think as you know, actually gold is so focusing on geopolitical stuff. And if you check around the world, we have that. Now, if you did check on actually Israel, I think now they're now trying to scale up their war against Gaza or Palestine. And that's why I think currently something that pushes gold to push to the upside. You see, if we check gold, dollar is stronger. But when we talk about geopolitical news, currently gold is a safe haven for everyone actually. So I think we might still see another push to the upside, but things started to go slower after the breakout. But I believe that we might still see another push to the upside. It might not be that fast, but another thing that maybe might affect this push to the upside may be the statement from Powell that might also change the way we see the market. But I still believe that we might still see gold pushing up, even if maybe it's not going to be that aggressive like a few weeks ago. But we might start to see maybe proper structures starting to happen slower, or if not, maybe we might see the market respecting this sort of a resistance, maybe trying to go back again. But for now, as long as we still have geopolitical news, maybe things might change. I don't know if you heard. I think Biden and Xi Jinping, I think they're going to meet next month or next week, in a few weeks to come. That maybe might also change the market if the trade actually sorry, I forgot the term. If maybe they actually find a closure between US and China, that might be a very good thing, and that might push gold to go even lower. I saw the news today. They say Biden and Xi Jinping, they already arranged the meeting. Then that will be a good thing. Actually, that might be a very good news. And if that happens, maybe we might see some relief on the gold and maybe other pairs.
Sure. Yeah. No. And again, thank you for breaking that down. The theme of the day, Kenzo, has kind of been, we had Marco on just before yourself. Goal is to kind of set out a game plan in terms of if X is said or if X happens in the market, then Y is what we look for. And I think that can be, really a useful thing as we prep for today, because there's so many markets to watch. There's so much to watch out for. It's really important to kind of set up your scenario. So I'll ask you this, whether it be gold or anything else, what do you think, Kenzo, in terms of top game plan for the day? I'll go first. I'll just real quick catch you up to speed in case you didn't see it when we first joined. My game plan has already been in play. I took S&P 500 on this week retracement this morning based on seasonality. Month of November, historically a very strong month. And we've also got, I think, tailwinds in the form of fourth quarter bullishness and stock market stuff. That's historically what generally happens. Not a guarantee, but generally it does tend to happen. So I picked it up on a pullback here this morning. And that's kind of my game plan. My game plan for this is I am comfortable holding the S&P as long as we don't break through the previous lows. We break out through previous lows, which could happen on an incredibly hawkish Fed. That's going to be my signal. Go away and wait for the right setup again. So that's my game plan. Okay. In terms of whether you have a trade open, Kenzo, or you are looking for a trade to enter, what's the most what's your call of the day, your trade of the day, if you will?
Yes, on my side, since I think I'm positive actually on NASDAQ, unfortunately, the order is not triggered yet, but we have a very long-term buy on NASDAQ. Okay. And we also have something on S&P 500. So I'm expecting to see the market reversing very nice, because I think we actually oversold for quite some time. Yes, the trend is actually a downtrend, but yes, I think we might have a very nice reversal. I think going back to next week, maybe the market will be around 15,000 and stuff like that. I might be wrong, but I'm actually on a bullish move there. Maybe during the news we might have some reversals, but I'm actually confident that we might have a very nice long position. Unfortunately, it's not triggered yet because my pending order was a bit higher, because I did not really want some fake touch, but now it seems to be pushing up very nice.
Yeah,
you see. But where we are now, also, it was actually a previous support. I don't know if you can see that. So our order is little bit above that. So if that is triggered to me, that can be a very nice buy.
Very good. Yeah, thank you for that.
So on gold, now, no, we don't really have anything.
Yeah, and
Come
so I
again?
think sorry about that. I think there was just a bit of delay there. I agree with your idea on Nasdaq as well as S&P. I think that you go into this month and you've got a couple things. The market itself, in terms of sentiment, is super bearish. People are super pessimistic on stocks. But there's some real strong pointers that you could make a point on. Right, the U.S. economy is stronger than expected. That, in my opinion, is not
Exactly.
bearish for stocks. You could make the point that, oh, well, the Fed is going to not like that. And yes, that is true. But I think the Fed is reaching the upper limits of what it wants to do with monetary policy. I could, of course, as you mentioned, we could be wrong about that. The Fed could say, hey, we're gonna bring the Fed funds rate to 6% because we have to, right? If
Yes.
that's something they change their narrative on, as a trader, you be reactive and you get out, right? You get out of the way of that
Exactly.
that downside. But in my opinion, I think they're going to not clearly say that they're done, but I think they're going to lean towards being done with their rate hikes. I think they're going to stay where they're at today, and if we see some disinflation trends continue, you have that. You also have earnings. The earnings recession, no longer a thing. We've had growing earnings this Q3. That's been good. Again, stronger economy, seasonality on your side as we enter the end of the year. I think it's a trade.
Yeah.
I'll stake my name on it. If I'm wrong, I'm wrong. I was wrong publicly before, so
Yes.
it is what it is.
Plus,
This is
Plus, technically, because most of the time, sometimes we talk about fundamentals, but technically, we have to buy when the market is low, and now it's very low. So, which means we might be wrong, but we were applying our technical analysis because we have to buy low. If you check on a bigger time frame, we are actually at the lowest area for this period. So, buying there is not actually really bad. I think that might actually give us a nice rebound. You can see that. And if you check, it's a 4 hours time frame. And I can see also on NASDAQ, it's also trying to push up. Also, US30 is also doing the same. So we might say, yeah, things are bad and that. But there are investors out there who are going to buy shares at the lowest price. We might not be buying shares because we trade like day traders, but the market is pushed by people who are buying shares currently, and they are way too affordable. So, which means we might see the market reversing, even though we say the dollar is stronger. Yes, it's stronger, but we like it to be stronger, especially when things are going bad. But when things are good, we don't really like it that stronger. That's an unfortunate part about fundamentals. You see?
No, you're totally right, Kenzo.
Now
At the end of the day, it's one of those things. It's you do want to buy when the market is low. For me personally, I combine that concept of a bigger picture fundamentalist swing trader and the day trading side of things or lower time frame side of things by saying, I like the idea of buying low, but I also like the sign of a price action reversal. We had this downward trend here. I waited patiently, this whole time it was dropping. I wasn't buying here and here. I was waiting for some sign. And now I think we've got it. I think we've got a nice series of higher lows, higher highs when you break down to the hour and the 4 hour chart. I executed this trade off of the 1 hour chart. We had this nice higher high, higher low concept going on, and within this weaker retracement, I went ahead and picked up. So it is about using that multi-time frame analysis, Kenzo, of higher time frame fundamentals, lower time frame, look for that price action setup, and you combine those two things, you can find some really great opportunities. But Kenzo, thank you for coming on the show today. And again, we will see, my friend, if we can find some further upside on these indices here today. But it's going to be in the wind as it goes, because of course, with JP's speak, Jerome Powell later on, Fed chair, will have something to say that will move the market. So again, risk management is key, guys, as we go throughout this day. And Kenzo, before you go, I just want to say to anybody who has not already, we ask everybody who's watching the show, please support our guests. This collaborative show that we do, the A1 Trading Show, would not be made possible without wonderful contributors like Kenzo, who comes on and does this with us. So please make sure to go subscribe to Kenzo. He has his own YouTube channel, and you can find plenty of value there. Kenzo, have a great rest of your day, man. And stick around, watch the stream with us. We'll be here all day long.
Okay. Thank you very much, my brother.
All right, Kenzo. See you later. Always good to have Kenzo on, guys. Kenzo from South Africa. He's it's a different time zone for him, so we do appreciate him coming on to the show and being here with us. I like to. It's always for me. It's a positive confluence when Kenzo likes the trade that I'm in, because again, Kenzo, very knowledgeable guy in both fundamentals and technicals. So we'll see if we're both bullish indices. We'll see if we're right about that, or if we're going to get beat up today by JP. Again, my stop loss in play, you might say, Nick, why are you trading the news? Well, first of all, I'm a fundamentalist. So in some cases, I do look for, trends within news, right? I think the disinflation trend could be a thing. I just went through that whole rant about my bullish bias on indices. And I'm not afraid to hold a trade throughout a news event. If I do, in this case, I might need to widen my stop and be adaptable to what happens. Let me be very clear. Game plan here, guys, on the S&P 500 for me. I think we've got a nice break starting here to the upside. But if this thing breaks through the lows, I am wrong and I get out of my trade and I take a loss. Okay. I am working on a larger capital basis. So I am not, I'm not risking the farm on this trade. I am risking a reasonable amount of my account on this trade. And I know what my game plan is. So if this market continues to push higher, we'll be in a really good spot to benefit from that. And if the market breaks through the lows, I will be out and reevaluate my game plan. If that makes sense to you in the chat, do me a quick favor and type yes in the chat if this was helpful to you. Just give me a quick yes in the chat if you're watching with me live. If that was helpful to you, if that segment with Kenzo, if you liked anything, one of the best ways you could help us out on the show today, we are going 6 hours straight. I will be taking a break in just a little bit. We'll be having some wonderful guests take over the stream for a little bit. I want to ask a favor from you guys here. Now, if anything we just did was helpful to you, please help us out. Smash that thumbs up button. Support our day-long stream here. If you want more of this type of content from us in the future, please let us know by hitting the thumbs up button. That's the best way to tell us you guys should do more long-term streams like this. If you want all-day commentary where maybe you don't catch the stream live, but if we're here all day, you'll have some window to come in and see what's going on. So let us know. Thumbs up if you're enjoying it. Guys, we've got Ivan joining us in a bit, which I don't know if I'm ready for that. I might need to take a break and take a nap before getting Ivan on here, because he's a heavy hitter. He's got lots of good stuff to say, and we always enjoy Ivan's commentary as well. In terms of something I've got to make apparent, if you guys are just tuning into this stream, let me remind you, we just dropped our Black Friday 45% off sale. If you're somebody who is a regular stream viewer and you do not have access to the EDGEFINDER or to our gold membership or to our new EDGEFINDER Smart Alerts, if you're somebody who's been waiting for this day, today is the day. We've got 45% off available currently in the chat right now. We're going to drop a link. Here's our Black Friday link. Click this link, guys. Store-wide, 45% off our software tools, access to our trade alerts. Again, I caught dollar CAD longs this week, which were great. Made some nice profit on that move. And now we're in S&P longs inside of the VIP groups. So if you'd like access to the VIP, if you'd like access to the EDGEFINDER, anything in our store is currently at the biggest discount you're going to get all year long. Okay, so do not miss it. It is your chance to get yourself a copy of the EDGEFINDER, join the Discord, all that good stuff. Shoot us a DM, and I've got real people on deck. We've got staff. I say real people because sometimes people think we're robots when you message us. When you message us, you're speaking to one of our lovely team members here at A1. We've got Emily, we've got Drew, and we've got Hallie who will answer your questions. So just shoot us a DM. I don't know what's happened with our DM software. Let me make sure that's not dying on us. It might just be that my computer's working hard. Yeah, it's because we're streaming. Click chat now. Black Friday sale. There it is, guys. Take advantage. Anything you want from our store, nearly half off right now. This is our biggest sale of the year. We have just dropped a load of new products. We've got so many amazing things planned for the EDGEFINDER going into the new year. And by getting access to it, you'll unlock that. And by the way, if you're an EDGEFINDER user, if you guys are already EDGEFINDER users, it is now available, EDGEFINDER Smart Alerts. Just tick that check mark and ask for the EDGEFINDER Smart Alerts access. If you're somebody who already has the EDGEFINDER Pro, go ahead and pick up your Smart Alert access. It is now available and it's in our Discord. So let me show you this real quick. If you haven't heard, the top setups indicator, the COT report alerts, the score flip alerts, these powerful indicators will give you direct message notifications in your Discord when the EDGEFINDER finds something interesting. So yesterday we said we saw that it gave us an Aussie yen bullish setup. Let's see how Aussie yen, that bullish trade or that bullish alert from the EDGEFINDER has played out. You can see it's done very, very nice. We also got Euro USD, which got a bearish reading overnight, and you can see Euro USD is just melting here today. Dollar strength still in full swing. Yeah. Again, notifications are now available. Click that link. It's in the chat right now. Shoot us a DM for that Black Friday, nearly half off discount going on right now, and get yourself set up for success there. Money management is the most important. Michael, you are so right, my friend. It is so key. At the end of the day, I've been transparent about this, and it's been for my demise in some ways. I was really early to my bullishness on the S&P and the NASDAQ, and I paid for it, right? I took losses. And not only did I take losses, I took a beating from the comment section. You guys, here's the pros and here's the cons of being a YouTube content creator. There's wonderful things about having a community and meeting so many traders from all over the globe. The downside is when you are wrong, people behead you in the comment section. Actually, I shouldn't say that. YouTube might demonetize our entire stream for that. So please don't do that, YouTube. But hey, you know what? It's part of the territory. You can never change what people are going to say. And at the end of the day, trade your plan, trade your strategy. You should be doing what works for you. You should not be copying other people. You should not be looking for cheat codes in the market. They do not exist. At the end of the day, markets are not emotional. They do not care about your stop loss. They do not care about your strategy. They, at the end of the day, it's all about money management, risk management, and all of that good stuff. So again, we've got Ivan joining us here in just a moment, guys. He's going to be coming in and talking fundamentals for a moment with us, talking about trade ideas, setups as we enter officially into November, today being our first November stream. And just a reminder before we go to Ivan, we are here for 6 hours today. I am probably going to die. I won't be here the whole time. I'm going to have, I might ask Ivan to take over for a little bit, and then Tom's going to take over a little bit, and I'll be back, of course, later on. But I may need to take a break just so I don't explode in my throat and brain. So anyways, Ivan is drinking water. I can see him off camera. That's a smart man right there. Get your water in. I got to do the same thing so I don't die. Anyways, we're going to go to Ivan in just a second, talk fundamentals as we prep for one of the biggest days of the month. Coming at you guys right after this. Check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free EDGEFINDER, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below. Frank! All right, that's the second time we played that ad, and then everybody gets a laugh out of it. So Ivan, hope you liked that. We're space themed this year, and for November, we've got our new theme of the month. And speaking of space, are we going to launch here today, Ivan, with all of the FOMC speech later on, with manufacturer what is it, PMI numbers here in about 30 minutes? Are we going to launch? What do you think? I got to ask you about the dollar, gold, and indices. Take your pick where you want to start. We gotta go through some of this stuff.
Dollar yen.
Okay. Yeah.
Treasury bonds out of Japan. I was very fun yesterday. I asked my wife, "Can I sell 151, 7 or 50 or thereabout?" It's 100 pip loss, but 400 pip downside. But Bank of Japan
Did you say?
actually
Did you
didn't do
say?
anything.
Did you say you asked your wife to do that? What?
I
You've
was
got to
allowed
explain that.
to sell it. I'm like, Bank of Japan's going to send it down. Just wait. But yeah, it has been not the most fruitful sell of the year so far. But yeah, it was very interesting yesterday. And the market has really punished Bank of Japan for their I would call it their unorthodox stance, and they have turned into, with their no longer macro, they are now market intervening central bank. They are now market participants because now they are now going to intervene tomorrow with more buying more bonds to support the 1% level, and then they need to intervene in the forex market because that's going to weaken the yen, and we're already at 151.37, and that would easily make the market go up to 152, which is everyone is looking at. And FOMC on top of that may be strong, make dollar stronger. You have a whole soup of juiciness and risk.
Yeah, Ivan, I'll say this. We talked last month a little bit about seasonality with the yen. You pointed out that yen strength or yen weakness should kind of come in. We both kind of agreed on that. And I think we were a little bit early, but yen weakness seems to be here. So I guess of all the crosses, you've got dollar yen pulled up. Are there any other ones that you're looking for trades or that you currently have trades on as we go into today's big day?
I don't know today per se, but Euro yen is it's a very nice place. I would argue it is one of the ones that's actually falling. And I don't know if you know more than me, but I'm really wondering why Euro is having the worst day of their life. It is just falling of the face of this earth. So that one I'm looking for a small little reversal. And I'm looking for pound yen as well. Those are both what do you call it? Things that has peaked a bit. But my problem with this is Bank of Japan. Dollar yen is not falling in the same fashion as pound and euro yen, so I'm trying to find the bottom somewhere. I don't know if I'm going to get stopped out of 300 pips in loss, but somewhere in that direction at least.
Sure. Yeah. No, I think it will be very interesting to see. And I think maybe one argument you could make with the euro, perhaps just all of the, as we go into today's Fed meeting, maybe investors, traders are looking at what Lagarde had to say about recession fears, slowdowns, poor PMI numbers, just across the board, kind of some poor looking numbers out of Europe compared to that dollar, which continues to be strong, especially today with the yen kind of dropping off like that. I don't know, maybe a little bit of a kind of looking around the room at other currencies, and the euro is like, well, recession fears and dollar so strong, and maybe just a bit of a sell-off ahead of FOMC, as it seems like market sentiment is another hawkish hold, whereas you're getting some divergence from central banks in the UK and Europe, which are now starting to sound a little bit timid.
I just want to add a little sales pitch in here. We had a meeting on Monday and Tuesday with a VIP webinar, mentorship student, and I said 106 or 106.50 is going to be the peak on euro this week. I didn't nail it, but you can go back in the videos and see what I did say. But because I can't tell them to do anything, but I'm like flashing, it's there. It might be there, I can't say it, but so congratulations. Take it.
No, that's awesome. And I do want to say also what Ivan is referencing. If you guys are newer to the show, I know we have a lot of newer viewers today with this big event and this all day stream that we're doing. But Ivan does our coaching webinars within the Discord. He is within the A1 team. He's one of us. He's a friend of the channel. We're teamed up here trying to bring the best value to traders, and notably, if you notice, everybody, of course, Ivan not being the exception, everyone here that we bring on the show, we believe to be genuine, real traders that are not out here just pumping a lifestyle. You never see Lambos on this channel. You never see stacks of cash, none of that nonsense. We are real traders, people who have passion for the markets. And Ivan does coaching webinars for our members within the Discord community. He also does one-on-one coaching. So if you're somebody who is like, I could really use one-on-one coaching. Not only is it incredibly beneficial and useful to improving your trading, but Ivan also has very reasonable pricing for his time. So if you'd like information about that, you can join us inside of our Discord. You can also find Ivan's YouTube channel, which we've linked here in the chat right now. Ivan, if you don't mind, I need a little bit of a break. I need to have some coffee. I've been going since early this morning. So if you could take over the stream for a little bit, be the head guy for a little bit, I'll be back in just a bit to join you, but I'll be listening to what you have to say.
Okay, I won't say anything bad. I promise.
Nothing too bad. You can do this much slander against me, but that's all. Okay, Ivan, I'll be back in a bit. You've got the show for a little bit.
Thank you. See ya. Dexter, can you confirm that what I said on Monday? I think it was Monday. That we were looking at, or you should have been looking at 106 and 106.50. Is that something you confirm? I think I mentioned somebody that sold 161.50 as well. That is one chance, and I'm not saying I'm perfect, but in the end, with a stop loss above previous high, which is where I put my stop loss, it should be a profitable trade overall. And Mr. Who Shuran says, what about selling weekly M3, which is what I would call the sell price of the week? Yeah, it is in line of where I would still consider, the resistance we still haven't broken 2 times already, and 3 times, sorry. If we're going to come up again, that would probably be, I don't like the 3rd attempt. I don't like 3 attempts on something, because that's like, why couldn't you just make it fall in the first place? Now, this is a very messy chart, so let's go from, basics here. What is Australian dollar about? Australian dollar, US dollar. Australian dollar has been pausing interest rates, but now lately they have been pricing in a new rate hike coming in, I think, 7th. So that would be next week's meeting on Tuesday. So this probably not the first one I'm going to sell. And that being said, I would probably look for an Aussie Swissy, an Aussie yen, and an Aussie Canadian. Where is my Aussie Canadian? Aussie Canadian, Aussie New Zealand would be places where I would rather be looking at. Now, I did have a scalp the other day. I hit my take profit on that day. It came back down. That'll probably going to be another entry for me, but I didn't do that. I didn't pay attention to it. So where I would rather, this probably is like swearing in my church at least, but I would rather do any other pair than the Australian at this point. Selling, yeah. Now here's my take. If you're going to do FOMC today, if we're going to think about FOMC today, what has Fed members said so far? Most of the mantra has been no hike, which is the expectation of today. They've also said they are going to be higher for longer. What does that mean? It doesn't mean bullishness. It just means when they say it is bullishness. But overall, we're probably going to range something, okay? And then the question is December, which to me should be another rate hike. They should have another rate hike based upon the data that is still coming through as very strong. Now, if you are thinking about what does this mean, what is fundamentals, and what do I even talking about? Because what my goal is with you is what. So my primary target with trading, what drives prices, and what drives price? Interest rates. And what drives interest rates? Economics, CPI. If it's very, very, the most basic thing you can do is Ask yourself what drives price. The answer is probably interest rates, and what drives interest rates? CPI. If we take that basic model, and then you're like, okay, so where is the current trend in American CPI? It is actually higher. Okay, so what has happened to the dollar as of lately? It has been really rising a lot. And then when did you get the warning sign? You get the warning sign over in July. So we had this uptrend, and now it's all gone and all that, and now it turned into a range and whatever. Because this market here, this is what they've been pricing in to rate hikes more, because what they did was that they were pricing in a cut next year, and now it just got up, and then we're gonna flat out. So when you're thinking about, okay, can I take a trade today? Is dollar bullish? Can I buy gold? Can I buy something? When you're thinking about gold, when you think about the market, what drives price? What drives the S&P 500? What drives it? And once you start getting reasons for it, then there will be risk sentiment, there will be supply and demand, there will be economics, there will be risk sentiment, and where would you get the value for your money? And you're thinking to yourself, okay, so when I'm trading gold, is gold in a favorable position? Right now, it has come down to a bit of a low. And I would argue that's probably a higher low until it is broken. But then, funnily enough, I would argue that this is probably the end of the trend, because where I want you to trade and where I discussed earlier, it was here. And this is not like, oh, we all knew this one before. This is how I want you guys to think. Where is the beginning of the trend? And when we are falling, when gold is falling, when anything is falling, when anything is going against you, that's when you're like, okay, I'm ready to start buying. I'm ready to start buying. I just need my rules. I just need my entry. And when you're sitting here now, you're like wondering, Evan, what am I going to do for November? Okay, I would then argue and tell you that, for November, I'll probably want one of my pairs. I would say New Zealand yen should come down to 86.60 or 86.50. I need a much deeper discount before I'm even going to before I'm even going to consider buying it, because I can see this is the beginning of a trend. Now, if we breach higher high today, that is totally possible if the dollar becomes stronger. Okay, then I have a trend continuation trend. Those are my two rules of engagement. I either need to have a reversal of trend or trend continuation. And then I have my stop loss below here, and I'm content. I'm not looking for anything else. Because people have been asking me this week in chat, like, Ivan, what about trade pairs like pound Aussie? And I've said, I don't know, sir, because it looks messy. What do I mean by messy? If this is reversal of trend, let's say it is, I need it to be, this candle needs to go up from there. And if it doesn't, then that is a very weak bullish trend. And someone would say, but Ivan, this is another place where you can go up from. Yes, it does. But it has to give some reaction. When you poke your brother and you punch him in the face, is he going to be happy and laugh at you? Probably not. It's going to punch you back double as hard. Once you find bottom at a market, at a value that you want to see, then you want to see a certain reaction that this is actually a place where actually buyers actually buy. So you have to be very clever about where you go to find something. And then Shapapa says, I'm short British pound Japanese yen at 82.85. And you know what? I respect that. I can respect that. But why do you have so low entry? Why did you sell yesterday? Why are you selling that, I would argue, is in a very bearish fundamental situation for yen, where yen pairs are yen, where you have QE still, which QE makes something very weak. I question that. But if that is profitable over time, fine. But another thing that I would say, if you were in my mentorship, if we were in a group session, I would be like, okay, sold that. Okay, you sold it here. Why didn't you have your stop loss there? Why you're not out of it already? Because with this added risk that you have added, that you have implied into this one, should actually go much higher, by the way. I don't like you taking that risk. I respectfully say that, okay, that is a trade that you took, but can you not take that in the future? The reason why is I don't like it. You said, oh, yeah, okay, right. Oh, sorry, my bad. Okay, my apologies. I'm the first one to say apologize. I apologize, sir. I apologize. I saw pound yen need to read very quickly, pound Japanese yen, and then 182.82. I apologize. Your entry is 84.29. Okay. Respectful. Respect. Okay. Cool. I hope you have your trade break even, or that you have your risk management in place. But yeah, I found it absolutely 100% risky. I also don't like your selling there. It's the same. It's the same thing. Is I what okay? Let me do what I want to do. Okay, when I sit down with you and I read through all your charts, all your trades, I want to see a common theme. I want to see, okay, so if you sold here, then you should have sold here, then you should have sold here, should probably have sold here, and you probably should have sold here. That should be the common theme. The only problem with that, which I would argue, is it's difficult to know where it peaks every single time, because I just want you to do the same every single time. And if you have a trading style, if I have a trading style, we always sell the peakest peak. Good, great. There's nothing to worry about then. But I find that a bit difficult to replicate. So other than that, respect, bro, for finding the peak at this point at least, and then tell me next time. So I also can brief to Nick that, look at me, I sold it, and I'll give you 10% off my trade. So I mentioned gold, bro, and I said that's a higher low. Who asked for it? Michael. Michael, that's a higher low, okay? And if it's broken, then it's a good thing. I'm not gonna take any credit for it, but one of the members of the mentorship group said he bought market open 43, 41.34. That is risky. Okay, that is risky. That's early. And what is my response to when you do that to me? I say enjoy. That means two things. One, I hope you have a risk. I hope you have done your risk assessment. You have lot size assessment, and enjoy because already is higher. So I don't expect you to come back to me and say, "Hi, Ivan, I'm at a loss on that S&P 500 trade that I told you that I took," because you're basically broken every rule, every bone of my trading strategy into pieces. Because what do I want to see? I want to see situations where you have full reversals, where it's more like this situation. Buying here. I don't know. Can't remember what I bought last time. Can I have? Yeah, I bought somewhere in this situation. That's why I can't remember exactly the price, but for it to come back down again, okay, then we do that again. There is one thing: if Fed keeps what they've been saying so far, which has been hold, wait a minute, we're gonna have the interest rates higher for longer. If that's still the mantra, which they have been talking about for a very long time, S&P 500 is gonna go higher. Because then we need to eliminate the pricing in of one more rate hike in December that we have already priced in. that one is going to make the stock market very happy. Okay? That is that. What do you think about your dollar? What do you think about your silver? What do you think about... Okay, so you sold 160.50. Ball out. Okay, cool. I agree with you. I just didn't take it myself. Why? Dad brain. I don't know why I didn't take it. I don't know. Maybe I was too interested in yen pairs. Yeah, that's probably it. But yeah, okay, cool. That being said, in your approach to trading, right now, here and now, I want you to be content. I want you to be happy. I want you not to be stressed about what you're doing. I want you to sit down, take a break, take a bottle of water, and what am I going to do today? Okay. Fundamentally, we have certain things happening that is changing a bit every day. Bank of Japan has scared a lot of you, but there's still money to be made. And what happened this morning on the Australian dollar, Japanese yen, was a bit of a pullback. The question to yourself that you have to, ask is this one of my trades that I normally take? And my answer to that is actually no. I don't do breakouts of range. I also don't do when USD is 150, 170. That's not a go, not a go zone for me. And then I'm going to present a new idea to you tonight. I'm not going to say it's going to happen. I'm just saying it's one of my possibilities. That if dollar strengthens, for whatever the reason might be, if USD hit 152 or slightly above, you might see added liquidity, volatility on yen pairs across the board. So once you have that kind of laid out already, and you go over to, let's say, something not dollar-wise, what about USD CAD? I saw the Nick had a beautiful trade on it, and it's been rising ever since July. And you're thinking to yourself, well, Ivan, this should be a very good price, shouldn't it? I advocate for many times, sorry, that was wrong. I advocate many times for you should be trading Mondays. Prepare on Thursday and Friday. And execute on Mondays. But this week, Monday. Yeah, there is a whole. Okay, it's monthly. Okay, that's why I'm like, what happened here, bro? I was looking at the wrong pivots. I was like, that doesn't sound like it, does it? Okay, here we are. Finally, once you are starting a new week, I would say, okay, are we at support? New week, are we at support? New week, are we at support? New week, are we at support? And what you've had on USD CAD lately is a stepping stool. We haven't really hit central pivot this week yet. But with added liquidity, also added volatility going forward, you might be wondering, can you get it a bit lower today? Overall, either that low, actually that low there might actually be a great low, 137.80. And it becomes a stepping stool. And if it rises away from you, you leave it alone, right? It isn't a very difficult thing. But what I have been seeing lately, when I go through trading histories, is that I can see 9 trades taken in one day. I see 4 or 5 pairs. And over a week, it might be 15 different pairs. And you're wondering to yourself, how can you keep track of all those pairs? And I haven't taken the USD CAD one because I have more than enough with my 5 pairs that I'm currently looking at. I'm struggling with those even. So when you're looking at everything that you do, I hope that you don't look at 15 pairs a week. And the justification is I'm looking for technical setups. I'm looking for technical setups. I'm looking for to have a trade on because the market is moving. You know what that is called? That is called the fastest way to blowing your account. No risk to reward is going to help you if you don't have a profitable trading. And if you don't have a profitable trading strategy, are you able to adapt in time and stop in time? Because what I've been seeing lately, multiple people, that there is something called selling. Sorry. Oh, hi, Nick.
Hello, Ivan. Keep going. Sorry.
I lost my track. Okay. There, like, what generally tends to happen is that when something rises, you keep selling, and it just goes faster and faster and faster and faster and faster, more and more lot size on until the account is gone, because you can't see that what you're doing is actually wrong, and it's not going to lead to any different result when you have the same actions.
Ivan, thanks for taking over the stream for a little bit. And as always, for those of you guys who are in the audience, probably just saw, Ivan always comes with the education as well as the ideas. So thanks for taking over there for a little bit, Ivan. And if you want to stick around for just a few minutes here, we do have our JOLTS job openings and manufacturing PMI coming out in about a minute to go here. So Ivan, is this going to be market moving? Is this going to cause stirs in the market piece?
Only if it surprises a bit, more than a bit. Yeah. You saw ADP didn't change much, did it? So I'm not really. I'm actually more interested in the PMIs. Actually, that one is going to be fun. That
PMIs
one needs to be above 50.
We've got. I guess JOLTS could be interesting, although it's not nearly as impactful as usually the NFP number, of course. We've got about 30 seconds to go here, guys. I'm just going to switch gears so we can watch some of the charts and react with Ivan here while we are live. We've got the dollar index in the bottom right. We'll keep the euro. Hold on. Let me fix my charts here. We got breaking news here coming in. So we'll do our quick cut to breaking news coming in now. All right, guys, PMI numbers and JOLTS coming out. Let's see what the market does with it, if anything. Dollar index dropping here as we go. And look at that. More of a reaction than I expected, to be completely honest. Dollar dropping initially. A bit of a wiki start here. And let's see if we can find the numbers. Pending, there it is. Slightly more than expected in terms of JOLTS job openings. You had, as you mentioned, Ivan, the more potentially interesting thing here being the PMI numbers. Wow, 46.7 compared to 49, showing perhaps some significant slowdown in manufacturing.
Ouch, 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 ouch. That hurts. Okay. That is definitely, well, this is kind of what you want to see after increasing interest rates forever. But yeah, the PMI, the ISM PMI is 46.7. Yeah, that is definitely not going to lead to any more interest rates. So that should definitely send dollar down. Maybe gold up as well.
Yeah, and I think just to add to that, Ivan, PMI is coming out cooler than expected, especially ahead of such a big day. PMIs on any given day, yeah, it's going to move the markets. But on a day where the Fed is set to speak about what their upcoming game plan is and where they're at, that's especially market meaningful. And I think, also this is showing that perhaps the economic data out of the U.S. is not indestructible. We've had really overall strong numbers the past, few weeks. But this is an eyesore, as you alluded to with your comment of, and I quote, ouch, right? So PMI numbers came out a little cooler than expected here today, guys. And if you don't know, remember that 50 on the PMI shows 50 or greater shows expansion in the manufacturing sector. And under 50 shows contraction in the manufacturing. So we did get some contraction here. Now, again, as I mentioned, JOLTS, 9.55 million, more job openings than what were forecasted at 9.34. But again, as Ivan pointed out, rightfully so, market seems to be probably paying more attention to that PMI number, giving us some readings on the economy here as we kick it off. So gold shot up to the upside initially. Stock market actually liking this. S&P up pretty big on that. Euro dollar popped and giving back some of those gains. Dollar dropped and gaining back some of it now. So again, probably a healthy reaction in terms of, you still have Fed speak coming later, and the market's wicking around here ahead of time makes some sense in terms of just prep for that. Ivan, yeah, do you have any thoughts on that before we move on with the show? I know. Thank you again for taking over for a little bit. What any final thoughts on PMI, JOLTS jobs, anything else?
Nah, at least ask the right questions. What is my thoughts on the comment section? That's why I'm laughing because somebody says I'm on coke. But nah,
oh, look at Joel J says Nick just drank a full liter of coffee. Just came back as Superman. I had a Coke Zero. So I had coffee this morning. Now I'm on Coke Zero. I think I'll probably alternate between those two things for this entire 6-hour period. So as I mentioned earlier, guys, let me reiterate. Ivan is a coach within the A1 Trading Discord community. We've asked him to do that quite some time, and people absolutely love his commentary and his help. If you're somebody who's looking for coaching, he is too modest to say so, but his prices are very worth it. He does coaching one-on-one, and of course we have our group seminars, which are free to VIP members to attend throughout the week. So if you're a member with us, tune into Ivan's for more regular commentary there. Ivan, thank you for coming on the show. We've got a busy day today, so we'll have to maybe catch you up with you later. I don't know if there's any gaps in the stream. Maybe we'll call you back. But I think it's probably getting late for you, so we won't keep you. But Ivan, thank you very much for coming on the show.
Thank you very much for having me. It's just 5 p.m. yet.
Yeah. See you, Ivan. We'll get out of here. All right. We got to kick Ivan out. Anyways, Ivan, like I said, great guy to have on the stream. That's why we asked him quite some time ago to join us inside of the Discord. He brings a tremendous amount of value to the table. And again, like I said, he does coaching both one-on-one and group. If you're somebody who is very serious about trading, you need some help, Ivan is the guy. His YouTube channel is linked in the channel. So please feel free to do that. Nick's coffee is 90% creamer, so coffee wouldn't be too helpful for caffeine intake. That's true. That's just true. I mean, sometimes when I'm pouring coffee, so this is a fun fact about me, guys. Sometimes when I'm pouring my coffee, I just skip the coffee part entirely. Like I don't put any I just pour creamer, head back to my desk, and I just rely on the sugar content. So that is a life hack, and give it a shot. And if you think I'm kidding, no, I'm just kidding. I am kidding. That would be disgusting. That would be cold creamer. Couldn't be me. Anyways, guys, we got a 6-hour stream today. I got to find some way to keep caffeinated. No need to out our boy. Thank you, Jamie, for that. I appreciate you on that one. S&P still in it. Again, I am holding on loosely with this S&P trade. I would like to stay in it if I can for the month, if I could, if the market continues to push higher. So I'm holding S&P 500 buys as well, thanks to your EDGEFINDER software. Hey, that's awesome. Congrats on your trade. I am liking it so far too. I do like the seasonal trends there, and should be pretty impactful. Guys, we just had some market data come out. If you're just joining the stream now, there's 400 of you guys here. Do me a quick favor, hit that thumbs up button. And in just a second, we're going to get to James on the reporting side to give us a little bit of a rundown. James, whenever you're ready, are you good? Give me a thumbs up if you're good. Okay, he needs 1 second. We'll come to James in just a second with the news, guys. Of course, everything going on in the world. There's so much going on that James is going to help us to sort out the we need James to help us all get our lives in order. So he's going to do that in just a second. Some therapy with James, and let's talk euro. Euro selling off, and despite that weakness that just came into the dollar, the euro cannot catch a buy. I mean, look at this. That has got to be frustrating. If you're a euro bull, I mean, there it goes, pops higher on what is to be called a a fair miss for the dollar, right? PMI weak coming out. And again, we'll get those numbers reiterated to us in just a moment from James. Okay, James is good to go. So guys, speaking of PMI numbers, I'm going to come right back to the euro. We're here with James. We'll bring him in to do our news of the day. We got James, Therapy with James. Hey, James, what's going on? What's the news?
I don't know about therapy, but I do have some news for you.
Okay.
Sorry, I was giving lots of thumbs up because maybe I'm crazy, but I saw like a little thumbs up bubble thing pop up in my webcam. I don't know if it was a Discord thing or not Discord, OBS thing or what, but that was weird. Anyway, let's see. So I've got the news here for us. I have something that I'm calling News Now.
All right. And what is that? What am I doing on the news? James, what is this? Why am I sitting sad boy style on the word
sad
news?
Astronaut Nick sitting on top of the news because truthfully it's just too good of a photo not to use. You can put him anywhere. You can put Nick on top of anything with this photo. So it was too good not to use.
You got JP in the middle there, so that
we got JP in the middle. He's one of the boys. He's coming in hot later today. We're all interested in what he has to say, and of course later on we're also going to have Frank join the show. But this is News Now for November 1st. So let's go ahead and start with what's ahead. Now, of course, the biggest news ahead for today is the FOMC happening at 2 p.m. today, with current interest rate forecasted to come out unchanged at 5.5%. So the current U.S. interest rate is already 5.5%. The forecast is for it to remain unchanged at 5.5%. What effect will this have on the market? Well, I think that the bigger impact to the market is actually what is coming at 2:30 p.m. with the FOMC press conference. Jerome Powell is going to get up on stage and he is going to talk to the U.S., not only the U.S., but really the entire world about his and the Fed's monetary policy statement and their monetary policy plan moving forward. And depending on what he has to say there, I believe that we're going to see a bigger jump in the market. And that could be in the bullish or bearish direction. The thing with FOMC is it's usually a pretty big market moving day. And we've already had a lot of market moving news happen, not just today, but yesterday as well. And we'll have even more throughout the week. This is a crazy busy week in terms of news. So, you should stay up to date with the live streams because we really do have a lot of news to be covering. But yes, FOMC press conference happening about 30 minutes after the initial FOMC release. That, I believe, is going to be the biggest market mover of the day. So what's still ahead? Like I mentioned, we do still have a lot of news ahead of us, and these are some of the biggest of the bigger news events. This is not everything that's happening. There's a lot of stuff happening this week, but this is some of the bigger ones. So tomorrow, Thursday, November 2nd, we're going to have the UK interest rate decision. Their bank rate is also currently at 5.25%, forecasted to remain unchanged at 5.25%. We'll also get the U.S. unemployment claims coming, are forecasted to come out at 210,000. So not only is this a huge week for U.S. interest rates, it's also a huge week for U.S. jobs numbers. As you know, we had our ADP non-farm employment rate numbers come out this morning, or the JOLTS jobs numbers come out this morning. And we still have the actual unemployment rate, the NFP event, ahead on Friday. So we're getting two of our three major U.S. news events happening within 2 days of each other. So the dollar market is going to go crazy towards the end of this week, happening later on today and then again on Friday with NFP. Friday, November 3rd, we have, again, CAD unemployment rate projected to come out at 5.6%. The U.S. unemployment rate, NFP, like I just mentioned, projected to come out at 3.8%, as well as USD ISM services PMI projected to come out at 53. So better. That's as Nick was kind of just mentioning earlier, with those other numbers that just came out. Above a 50 is usually good for the dollar, and below 50 means that there was a contraction above 50 is expansion and below 50 is contraction with those numbers there. So what has already happened? We had ADP non-farm employment change come out at 113,000. NZD unemployment rate came out at 3.9%. USD CB consumer confidence 102.6. USD employment cost index 1.1%. These were both good numbers for the US dollar. We saw positive movement on the dollar when these numbers came out. CAD GDP 0%. And the yen monetary policy statement, their interest rate decision, negative 0.1% there. We're going to come back to these numbers in just a second, but we have what's happening. I don't know if you noticed. I should have pointed this out. So we have news now. We have what's ahead, what's still ahead, what's happened, and now we're going into what's happening. So I have a few different things here. I have 3 different things that I want to talk about really quickly with what's happening, not just in the US, but around the world. So it is no surprise or no news to anybody that there is a conflict happening between Israel and Palestine over in the Middle East right now, but that has a direct impact on markets. So most recently, Yemen has joined the conflict, and Palestinian refugees are crossing the border into Egypt right now. Out of Gaza. So the conflict in the Middle East does not seem to be slowing down. In fact, it seems to be ramping up a little bit. And this has a direct impact on gold. And so right here, you can see, I guess you can't see my mouse, can you? You can't see my mouse, but the gold chart is here on the left, and you can see that we've had a huge rise recently. This is the 1-day chart. So if you go back to kind of that first big green candle right there, I believe that is the October 7th candle when this conflict first started. So ever since the conflict in between Israel and Palestine started, gold has been on the rise. It's come back down a little bit over the last 3 days. It is trending a little bit lower today. Again, this is the daily chart. But between Yemen joining the conflict, there's no slowing down with what's happening in Israel and Palestine, and it's a tragic situation overall. But it does have impacts on the markets that we can talk about. We can see the impact on oil as well. You can see there's that split right there where there was the green candle that's a little bit lower, and then a green candle that came in on the next market day much higher. I believe that was October 10th, if I remember correctly. So a few days after the conflict started, we saw the price of oil jump high and then move even higher. And since then, it has come back down a little bit. But you can see how volatile it's been moving up and down with what's been going on over in the Middle East. So yeah, no signs of slowing down there, and certainly has big impacts on both gold and oil. Next, we were talking about Mr. Musk yesterday with his Cybertruck, but right now there is a 2-day summit going on the future of AI. So Elon Musk is in attendance along with people like Vice President Kamala Harris, the European Commissioner President Ursula von der Leyen, and many CEOs of the top AI firms across the world, like the OpenAI CEO is there, as well as the president of Microsoft. There are many big tech heads in the UK right now meeting on this AI press conference. And I think that there's so much potential with AI and how it could affect the markets. I mean, not only with new companies coming into the fold and like big tech stocks like the NASDAQ, but also just the future of AI in terms of trading. How is AI going to affect traders? Will you even need to be a trader 10 years in the future, or will AI just do everything for you? I think that there's a lot of cool potential with AI. I think there's also a lot of scary potential with AI, but I think it's going to be interesting to see some of the news and some of the new tech and developments and things that come out of this summit happening in the UK right now. Elon, as we know, also has made a new AI company himself called XAI. So maybe we'll get a little bit more information about what he plans to do with that. Because as far as I know, I don't think he said too much about XAI other than that it is a thing. But AI in the future of the markets is definitely something that is going to be really, really interesting. And I also saw this headline. I saw this yesterday. I thought this was a little goofy. Joe Biden's concerns about AI grew after watching Mission Impossible: Dead Reckoning. That is the most recent Mission Impossible movie with the bad guy in the movie is technically AI. Good movie. And apparently it took a trip to the movie theater for Joe Biden to
change his mind a little bit.
AI.
So James, I have a question to put you on the spot too about
Sure.
about all that commentary with AI and Cybertruck and stuff like that. So we talked about this at length in the office yesterday, the new Cybertruck. Can we do a poll, Chandler? Chandler, this would be huge if you could do this for us. Cybertruck, cool or not cool? In the comments section, we'll see if we can put together a poll on YouTube here. We had this conversation in the office about the new Cybertruck that's coming out for Tesla. I believe it's on November 30th. We were talking specifically about, of course, my market obsessed self. I'm curious to see how it sells for the Tesla stock, right? Is Tesla stock going to benefit from this, or is it going to hurt? James got a beautiful picture of Cybertruck. I personally think it looks pretty goofy, but you know, at the end of the day, I think it might be, I pointed out, this is my take, goofy looking, but will it sell? Yes, because people know it's a head turner. So people are going to buy it because they think it's going to make them look, you know, they're going to be the talk of the table. So that's my opinion. But
I agree that it is incredibly goofy looking, but at the same time, there's nothing else that even comes close to looking like this.
Yeah.
So I think it's really going to be, you know, for the people that can, you know, afford to get a Cybertruck and want to have a Cybertruck, I think that it's going to be like a statement, you know, piece, if you will. So
last thing, James, that I want to, because I know Tom's waiting on us. I will get him in here to take over the show. Last thing I got to tell everybody, including yourself, about last night, I pranked my wife by telling her she hates it. She thinks it looks so silly. And I pranked her by telling her that I had pre-ordered the Tesla Cybertruck and that she was, I was like, I'm really offended that you don't love the car. Like, I'm so excited to get it. She didn't believe it at all. I tried to prank her, but I try and prank my wife too often. It's kind of one of those things. If you keep ripping a Band-Aid off, it doesn't stick anymore. That's me trying to mess with my wife. It doesn't work anymore. Anyways, yeah, go ahead, James.
I saw that you can secure your spot for like $100. That was all it costs to secure your spot for a Cybertruck. That's really quickly. I do have one last slide, and it's about FOMC. Okay. So our very last slide, and I'll run through this super quickly. This is actually, I had an earlier screenshot of the dollar. This is the dollar chart immediately after the ISM news that just came, or the PMI news that just came out. So that red candle there was the effect on the dollar. It came down off of that most recent news event that just happened about 20 minutes ago. But dollar news was positive yesterday, leading to strong moves towards the upside. That was this right here that I was talking about earlier. Oops, this one right here, the CB Consumer Confidence and Employment Index. These two reports right here were positive for the dollar yesterday, leading to that big move to the upside that you can see kind of in the middle of the chart there. And then today, it's remained pretty stagnant, pretty consolidated, hasn't had too much of an impact on the news that's already come out today. I mean, you can see that our two most recent candles, we did have a kind of a nice move to the upside, but then immediately gave all of that back off of the most recent news that came out at 10. So let's see, trading higher on the most recent 1 hour candle. That is not correct anymore because that most recent news erased that. The Fed forecast is projected to remain unchanged. We talk about that at 5.5%. The interest rate could be misleading, however, if it does remain unchanged and it doesn't have a huge impact on the market. Again, I kind of talked about this earlier, but I believe that Fed Chair Powell's press conference after the actual initial news is going to cause a larger move on the dollar, depending on what he says. And I really do think that it could be in a bearish or bullish direction. We're just going to have to wait and see, and it'll be exciting when 2 and 230 comes around at the end of the day. And we're going to be live for all of it. We're going to be live all the way up until FOMC. So if you're just now tuning in, we have well over 300 of you watching us live right now. We are going to be live all day today, so you can watch us all the way up to FOMC. But with that, that was news happening today, and we have Tom waiting, so I don't want to take up any more of his time. So
sounds good, James. Thank you again very much for putting that together, guys. Can we get some thanks, James, in the comments section here? He put together that for us to help us stay up on top of everything that's going on. So, James, big shout out to yourself, for you and Chandler for putting together today's show, making it possible. So, thank you, James, and we'll see you. We'll see you later on.
Yep. See ya.
All right, and now we'll say hello to Tom. We'll bring him right in. We won't make him wait anymore. We'll say hey to Tom. Hey, Tom from Simply Forex. What's going on?
Hi, Nick. How are you, mate? Enjoying the show? Enjoyed James' cybercar. I've put my $100 down. I'm going to get one, I think.
Are you? That's awesome. Well, thank you for being back. I know you were with us yesterday. For those of you guys who do not know Tom or you haven't seen him before, Tom comes on once a week to the show, helps to put together what is the A1 Trading Show. It is really a community-built thing from several traders. Tom, a technical trader, goes through lots of different currency pairs heavily. So if you're somebody who's a Forex trader, stick around. I'm sure Tom will have some good stuff for us today. Tom, we spoke about the game plan for the dollar indices yesterday, or index yesterday. And as we go into today's big numbers, well, today's decisions, as well as commentary from JP later on, I'd love to give you the floor for a little bit. I'm going to step out, take a little bit of a break, give you the chance to go through some charts with the audience. And let me just say, as we kick off with Tom, if you guys enjoy what you see with Tom, please make sure to go support him by following his YouTube channel. Go subscribe to Simply Forex on YouTube. And Tom, I'll leave you to take over the show for a little bit. Guys, stick around with Tom and get some technical setups going into today's event.
Cool. Hi guys, how are you? Yeah, so you might have seen me on the show before. Name's Tom from Simply Forex. Been trading for about 15 years now, so plenty of experience. As Nick said, I'm a technical analyst, so if you want me to look at any pairs, guys, then I've got the live chat open, so I can take a look, no problem. Yeah, and what I'm looking at straight away, guys, is the dollar index. Okay, so I know I spoke about this yesterday, but all this, news from the Fed today, all the data coming out, I want to see the US dollar create a clear direction, guys. All right, because let's be honest. The US dollar is, is it strong? Is it weak? We really haven't had a direction. So on the back of the Fed news this evening, I want to see a break, kind of one way or another. Yeah, I want to see dollar strength or I want to see dollar weakness. Yeah, I hate being in limbo. Yeah, when it comes to trading. Yeah, that's the worst place to be. I don't want buyers and sellers fighting it out, which is what we find ourselves with the dollar index, guys. All right. I want to see a clear direction and then I can just jump in on that trend. It's not rocket science what I'm going to show you guys. Yeah. So let's jump straight in, guys. Let's take a few of your questions and I will show you how I look at the charts and how I analyze them. So lots of people want to see Aussie dollar, US dollar. Okay, so let's start there. Let's do it. I believe I'm with you for the next 40 minutes, guys. So I'll try and get through as many questions as I can, and yeah, technically analyze these pairs. So let's start with Aussie dollar, US dollar. Okay, guys, and I do a top-down approach. Yeah, so I look at the weekly, the daily, the H4, and the H1. Mainly H4, H1 is to find entries, okay? But weekly and daily give me my direction, yeah? So I do a top-down approach. Start with the weekly, work my way down to the H1, even the M15 sometimes when we get a structure break. And I suggest you do the same, guys, yeah? Each time frame is going to give you a bit more piece of information, a bit more data to make an informed decision. Yeah, I treat my trading as a business, guys, and any business decision that I make, you know, I'm going to get all the data I can in order to make the best decision I can. You know, if you're gonna buy a house, you're not going to just check out the first house you see and buy it. You know, you're going to check other houses, you're going to check the area, you're going to check the neighbors, you know, you're going to check local amenities. And it's the same with trading, guys. Each trade is a business decision. Think of it like that, guys. All right. So with that in mind, let's do exactly that. Let's gather data on each time frame to make the best decision we can. So Aussie dollar, US dollar, guys. Yeah, let's start with the weekly chart. Okay, and the first thing I look at is structure. Again, what I'm about to show you guys is not rocket science, and just keep it simple. But currently, we are in a downtrend. Okay, so weekly structure is in a downtrend, and we also have, you know, potentially a bit of room to move into before we hit this last low. Okay, this is actually a target for Aussie dollar, US dollar. And then, you know, we're going to look at candlesticks and support and resistance. So candlesticks, you know, if you look at the last 3 weeks of candlesticks, everyone is telling me to sell it. Yeah, this is a very bearish candle. These two candles have huge rejection wicks. Yeah, so those are also selling candles. All right, so everything is telling me to sell this market on the weekly chart. Okay. If we drop down to the daily now, let's just try and get more information. And on the daily, again, we're going to start with structure. Okay. And as you can see, yeah, we are in a downtrend stroke range. Yeah, we're seeing higher lows, lower highs. Yeah, but we're not making lower lows. Yeah, this level is holding. Yeah, this has been a good level of support, but it keeps getting tested. All right. But if you consider the fact that we're in a downtrend, yeah, stroke range, then it makes sense. Like I said, just very logical, common sense, simple way to look at the charts. It makes sense to start selling from the top of the range, yeah, back down to these lows. Yeah, that makes sense. So first and foremost, guys, the weekly has told me we could look for sells. And now where the daily is currently, we can also look for sells. All right. So, you know, everything is pointing towards a sell. So on my little, you know, notebook that I'll do for the day, and also on my channel, I will say Aussie dollar, US dollar is a short for today, and I'll share my analysis. Okay. I do that every day. Now, what do I want to see once we're at this level? Okay, what do I want to see? So this is where I drop down to the lower time frames, guys. All right, and we're just going to keep piecing this trade together. All right, simple as that. So H4, yeah, what am I seeing? So really, yeah, we were in an uptrend, and now we're in a downtrend. However, you know, prices shot back up, and we're back at this area here, which we know is an interesting area. Okay, so just the fact that we are in a H4 downtrend, you know, if we get a very bearish reaction here, yeah, we've still got another 2.5 hours before this candle finishes. But if we get let's say we get a candle that looks something like this, a very bearish H4 candle, I would be interested in selling this pair. Okay, potentially back down to these lows, if not down to the bottom of the range. Okay, so that's what I would be looking for on Aussie dollar, US dollar. Okay, but again, let's get more information. What are we seeing on the H1 now? So the H1, yeah, we had this level through here. Yeah, there was this level through here that was interesting, but you know, guys, today it's just been a case of waiting for the news to come out. So again, on the lower time frames, I'm just looking at places where I can enter, and potentially this would have been an entry point if we didn't have big news today. All right, but as you can see, this area didn't hold. Now it's all about, you know, these last highs up here. Okay, so for me, if we go back to the H4 chart now, if we get a bearish reaction here, yeah, it may take some news for us to get this bearish reaction. And remember, we've got news coming out, throughout the evening. But I would consider shorts here, yeah, if we get a bearish reaction. All right, so yeah, let's keep an eye on this level. It'll be interesting. If price obviously breaks this level, then I'm not interested. Yeah, there is no trade. Okay, if anything, I'd be looking for longs. Yeah, if we get a push through here on the back of the news, then yeah, I'm not interested in shorts anymore. But if this level holds, yeah, and we get a bearish reaction, it could potentially be a great trade. All right, guys. So that is Aussie dollar, US dollar. I know a few of you wanted to look at that. Right, what else are we looking at? We've done Aussie dollar. A few people want to look at gold. Okay, so let's take a look at gold, guys. So, before we even look at the chart, we know gold has been shooting off like an Elon Musk rocket, yeah? So gold, let's take a look at gold. I normally sing when I look at gold. Anyway, something quite different. Don't want to go off at a tangent. Anyway, back to trading. Again, let's do the same approach, guys. Let's do a top-down approach, all right? So let's start with the weekly chart, all right? And even if I drew this weekly level across, okay? So, yeah, this is a potential target for gold. Yeah, that's why that level is important. And as you can see, gold has just been rocketing. Yeah, it was in this nice weekly downtrend. And in the space of, literally 2 weeks, we've totally changed trend. And we are all looking for buys on gold. The problem is with gold is when you have a trend. So like this guy, if you have a trend like this, it's easy to trade. Yeah, you want to get in, on the retrace somewhere. Yeah, it gives you a nice value play. Okay, and we can get in. But gold has been like that. And that makes it difficult to trade, guys. Yeah, because we haven't had the retrace. And when I trade, guys, I look for value. And all of these areas here that I circled represent value. Okay, so this is what's happening with gold. Having said that, it's clearly still a buy. Yeah, we're in an uptrend, structurally in an uptrend. We've got bullish candles. Everything is telling us to buy this back up to here. All right. If we drop down to the day chart now, as I've expressed, I need value. Okay. So what do I want to see? So if I start entering here, up here, there's just no value. I want to see a retrace. Okay. And again, obviously, we're in an uptrend. Yeah, you don't need to be Warren Buffett to see that. Yeah, we're clearly in an uptrend. But what I'd like to see is a retrace. And what I am seeing is sellers coming into this market, all right, which is what I want to see. Ironically, I want to buy it, but I want to see sellers because sellers are going to push it down. Yeah. So this candle here, yesterday's candle, would suggest that we could potentially push this. We could push gold lower. Okay. And if we push gold into this level here, I am all over gold. Because what you'll also find, probably the moving average 20 will catch up. Yeah. And this will be like a double whammy support. You'll have the moving average 20 as dynamic support. And you'll also have this gray zone, which if I scroll along, you can see has been, a very nice area where price reacted previously. So I want to buy gold, yeah, but I'm really only interested if we get a nice enough retrace. And this zone here is a nice level. If we don't get the retrace and it just shoots off, fine. Yeah, I don't suffer with FOMO. There's always an opportunity around the corner. I missed the trade. That's fine with me. I only want to trade from areas of value. Now, this candle would suggest potentially we could come down to this level. Nobody knows, all right? But looking at the candlesticks, sellers are in the market. And now if we look at the H4 to back up this theory, yeah, you can see H4 structure breaking down. Yeah. So all I'm looking at, guys, on every time frame is market trend and structure. I'm looking at support and resistance, and I'm looking at candlesticks and this concept of value and this top-down approach. Yeah? If you combine all of those things across several time frames, you are going to make well-informed, high-probability trades. Okay? Now, if we look at the H4, yeah, we were clearly in a H4 uptrend. And what is always a big red flag for me is when we're in an uptrend and we don't make higher highs. And at these highs, we get a very bearish reaction. Okay? So we didn't make higher highs. And in fact, we are now in a downtrend. As soon as we break these H4 lows, we didn't make higher highs. That's a red flag. And then we broke these lows. We are in a H4 downtrend. And you have to bear in mind, guys, there are millions upon millions of traders trading the H4. Okay? Therefore, potentially, what was once support is now resistance. Yeah? This could potentially be a nice area for selling gold. Okay? But because of the daily and the weekly, I am not interested in selling gold. I only want to buy it. But what this is telling us is that price is breaking down. Yeah, if it breaks down and, you know, makes this way back down to here, then I'm interested in gold. Okay, so today, guys, a real level to look at on gold is this level here. And not only that, look, it's touching off the moving average 20, yeah, which is dynamic support and resistance. So a real interesting level with gold. Yeah, so let's see what happens here. We can even potentially come back to it. Well, what's going to happen is news. Yeah, don't know if you've heard about it, but the Fed is, giving us the interest rates later. So this is going to have a big impact. But, you know, this is an interesting level. It'll be interesting to see if news follows technicals. Yeah. So yeah, that's what I'm seeing with gold. But if we just go back to the day chart, guys, I really like this level for buying. Yeah, really like this level for buys. Right, what else are we looking at? Okay. What else questions have we got? Okay, so let's take a look at some of the indices. All right, we've taken a look at commodity. We've taken a look at one of the forex pairs. Let's take a look at the Dow Jones. Lee James, this one is for you. So guys, and also guys, yeah, if you enjoy my analysis, I do have my own YouTube channel. Yeah, I would, always enjoy being on Nick's show, and it's a great show. But I also have my own channel, guys, Simply Forex. So if you enjoy my analysis, come check it out. Yeah, I'm sure they'll leave a link, guys, for you to follow. Right, Dow Jones, where are ye? All right, so Dow Jones. Okay, out of all the indices, I would be interested in selling the NASDAQ, whereas the Dow Jones, and also the Dow Jones. Let's just do the analysis, yeah, and you'll see what I'm saying. So, again, guys, yeah, I need to put this area in here because, again, this is a potential target. So, all these grey zones are, guys, as my support and resistance levels for the Dow Jones. But again, what I'm about to show you is not rocket science, guys. Very simple, very common sense, yeah, very methodical, very simple. And I suggest you keep your trading the same. Yeah. So as you can see, weekly chart, we were in an uptrend, yeah, and then bang, yeah, we've been in a downtrend ever since. Okay. So we are currently in a downtrend on the weekly chart. And we had last week, we had this candle that broke this area of support. Okay, so that to me is a continuation of trend. All right, so potentially we could come back down to this level. All right, if we now look at the day chart, again, just to get more information, right? And currently on the day chart, we are also in a downtrend. Yeah, price was coming up, and then we find ourselves here. So rather interestingly, we are at the last daily high here. Okay, so again, this is going to be a pivotal level for the Dow Jones. All right, and it's not coincidence that that coincides with the Fed interest rate decision and all the big news coming out today, right? So what do we want to see? Okay, so if this level holds, yeah, and we get a bearish reaction, I think we can still take price lower, potentially down to here, potentially down to that weekly level. Okay, but it's a big if. Yeah, if it breaks this last high, yeah, then for me, we've had a bit of a structure change, and then I wouldn't be interested in selling this anymore. Okay, so let's drop down to the H4 now, and you'll clearly see this level through here. All right, so we can even put a support resistance zone through here. We know this is going to be important. Okay, so for me, it's about this level. Yeah, it's all boiled down to this level. If on the back of news we get a bearish reaction at this level, I think we can start selling it. If buyers take control and we push through this level, we could then start looking for this grey zone or this grey zone for potential buys. Okay, but yeah, really depends what happens at this last daily high, because bear in mind this is the last daily high. While we're on indices, the NASDAQ is at a beautiful selling level, like this potentially is. But again, it boils down to what is going to happen to the news. So just quickly, guys, even if we just look, well, let's look at the weekly chart. Again, the weekly chart has broken this key level, and it is a key level. Yeah. All right, and you can clearly see we are in a downtrend. Okay, again, you don't need to be Warren Buffett to see that as in a downtrend. And we're getting very bearish candles. Okay, and we've got room to move into. Yeah, you can see there's nothing really standing in our way until this level here. So these blue lines are my targets. The first target is just simply back down to the daily lows. So weekly, everything is telling us to sell this pair. I don't know why I drew that random line. I've been drinking. So yeah, everything's telling us to sell this. The thing with the weekly chart is, guys, and this is the $1 million question, will price want to react here and come down? Will price want to use the moving average 20 and come down? Or will price want to use this trend line? Yeah, this trend line here and come down. Okay, and the truth of the answer is no one knows. Yeah, welcome to trading. Yeah, no one knows, guys, but I'm going to show you what I look for. Okay. So now let's slowly drop down, bearing in mind what we know on the weekly. Let's go down to the day chart. Now, we know this is a nice daily level. Yeah. So if price reacts in here, yeah, and we get a nice bearish reaction, yeah, I will be looking for sells. Okay. The only time I stop looking for sells is when we have a daily trend change. Okay, so if we get a scenario where price shoots off on the back of this interest rate and we break this last high, I am no longer interested in sells anyway. All right, so I need to be with day trend. And then what you want to do, guys, whether it's this level or this level or this level, you need to wait for something that tells you sellers are in control. Okay, so let's bear in mind, guys, up to this level here, I'm willing to sell in here and I'm willing to sell in here. If it breaks this, I'm not, although I will be interested up here. Okay. Now, what do I look for when price gets to these gray zones? Yeah. And it's simple, common sense stuff. All right. So generally speaking, guys, we could wait for a H4 structure breakdown. Okay. But we could be waiting some time for this because the NASDAQ is in an uptrend. Okay. Or we could wait for a H1 structure break. And that's, generally what I look for. Sometimes if I'm being aggressive, I'll wait for an M15 structure break. So let's just bear in mind, price comes up, we shoot up. Yeah, and then price just does this, maybe it does this, but then eventually it breaks down, okay, on the H1, and we start to get lower highs, lower lows. Then I will enter this trade, yeah, because the market has told me that structure is breaking down, sellers are taking over, and it's happened at an area, this gray zone, of where we could find sellers. Yeah, again, all common sense stuff, guys. All right, and that's basically what I'm waiting for. If we don't get a breakdown, yeah, it's telling you it's not ready. Yeah, if we don't get a breakdown of structure and price does this, yeah, then we wait for the next gray zone. Yeah, and then we might get a breakdown in structure here. We start to see lower lows. Yeah, then we can enter. This gray zone wasn't the right gray zone. Price didn't break down. The market didn't tell us, that it was ready to come lower. But instead at this gray zone, it did. Yeah, and price come down. So, yeah, structure breaks, support resistance, candlesticks, guys. All the truth you need to make a trading decision. Right, what else are we looking at, guys? Yeah, don't forget to sub the channel, guys. I can see, yeah, they've put my link in the live chat, so check that out. Alex, Tom is cooking. Thank you very much. That's very nice of you, Alex. I will pay you later. Okay, so this is an interesting question. So, trader JE11. All right, you sound slightly like a robot, like JC3PO, JE11. But it's cool. What happens if the daily trend and H4 trend disagree? What do? Do you drop down to the H1? So it's a good question, guys. Yeah, because when I do a top-down approach, you're never going to get a point where weekly, daily, H1 and H4 are all in the same trend. This is rare. Yeah, one of them is going to disagree with the other one. It's never all going to be perfectly aligned, as long as enough of it is aligned. Okay, so let's imagine this gray zone. All right, so price has come to my gray zone here. Yeah, now I'm interested. Yeah, my alarms go off and then I jump into action like Bruce Lee and Steven Seagal combined. All right, and this is where we're at. Now, if I wait for H4 structure break, so obviously remember I'm looking for sells. All right, so first and foremost, we are not with H4 structure. Yeah, clearly you can see that. And if we want to be with H4 structure, chances are you're waiting a day, if not a couple of days, I would say. Yeah, so let's imagine H4 does this, yeah, and then it breaks. Yeah, that is probably a couple of days, if not a few days. Okay, but I'm still willing to trade that. Okay, but what will happen on the H1? If we go to the H1, this might happen. Okay, so it comes up here and then we get a break of structure. Okay, so at this point, guys, you have to bear in mind that we will not be with H4 trend. Yeah, we won't be. We will still be in a H4 uptrend at this point. This is only a H1 break. But then you have a decision to make. Are you willing to take the trade off a H1 break? And the answer for me is yes, because we are at a very interesting level. Yeah. And also, guys, I'm only interested when price is at these levels. Okay. So, yeah, I hope that answers your question, Trader JE11. Yeah. So, yeah, I am willing to go against H4 trend if, for example, the weekly and the daily and the H1 are telling me to sell. Yeah. You know, or I will ignore the H1 and I'm with H4 trend. Yeah. So H4 and H1 can, you know, I like them to work in unison, but they can also be independent trades. Basically, the weekly and the daily are my direction, and I'm going to choose the H4 and or the H1 to enter a trade. And also, guys, you know, I'm not interested in this no man's land. Yeah. If price starts breaking down in here, not interested. I'm interested in this level. I'm interested in this level. And that's it. This is sort of no man's land. If anything, guys, if price breaks, you know, I know a guy I used to trade with who trades just zone to zone. Yeah. So if we break this zone, almost regardless of trend, of day trend, if we break this zone, he will argue that we will make it to that zone. And it's difficult to disagree with him. Yeah, simple as that. He just trades zone to zone. As long as your zones are good, yeah, this strategy, you know, can be a good strategy as well. But for me, I need to be with day trend. Okay. Yeah, and we are with day trend on the NAS. Also an excellent rapper, by the way. The album Get Down. Excellent. We are still in a downtrend until this breaks. Yeah, even if reacts here, we are still in a downtrend. All right. So there you go. Good question, Trader J11. I hope that answers your question. Right, what else are we looking at? Okay, let's. I'm just trying to look at potentially a different question. Okay, let's have a look at. Let's have a look at US dollar, Japanese yen, because all eyes are on the yen, and will we get intervention? And you know that you can't help but have that in the back of your mind with these yen pairs. And for me, if it's going to happen, it's going to happen soon. Yeah, because you know, just looking at the weekly chart on US dollar yen, you know, check this level out. Yeah, look how price reacted at that level last time. And we are clearly at that level again. So, you know, this is sort of do or die area. You know, can we see it pushing through this level? That's difficult for me to see. Maybe it will. Yeah, maybe it will just keep pushing on. Or maybe that's the point where the BOJ get involved. Who knows? That's pure speculation. No one knows. But if we're in this situation, so we know this is an important weekly resistance level. Again, that's not me making it up. That is the facts of the chart. Yeah, it's there in black and white or green and red. All right. Now we drop to the day chart. Now we know, yeah, that that's a weekly level. Okay, but we also know we are firmly, you know, in a daily uptrend. Yeah, we are. We're clearly in an uptrend. We're getting higher lows, higher highs. So this makes it really impossible for me to trade. Yeah, if we are at a weekly resistance level here, you're going to have weekly sellers. Yeah, not will we have sellers, won't we have sellers? You will have sellers. Yeah, Resistance, by the pure definition, resistance means you have sellers there. Yeah, it's the same for support. By its definition, you will have buyers at support. Okay, so this is, don't even think of it as resistance. This is a selling level. Sellers are here. Fact. Yeah. Are they here? Are they here? You know, will it pop up and then come crashing back in? You know, perhaps a bit of a liquidity grab. Are the sellers here? We don't know. But there are sellers here. There's going to be. All right.
Hey, Tom.
Now, sorry.
So, hey, sorry to cut you off there. So I think that we have something that we're about to do with the audience, but I want to thank you for coming on the stream today. We got
no problem.
We got some Tom yesterday and we got some Tom today.
It's too much.
Appreciate. No, it could never be too much, Tom. The audience loves you. We love you too. So thank you for helping us out today. Everybody make sure that you go subscribe to Tom. We have his channel right there in the comments for you. We've got it pinned, so you guys go subscribe to Simply Forex on YouTube. Tom, thank you so much for being a part of the show today, and we will see you back next week.
Cool. Cheers, guys. Thanks for having me. See you later.
All right. Thanks, Tom. All right, guys. So, yes, we are continuing on with our live stream today. We have been going for a while, and we are not slowing down yet. We're about to pull Frank in here. Frank, are you ready to go? Let's see. Frank's ready to go, so I'm going to go ahead and pull Frank in here. And we're going to talk about some stuff here really quickly with you guys. But you may notice I have our friend The Wheel behind us. So we are actually getting ready to do our first giveaway of the day, and we are going to be giving away the EDGEFINDER 100% for free to one of the people watching right now. There's over 300 of you watching right now, and we are doing a giveaway to give one of you the EDGEFINDER totally for free. So the way that you're going to get your name on the board is you are going to have to ask us a question about the EDGEFINDER. Frank has the EDGEFINDER pulled up, and we have a lot of updates to share with you guys about the EDGEFINDER. Too many to get to right now. We're gonna talk about it a little bit more later on in the stream as well. But as you guys probably know, today is November 1st, which means it is the beginning of our Black Friday sale happening all month long. We're doing the EDGEFINDER at our biggest discount rate of the year, 45% off for the EDGEFINDER right now. If you want to click the link being dropped in the chat to talk to one of our team members live in the office right now about the product, we have a new feature that just launched today that I especially want to hear Frank talk about. So again, here's what we're going to do. We're going to talk about the EDGEFINDER, our brand new alerts feature, for just a few minutes here. And right after we're done with that, we're going to do the giveaway where somebody's going to get the EDGEFINDER for free. So if you want the EDGEFINDER for free, if you want to enter the giveaway, send questions about the EDGEFINDER that you want to know in the chat right now. We're going to answer your questions. I'm going to put your name on the board, and then we're going to spin it. We're going to give it away for free. So let's see. I do see some questions already coming in. So I'm going to start putting names on the board. Frank, can you please tell us a little bit more about our brand new alerts feature?
Hey guys, what's going on? Yeah, so what we did recently over the past month or so was add this new feature, and we just released it today. What you can do is a series of things. So we got an alert system set up to let you know when things are changing in the EDGEFINDER. So we can start out here with top setups. Instead of, sifting through all the different setups and trying to figure out which one might be the one for you, we have an alert system in place that will let you know the moment something changes to a strong setup. So right here, you'll see AU went from -3 to -6, breaking that threshold from a mild bearish reading to a stronger bearish reading. So you will only get on this page a specific alert for what's strong to either the bullish or bearish side. So what we have here are different updates throughout the day. It's not necessarily a time thing. Like you won't really get one every hour unless something shows up. But what we've seen today so far is we've got 3 alerts today for strong setups. So very, very busy week or day for the EDGEFINDER. A lot of news coming out too. We got the Fomc and NFP later this week. So just a lot of updates that you'll see. So on top of that, we have our COT updates, which come out weekly. They just let you know what has changed to the upside or the short side according to smart money. And this is how you read this is we can go over to the smart money data. And again, you can find this all in the EDGEFINDER, but having it on your phone makes it convenient. So you don't have to, necessarily have the EDGEFINDER opened up all the time. And especially if you're out and about on like a Sunday, you'll get this notification on when things are changing. So what this has is it tracks which assets change to the net long or short side, and the threshold is 2%. So we see a 2% increase or decrease in either direction from smart money. It'll let you know, and the alerts show up right here. You see 10-6, 10-13. It's just a weekly update. And again, you can find this on the EDGEFINDER if you want a visual, but this will just give you a list of, okay, SPX is long this week. This is like the 2nd or 3rd week smart money has been buying it. Gold is also long. The indices, US30, metals, bonds. And then you take a look at the short side, it has it all listed out for you. Pound, Kiwi, the Japanese stock market, NAS. And so you can use this to your advantage and just, or more so convenience if you don't want to have the EDGEFINDER open up all the time. And this was I think our best idea for getting things, alerted to you guys instead of, having to keep this access tab open. And so lastly, we have the score flip alerts. This one's a little tricky to understand if you're new to all of this, but what it does is it sends out an alert every time something flips from bullish to bearish. So instead of seeing, a bullish to a strong bullish reading or bearish to strong bearish, you'll get updates on when things sort of change from, neutral or from bearish to bullish or neutral to bullish, things like that. So we have a threshold in place. After it crosses a certain number, it'll let you know that, okay, well, things are starting to turn around. And it's not difficult, but it does require some explanation for you guys to see. But an example right here, you can see dollar Swiss went from a 2 to a 4. So it went from kind of a neutral rating to a bullish rating. And NZD CAD, same thing. This went to a more bearish reading. And what this refers to is the price score chart on here. If I were to just pull up any major pair, it'll show you these bars, which are the score indicators, and it matches it up with price action over time. So let me try to find a good example for you guys when something flips from bullish to bearish. You can kind of see. We also have highlighted bars for extreme readings. So plus 11 is pretty high for a bullish reading. That's the highest one it's been in a while. So it'll give you that score, let you know that it's going to stay that way for probably some time. Here's what we have. A good example is Kiwi dollar. We got kind of a neutral reading because it hasn't basically crossed this threshold. But then you see declining score over time. At the same time, price declines. So the reason why we have score flips is because we don't want you to see this minus 13 and go, okay, well, I short now. we want you to be looking at it over time. So the second you see it flip from a neutral or the opposite reading to this, like a -5, this is when we kind of want you to start looking at, okay, is it time to short? Should I look at setups? And if you track it over time, price has just been going down as the reading gets stronger. So that's a really powerful alert for you EdgeFinder users who want this add-on, because instead of looking at every single asset on the EdgeFinder, it'll just tell you which one's flipping and which one's staying the same. So
Frank, you absolutely were killing that that explanation. Thank you for doing that. I have to say, guys, I am ridiculously impressed with the amount of comments that came in. I was not sure if we were even going to be able to fill the board, but y'all sent like 100 comments. I just went in order as the comments went in or came in and put down names. The board is already full, and don't worry, because we are going to do another giveaway later in the stream. So if you did not get your name on the board, I apologize for not being able to get to you. I just went in order as the questions were coming in. We're going to rapid fire here through some of these questions really quickly, because y'all sent a ton of questions. So
where do we want to start?
I'm going to start. There are seriously so many questions. Thank you guys for all the questions. I'm going to scroll up to the top so we can get to the people who sent questions in first. But this is literally like 300 comments about it.
Wow.
Okay, so the very first question that I saw, and we're not going to go super in depth with these because there are so many. So we're going to get through as many as we can in about the next 10 minutes here, and then we'll spin the wheel. And again, keep watching. We're streaming all day. We will do another giveaway later on in the day. But Saphir asked, what data do you extract from when importing seasonality? So Frank, can you answer where the seasonality information comes from?
Yeah, so we get all these things mostly from, our own sort of, I guess, scraping data from different types of price sources. So Yahoo Finance has price data, and what we do is we take that. That's an example of one of the places we get prices from. We take a like data all the way back to like sometimes even the 50s, which we don't necessarily need, but we take as much data as we can for price data, and we just make our own averages for it. So over time, what is the average gain or loss per month, per day? And we factor that into seasonality. So these bars show you the percentage gain or loss is usually per month, and with reference to the last 10 years. So from a decade ago till now, how has Kiwi dollar performed? So this is just averages. It's not a like a prediction, like, oh, this is where it's going to go. This is just where it has been over time. So one thing we can look at is seasonality on the stock market. November is typically a great month for stocks. We have heavy sales month, lots of revenue growth, and just wrapping up the year, like usually good projections. So things like that. November's our biggest year, or our most bullish year. So it's something that you look at ahead of time. So as we go into December, we look at more modest gains. From September to October, we expect, decline in the market, things like that. So, to answer your question, it's stuff like Yahoo and bar charts, Y charts, just any public site that provides this data, we choose to include in our analysis.
Yeah, the EdgeFinder has some pretty advanced algorithms, and it pulls all of this data in from a lot of different sources and puts it all together in one area in a pretty easy to read format. So it's a lot of information, but it's easy to read. The next question was from Dia. Frank, could you pull up the update log or the
alerts?
What's it called? Oh my gosh, why am I blanking on what it's called? The thing that shows you the times when data gets updated down at the bottom.
Yeah.
So the update log. So Dia asks, is the data updated daily? And yes, it is. So you can actually see right here, this is when all of the brand new information comes out. So seasonality comes out every 24 hours. If there is a change, that will get updated. Retail sentiment every 30 minutes. That's getting, and that doesn't mean that it's getting updated every 30 minutes per se. It's looking for a change. So if there is a change, it will be updated. If there's not a change, it'll stay the same. But retail sentiment is every 30. Price quotes in the market heat map every 15 minutes. Interest rates, it searches daily for that. GDP, inflation, and unemployment data, it's searching hourly for that. COT data is a weekly thing, but it checks every 12 hours for any changes there. And the bank signal stuff gets updated on a weekly basis. Right after that, we had a couple questions that were pretty similar. We had Prashant. I hope I said that right. Prashant says, how does the EDGEFINDER help us growing our account and how to make the best use of it? And Vanessa asked something similar. Vanessa, good to see you, a stream regular. Vanessa, you'll have to let us know what you think about the Drew Holiday trade. Vanessa said, how has the EDGEFINDER allowed you to simplify your trading process? So Frank, maybe really quickly, you could go over how you kind of use the EDGEFINDER with your trading.
Yeah, sure. So the best use for this is not a signal provider. It won't tell you when to buy or sell anything at a specific point. We don't even say buy or sell in this tool. What we do is we measure the strength or weakness of one currency or over another, or the strength of an index over its relative currency. So if the dollar is weaker and we compare that to the S&P and we say the S&P is strong, we look at things like that. So in this case, our top setups today are these highlighted in blue, and then you got milder bearish setups, and then the darker red are these strong setups. So what they do is they tell you, okay, the euro looks much weaker than the dollar overall, -8 versus like a -5 on CAD Swiss. So what you can usually do is, instead of searching up all of this data, which you can accumulate this over time if you wanted to, but instead of manually doing it, it kind of just puts it out here for you and just lets you know what's going on. It does all the math for you, instead of just figuring out how many long contracts, short contracts, whatever in the market. It'll just do it for you, calculate percent change. It'll look at all these different things: retail sentiment, seasonality, economic fundamental indicators, and it just slaps it all right here on this top page and lets you know which is strong, which is weak, what's not really giving us a reading. Two currencies are kind of just neck and neck with each other. There's not really a trend or a bias either way, and institutions aren't really interested. Versus, institutions are interested in dollar over CAD. There's, a trend reading to the upside. The economy factors are strong, inflation strong for the dollar versus CAD, and then it adds it up, it tallies it up, gives you a number. So if you see a strong setup, you can look at a chart, do whatever, find your setups. What would you be comfortable with? What level would you be looking at to enter? But it won't tell you to buy or sell. What it's good at is capturing the trend and realizing a trend before it's over. So that's
the EDGEFINDER pulls in so much useful information. I mean, there's so many different things that can affect markets that, you know, if you were to pay attention to all of them individually, it would be so much to keep up with. And the Edge Finder just kind of makes everything so much more simplified. And in fact, so I am not necessarily a trader myself, although I do practice on a demo account because I do enjoy it and I find it really interesting. So for me personally, I really like to look at the smart money tracker as well as the watch list. And depending on what has higher scores, either on the bullish or bearish side on the watch list, that's usually what I start with when I'm looking at charts, because I don't necessarily have things that I prefer to trade over others, again, because I don't trade too regularly. So I kind of like to just instead of going through each currency pair one by one looking for potential setups, I like to start with the strongest scores on the Edge Finder so that I can kind of get an idea of where to start at least. I see that you've pulled up the economy tab. Do you want to talk about this really quick, and then I'll spin the wheel?
Yeah, sure. This is just something that we added that was relatively new, and it's a good visual of, well, all these tabs: economy, inflation, labor, interest rates. They're all good visuals of our score breakdown. So if you go to an asset page, it'll tell you the score, but this will tell you why it's scored that way. And so the visual up here is GDP. You got previous to current. A drop in GDP is, you know, not good for a country's currency. So we mark it as like a -1. And then at the same time, seeing the dollar increase its GDP is a good sign for the dollar, but, you know, we're looking at the euro dollar pair. So it would be a weak reading for the pair in general, strong reading for the dollar. So this is a strong bearish reading on GDP. And the same idea for PMI, -2 there. And then here is just an unchanged. There's not really a bias here. Retail sales kind of, you know, showing mixed results. So that is just something we put in. So if you needed to look at, you know, why is this doing that, or I don't really understand the scoring, it's very good at just showing you a visual. Same thing for indices. You got let's just look at the S&P, and it does it based on what the asset is. So like good GDP, good for the S&P, which would be bad for gold, and things like that. Inflation is the same thing. Looks at CPI, current, previous reports, you know, just the overall broad market data. Very, I guess, in depth if you wanted to get into it. If you just wanted to look at the score, you know, you don't really need it. But this is just for traders who are trying to learn more about, you know, how things impact other things and what scores we put on it. So this is an index, the S&P, inflation. You got year over year, CPI, month over month. And one of them is core, which is a key Fed indicator that we want to include in index trading. And gold is similar, but, you know, there's just a lot of things that vary depending on what asset you're looking at. But yeah, that was all I kind of wanted to say about all of this. Just to let you know that these pages are there for you if you needed them.
There is, I mean, I don't know off the top of my head how many different pages of information we have in the Edge Finder, but it's actually a ridiculous amount. There's if you're looking for you know, any sort of economic data, retail sentiment, COT data, seasonality, price forecast, you know, trends, current price. I mean, you can find everything on the Edge Finder. So thank you, Frank, for that. Frank, if you are unfamiliar, is one of the developers of the Edge Finder. This is he is one of the parents of the Edge Finder, if you will. and a frequent EdgeFinder user as well. So we are going to spin the wheel now, and one of you who left one of the first comments, you are going to get the EdgeFinder for free. I'll tell you how you can get your access here in just a second. I'm going to go ahead and spin the wheel. Again, our Black Friday sale is happening right now, 45% off. So if you click the link in the chat, you can speak to one of our team members live in the office right now and talk about getting the EdgeFinder for 45% off, as well as some other cool stuff in our store and the EdgeFinder alerts that just dropped. Our newest product that just went live today, EdgeFinder alerts. You can literally get EdgeFinder changes sent directly to your phone. So we have Mohammed M. Let's see, Mohammed M. I'm going to look for your comment. I remember writing your name on the board here. Mohammed Mohsin. Mohammed Mohsin. Are you watching, Mohammed? Let's see. Mohammed Mohsin, I'm going to give you a few seconds to let us know you're watching, or else I might have to spin it again and see if someone else is watching.
Uh-oh. Hope he didn't leave.
I know. I hope he didn't leave too. We can't give you access if we can't reach out to you. Mohammed Mohsin. Mohammed M. 5, 4. Mohammed, you got to comment and let us know that you're here watching so we can get you access. 3, 2. Mohammed, I'm sorry. I don't know if you're watching, but I'm going to spin the wheel again. We have to give away an EdgeFinder, and it doesn't seem like you're still here and watching. All right. I don't see a comment from Mohammed, so I apologize, Mohammed. But, you know, one of the other people who left a comment is now getting their chance. So here we go. We're spinning again. Hopefully it doesn't land on Mohammed again. I see a couple people commenting whose names are on the wheel. United Art Forms was your name. United Art Forms. Are you watching? United Art Forms. Are you still watching?
They all put their name in and left.
I know. You left a comment. I said that we were going to spin the wheel in just a couple minutes, and here we are spinning the wheel. United Art Forms. I'm going to spin it one more time, and hopefully we get a winner. I don't know. They're asking where these people are, but we just had 2 people win a free EdgeFinder, and they decided to leave. Jay Schwer, your name is on the wheel. Let's see. Who else? Safir, your name is on the wheel. Prashant, your name is on the wheel. I know that. It does. It seems like a lot of people left. I'm going to spin it one more time. These people who are still watching, United Art Forms, you didn't comment. Last spin. We'll spin until somebody wins it. We got to give away an EdgeFinder. It's the kickoff to our Black Friday sale. No way it just landed on United Art Forms again.
You'd be good at roulette, James.
Can you replace names? I probably should replace names. Vanessa, are you watching? Vanessa, please tell me you're still watching. Vanessa is a regular.
She messaged 1 minute ago. She's got to still be here.
Vanessa, you have to still be here. We've met Vanessa before. United Art Forms has hacked the wheel. It seems like it. Vanessa, there you are. Vanessa, you are our winner. That's fun to see. Vanessa is a stream regular. She's in here watching all the time. She actually came to our in-person seminar. So we have met Vanessa. And I mean, you all saw me spin the wheel. We've got all these names on here. It landed on United Art Forms twice. But Vanessa, You are our winner. So Vanessa, please go to the website, message in, and let them know that you are our giveaway winner. Nobody else do that because we can see your name. We'll know if you're Vanessa or not. Okay, we know who Vanessa is. We're friends with Vanessa. So Vanessa with the clover emojis, big Celtics fan. Vanessa and I talked a little basketball when we met. So yeah, Vanessa, message in. You are our winner. Congratulations on getting the Edgefinder. Let's see. Don't go anywhere because we're about to get back to the market analysis. Miko is going to be joining us here in a few minutes. Let's see. Should we? I had a video scheduled to go, but we've been talking about the Edgefinder and doing the giveaway that I think Miko should be joining us here in a few minutes. So how about this? How about we see if Miko should be joining us for some market analysis here in the next 3 or 4 minutes. So don't go anywhere because we are about to dive back into the charts. But for the next couple of minutes until Miko joins, because again, he should be joining here in the next 2 or 3 minutes. Dexter said, why not make your studio tour? Should we show off the office?
I mean, if we got time.
Should we show off the office? Show off.
Can you do that?
Yeah, we could do that. Maybe. I'd have to unplug some stuff. All right, leave a comment if you want a office tour. Type yes in the chat if you want a quick office tour while we're waiting on Miko, and I'll walk around like a goofy guy with my laptop. Office tour, yes. Office
Looks
tour,
like it's a yes.
All right, let's do an office tour. We've never done a live stream office tour.
Let me make sure I tidy up Nick's office before.
But we'll do an office tour here. I need to change a couple things in order to do the office tour. Julie wants an office tour. Julie, just come into the office.
Yeah, just show up to work.
All right, let's see. Let me move this. All right. Here we go. Office tour while we're waiting on Miko, who should be here in just a minute. Welcome, guys, to the first ever A1 Trading live stream office tour. This is the halfway point in our live stream. We have been going for just over 3 hours now. We have 3 hours left to go, and this is the point in the stream where we walk around the office. So here it is in all of its glory. You can see we have Nick there, Emily there, Chandler there, Hallie there, and Frank is usually right there, but Frank is in a very familiar looking place. There's me. Frank is right here. Frank is where the magic happens. This is Nick's office. Don't have to show this off too much. You guys have probably seen a whole lot of this before. This is where Nick makes his videos. Fan favorite Chandler, everybody.
Hey, everybody. We're doing 6-hour stream today. We're halfway through.
There's Miko. Miko has now joined. We're going to get to you in just a second, Miko. We're having a fun little office tour for our 6-hour stream. This is the kitchen. This is my favorite thing in the office. It's the coffee maker. I love drinking coffee in the morning. I also love our mini fridge because it's stocked full of LaCroix and Celsius. And we need that to get through the day. So yeah, pretty fun little space. Everyone's got their own little workspace here. Here's my little guys. We've got Batman, Coke, Polar Bear, and Big Al, Roll Tide. But yeah, we're about to kick it over to Miko. Here's our living room. where sometimes people sit, but not usually. And yeah, we have one more room. Well, we have the conference room over there as well. Conference room where sometimes we film goofy stuff and also have meetings. We have our green screen room in here. When you see Nick floating around in space, spoiler alert, he wasn't in space, he was in here. And yeah. All right. So with that, I'm about to turn the stream over to Miko. In fact, we can bring Miko in. Let's see. Let's go ahead and bring Miko. Oops, sorry. There we go. Miko, how you doing?
I'm good. I'm good. How are you?
I'm good. We are doing our 6-hour stream today because of all the news that happened this morning. We have FOMC happening later today, and it's the first day of our month-long Black Friday sale. So to celebrate everything going on, we're doing a big 6-hour stream, and we're happy to have you be a part of it. We were just doing a little bit of an office tour because that's what the chat wanted. But now
it's a nice office you got there.
Yeah, thank you. It's a fun place to be. It's a cozy little spot for all of us. But I think what the people want now more than anything is some market analysis, and who better to do that than one of our technical Thursday guests, Miko. Miko has been on the stream with us for a while now. You've been streaming every single week with us for
over a year now, I think.
Probably about a year. Yeah, I was going to say probably about a year. So Miko is at this point, Miko is one of the originals. He's an OG A1 trading live streamer. So excited to have Miko here, be a part of the all day festivities. You can subscribe to Miko's channel right here. We've got it linked in the comments for you. And Miko, if you want to share your screen, the floor is going to be yours, and you can take it away. And yeah, we're going to dive into the markets with Miko here in just a second.
Okay, I think it's shared.
Yep. Here. There we go. All right, Miko, thank you so much, and have a good stream, man.
Thank you. Thank you. Okay, what is up, ladies and gentlemen? Hope everyone is doing good on the stream. So yeah, if you guys want to drop some pairs that you want me to take a look at, I'll go through some pairs I'm looking at towards the end of the week. Markets are looking interesting. They are moving, which is what we want to see as traders. We want to see the market moving. So I'll go through some pairs I'm looking at, and feel free to drop any pairs or any questions in general that you want to ask. Feel free to leave it in the chat. But I'm liking the dollar pairs. I'm still overall a dollar bull. I'll touch on the DXY quickly, then I'll go take a look at some setups on the currency pairs. But yeah, DXY, I've got this one still going to the upside. It's been very choppy over the past 2 weeks or so. The price action hasn't been great with the DXY, but it looks like it's starting to pick its direction. Now we're still trading with a big level here. I'm calling it 106,700-ish. Still stuck at this reading. If we break out, I'm seeing a pretty clean move back to the highs there, 107,300-ish as well. So I think Nick had something similar drawn up as well, and I'd have to agree 100%. So if DXY can break through, of course, that's the question, if we break through or not. We've just seen a big whip to the upside there as we had some news early on today. So we've already had one attempt as for today, which hasn't really resulted in much success. Maybe FOMC later in the day might give us a different outcome, but I am bullish on the dollar. So translating that over to other dollar pairs, Eurusd looking for moving to the low. I admit I'm not really looking to trade Eurusd. I'm not really seeing crystal clear setup that kind of fits my trade setup, because again, I have a bias and I've got setups that I trade. Sometimes I can have a bias, but not an actual setup to actually enter, and that's kind of what's going on for Eurusd. Although it does look like the market is failing to break high. We've had a couple attempts now to try and really reverse. We've had 1, 2, arguably 3 as well. Markets try to reverse a few times. Essentially, all we've done is pretty much just failed to break through this big old level of support, now term resistance on the daily time frame. So I think there's a good possibility we'll come back to the low now after these 3 rejections. So I do see more downside for Euro. Potentially, there could be a setup for myself if we see another big third pullback. Try and catch the next lower high after that. That would interest me, but I'm not too sure if we'll do something like that. Maybe FOMC has something else in store. The dollar pairs, which I do like, Aussie dollar, I like this to the downside. However, we've just been consolidating for a few weeks now. I'm waiting for us to break the low here. I'm still looking for Aussie dollar to return to these lows here. So still a bit more downside left, although price action has been quite choppy over the past couple of weeks. So if we can get a break of this low, I think there'll be some really nice shorts to the downside and just kind of looking to ride that momentum from a top-down perspective, monthly, weekly, daily. Everything is pointing to the downside in the major time frame. So if we can get a break of that low, it tells us that, okay, the lower time frames are starting to agree and more downside is likely. I also do like pound USD, although I'm not too sure if I'll get an opportunity to short this one. Again, still fitting with the picture of more dollar strength, looking at pound USD falling, Aussie falling, Euro USD falling. Again, I could be completely wrong, but that's just what my analysis is telling me. So I'm looking at pound USD come back to that low there as well. This was on the old on the watch list coming into the week, but we just missed out on my area of interest on like Tuesday, I think it was. Yeah, Tuesday. I was looking to short from this area of confluence. We had one high, second high. I was looking to catch the third one. But unfortunately, pound USD had something else in store. It just missed it by a few pips there and had a nice move down. Right now, a little bit choppy, struggling to break through some support, but I do expect us to eventually come into the low. Maybe if you do get a push up from FOMC, that could maybe present some nice shorts tomorrow morning, London time. Then I will be interested in getting involved. But we'll have to see, of course, FOMC. Price might just stay in the same spot. We might just see wicks up and down and no kind of progression. But if we can get a nice move up, that'll be fantastic. And if I get what I'm looking for, I'll be happy to short. I also like dollar CAD longs as well. This one's been pretty bullish. Again, I need some retracement for this one if I want to jump into any longs. I look at all my setups on the 4H time frame. I enter on the hourly, but I'm always marking up on the 4H time frame. So this is the pullback I'm looking for. Sometimes you get pullbacks on the hourly, sometimes the 4H, sometimes the daily. It mix and matches. Sometimes you get what you're looking for, sometimes you don't. And it's just me just being patient, waiting for the setup to occur if it does. But 378, we'll call it, is more or less what I'm looking to go long, try and catch that next higher low. I do like the price action and daily chart really starting to pick up some momentum. And again, fits the picture of that dollar kind of bullish sentiment. Possibly could be seeing some new highs above that high eventually. It's been a big range for dollar CAD in the higher time frames, but we're starting to pick up some decent pace here. So looking for more upside for dollar CAD as well, and dollar Swiss as well. I do like dollar Swiss, although this is probably at the bottom of the pile out the dollar pairs, but a possible long opportunity in this area would interest me if I see what I'm looking for. So yeah, I'm pretty bullish on the dollar, as you guys can see. Any pairs you guys are looking for? What's up, Timon? Welcome to the stream. Hope you're good. Just what is up? Welcome to the stream. Hey, you were on the stream earlier. Nice. What's up, Lewis? Welcome to the stream. You're probably already in the stream before I am, but hope you are well. Okay, we'll take a look at gold, pound, yen. Just had a look at Aussie dollar. Take a look at NASDAQ as well. Okay, so take a look at gold first. Okay, so gold's been interesting. I was pretty bullish coming to the week on gold. However, we failed to break through the high there, and since they've had a pretty aggressive move to the downside well, I was going to say today, but I actually started yesterday. But we had a big level here, still do, 1980. I did say coming to the week, if we can break above 1980 and stay above it, I'm looking at 2050. So this is kind of where my focus lies for gold. I'm still bullish because we're still trading above the level. If we do see a big bearish close underneath, then I will kind of sit back on my hands and see what the next best judgment is, or just stay neutral. But as long as we stay above 1980, I'm still pretty bullish on gold. I think today's candle will be very significant into where we go next, because if we see this candle close like a bullish engulf, holding this level, and say FOMC takes us higher, I think that's a fantastic indication that gold most likely will continue to head higher, and 2050 is the next logical place I see price going. So if we see a confident candle closure from this level here at 1980, I think buys look very good. If, on the other hand, we see price come down and close underneath the level, then I'm going to be a little bit more neutral. Possibly could be coming back to test some of these areas down here, 1950, 1940. So that could kind of change the bias. But at the moment, we're kind of still trading on top of that level. On Tuesday or Monday, can't remember the day, but we were looking at some longs here, but price failed to break through the high there. That's essentially where the momentum came from. So gold's looking pretty bearish right now. Strong rejection off that level there. Again, I wouldn't really look to short gold, as for the reasons I just suggested, because we're still trading in this vicinity. It's a very what's the word, sensitive area in the market, because buyers and sellers are kind of situated at this area. You've got sellers looking to sell the big rally that we had. Buyers are looking to take advantage of a retest of that support level. This could be a breakout, market retesting and continue up. It could be a big fake out, and the market coming back down. It's kind of up in the air, at least for myself anyway. So I'm waiting for a bit more evidence before I do anything in the market myself. And again, I think that evidence will come with the daily candle closure later today, and see what happens with FOMC. But yeah, gold is looking pretty bearish on the lower time frames. But again, we're trading in that big kind of zone there, so I wouldn't really try and touch anything. We may look very bearish now, but in a few hours we could be flipping bullish again very, very quickly. So I wouldn't really read too much into price action in this area until I see some confident candle closures on the daily chart. But yeah, gold is looking pretty bearish. Is this dollar strength or just gold just doing a craziness right now? BXY is not looking too strong. Is a little bit strong there. Euro's not doing too much. Aussie dollar. Yeah, we are seeing a little bit, I suppose, but gold just being gold, I suppose. So yeah, gold is looking pretty bearish now, but I need to see how we close on a daily perspective, because this is still support for me on the daily chart, so it doesn't make sense shorting to support. Okay, so I'll go take a look at NASDAQ and pound yen. What's up, Tayyib? Hope I'm saying that correctly. Dollar CAD, had a look at that one. If you scroll back a few minutes, you'll see the analysis. Pound CHF, Thomas will take a look as well. What's up, Alex? Hope you're good. Let me take a look at pound GM. So I actually do like pound yen. It's one of the couple yen pairs I actually think could provide a nice setup soon come. This one and Aussie yen as well. But pound yen, we've been ranging for a while now, and I've been waiting for price to kind of select a direction and then look to follow that momentum. So the key thing I'm after here for pound yen is clarity in the direction, some momentum, so breaking out the consolidation essentially, and then some pullbacks. And depending which way we go, I've got targets either side. So if you break to the highs here, and then I'm looking at price coming back to the swing highs there around 187, we'll call it. If we do break to the lows, then I'm looking at price coming back to that wick low there as well. So either which way, I'm more than happy to take trades both directions. I'm not kind of leaning one way or the other. Again, as a trader, I'm just looking for a good quality setup. As to where the market could go, doesn't really matter to us at the end of the day, because we can make money buying, we can make money selling. So whether we're making money selling or buying, as long as it's profit, we're not gonna fuss about it. So with this consolidation here, I'm kind of just staying put with pound yen, waiting for a bit more evidence. I mean, higher time frames are still very bullish for pound yen. Weekly chart still heading to the upside. Monthly chart still heading to the upside. Possibly longer term could still be looking to come to the highs there on the left. So everything is still pretty bullish on higher time frames, but for the 4H, which is where most of my focus lies, we are moving sideways, just indecisive price action. So I want price to break confidently higher, and then I'll be more than happy to take some pullbacks, or break confidently lower, and then again I'll be more than happy to take some pullbacks and shorts to the areas I've just mentioned. So I think pound yen could provide some nice opportunities. It's just waiting for that breakout. Maybe FOMC will be the catalyst for that. We'll have to wait and see, but even if it's not the catalyst, eventually we will break out. Of course, the market won't consolidate forever, and then of course I can plan some trades after that. But this is kind of my thought process for pound yen at the moment. Just waiting for the breakout. Let's take a look at NAS. So US100, we've been seeing a lot of bearish momentum for this one. I was looking for a retest of this low, but looks like NAS is looking pretty bullish after the news that just occurred there. Possibly might be seeing a bigger pullback, but I'm still bearish on NAS myself. I'm looking to see if we can probably come up a little bit higher now into 14,900 and then get the sell. Those are the two areas I was considering another move to the downside from. Now that it looks like we are breaking through that low, that 14,450, 460 we'll call it, could be seeing a bigger movement to the upside, because we have been seeing pretty big pullbacks for NAS. Had a big move to the downside, pretty big pullback, move to the downside, pretty big pullback. So if the market is going to continue with that kind of motion, could be seeing a bigger pullback into 14,900 as well. So I'll still keep an eye out for some shorts for NAS. I'm still bearish on the pair based on this structure here. Higher time frames like weekly, monthly, yeah, are still bullish, I would argue, but I'm more focused on the short to medium term price action. And the short to medium, for me at least, is still pretty bearish. So I'm still looking at more downside for this asset, but looks like we are breaking above that low. It's a pretty nice support level, but the news had other plans in store. Pretty big breakout, so not really much of an indication that we're holding that level anyway. But yeah, NAS100 still short bias, but after this break, if we hold above, I would wait for at least 14,900 before looking to short next. We'll take a look at Pound CHF and AUD NZD as well. So Pound CHF, this one I was looking for some buys coming into the week. I missed my opportunity, unfortunately. Well, I didn't really miss the opportunity, just never it just never came about. I was looking for the retest of this area of confluence, and still potentially could get it, but price was just very, very bullish. So haven't got the retest, and now price is already coming to a very big level of resistance here. So I'm not really a big fan of buying the market anymore, since we're coming into a very, very big level right now, as we can see for Pound CHF, where the sellers most likely be looking to step in and try and see if they can take price down again. So with Pound CHF, naturally, it's a good time to start looking for shorts. I'm not really trying to jump in and be the first one in the trade there. Again, it's a very nice level to short from, very, very big level. But I'm always liking to be the second or the third one into the position. So I want price to react to the level and then start giving me some low highs away. And then these are where I look to position myself short. So once I start seeing some bearish structure, then I look to take my positions, especially at such a big level, because there's going to be a lot of kind of back and forth, maybe a bit of manipulation, maybe a fake out here, a big wick there. And then eventually we get the move, whether it's going to be price breaking above the level and continuing higher or reversing through it. You know, eventually the market has to do one or the other. It's not going to just stay at this level for an infinite amount of time. Eventually it's going to either break through the level or pull away. So if you just be patient enough, you can even wait for price to start, trending away and then hop in a nice pullback somewhere, ride that up, or vice versa, hop in a nice pullback if it's going down and short it. But I don't like being the first person, especially into such a big level like this, where I know a lot of eyes will be focused at, especially all-time highs and all-time lows as well. But yeah, Pound CHF, if we do start trending away, either up or down, I do think some nice trades could come from this. Again, higher time frames are still pretty bearish, so I do fancy more downside for Pound CHF. As we can see, Pound CHF has been heading to the downside for a very, very long time. This is the monthly chart as well. If I scale to the weekly, still the same thing as well. Could be coming back down to this big old wick here as well. So there is still a lot of room to the downside for Pound Swiss. However, I'll wait for a bit of a bearish trend to develop here on the 4H and then hop in. So that's kind of my outlook. Okay, I'll go take a look at Aussie New Zealand dollar. I do not like that pair, but I will go take a look at it. We'll do dollar yen after as well. Aussie New Zealand, I don't like the pair just because it doesn't move very, very well. It's not like I blew up my account on it, but I mean, it moves very, very slow, so it's difficult to blow your account on this one, although I bet some people have successfully done that. But yeah, I just don't like it because it's very, very choppy. I'm more of a trend trade. I'm looking for momentum. I'm looking for trends. I'm looking for direction. And this is just one of those pairs that just doesn't really do that for me. It's very up and down, up and down. So if you're looking for like a reversal kind of range bound market, and that's kind of your forte, your edge, then this is not a bad market to look at. Doesn't move too fast, not a lot of pips about it, but it will give you opportunities. It does kind of, as you can see. Even if I expand to like the weekly time frame, the weekly time frame sideways as well. So we're kind of ranging within a range, but that's enough me ranting. Anyway, so with AUD/NZD, we are approaching a very, very big level here. If we break through that one, then naturally I'm expecting price to head to the next level, which would be the high here at 1.105. So if we can clear 1.09186, next key levels there, and that's actually not a bad buy. We may form a nice trend on the lower time frames, like 4H hourly, maybe a nice trend moving up there. That could be a nice opportunity to take advantage of some longs. But at the moment, we're still reluctant to break through as well. So it's not a bad short at the moment in time as well. Not really my type of trade, I have to say, but it's not a bad short because we're still throwing a lot of wicks into that level. If you can get a nice bearish engulfing on the hourly chart, it's not a bad place to short. Stops above the high. Of course, if you do get stopped out and price does break out, you can obviously look to switch that bias and take advantage of buyers going up again. So it may just give you a nice trade, a buy opportunity, even if you do take a loss there. But at the same time, price is really struggling to break through this level here. So shorts are not too bad right now from this level. Again, never really my type of trade because there's no trend I'm taking advantage of. There's no like momentum. So it's something I would avoid in my personal trading. But if you guys are looking at it, then my thesis for this one is if we can hold that, expecting some downside, if we catch a breakout upside, and that's the next target. But yeah, very, very choppy pair. Do not like trading it. But yeah, hopefully that made sense. We'll touch on CAD CHF. We'll go over to dollar yen first, though. No problem. Happy to help for the dollar CAD analysis. Let's go take a look at dollar yen. Let's see what's going on. Dollar yen's been very, very bullish for this one. Very, very bullish. Of course, we've just seen a massive move to the upside over the past couple of days, clearing out the highs there. Not quite higher highs, although we are teasing the idea a little bit. So as you can see, just missed out on the highs there. Everything is still pretty bullish with this one. If you look at the monthly, weekly, daily, everything is heading to the upside with dollar yen. So I've been talking about dollar yen saying I'm still bullish on the pair, but I'm not looking to long it because we are in this humongous level here. So it doesn't really make too much sense for me to buy dollar yen at the moment because of this big level. And of course, Bank of Japan having a bit of a party at these prices before. Of course, humongous reaction last time. Who's to say we can't do that again? So naturally, I'm bullish because the market is still heading up, still seeing higher highs and higher lows. I trade structure, but theoretically, what I want to see happens either we just clear the high here and then we start trending above it, and then I'll look to follow that up. At least I know that I've got this to my back. Now this is support, or simply reverse like we did last time, and I'll be happy to go for some reversals and some sells to the downside once I see some bearish structure forming, some lower lows, some lower highs, some break of structure, and then I'll look to position myself short. So that's kind of what I'm looking at for dollar yen. I'm not really looking to do anything in here, just way too much speculation. Of course, Bank of Japan intervening at some point, it could happen, and yeah, it's just a big level of resistance. And just focusing on the technicals doesn't make sense for me to buy in such a big level of resistance either. So my full process with dollar yen is just waiting for price to cement itself, either start clearing the highs here and continue, and then longs or break structure, and I will be more than happy to short to the downside, break if we test some low at some point, so on and so forth. So that's kind of my outlook on dollar yen. I don't really recommend doing much with dollar yen at these prices. It's just very, very speculative, and these wicks are very ugly as well, as we can see. It's a tough market to trade in these conditions. But yeah, that's kind of where I'm standing for dollar yen at the moment. I keep drifting off screen. Let me make sure I'm in the middle. We'll take a look at CAD CHF. CAD Swiss, haven't really been focusing on this one a lot. It's been a pretty nice trending market, I can't lie, actually. It's been pretty nice on the daily chart. As we can see, very, very nice lower lows and lower highs, very prominent clean. Recently, more of a trending condition, equal highs, equal lows. Market is bouncing off the prior low, so potentially could see another swing to the upside if we were to see this trend continue. I would keep an eye on this area here. because again, the market is bearish here. You're always going to have a bit more luck shorting at these highs here than the lows here, because at least with these highs, you're in favor of the higher time frame momentum. So if we are just moving sideways to eventually break lower, you've got that kind of momentum on your side. Whereas this one, you're kind of looking to call a bottom a little bit, even though, yes, we've had some really strong reactions before at this level. The buys are always going to be a little bit less probabilistic than the sells, at least for my analysis. So going forward with CAD-CHF, we have seen a nice reaction off this level here. I wonder what we're going to do at 0.66. Will we start reacting? Will we come back down again like we did here? We came back up, respected it, came back down, come back up, respected it, might just come back down again. So I think for me, for CAD-CHF, I'm going to wait to see what we do at these areas here. I'm not really interested in buying it. I'm more interested in selling CAD-CHF, but of course I would want to sell it now, at least either at this area if we'll move back down, or if we do a bigger move, then I'll see what we can do in terms of a trend reversal up there. But this is kind of where my next focus is for CAD-CHF, and then we can see what price does around 0.66, see if we repeat what we did last time we were at the vicinity and sold off. So yeah, keep an eye on 0.66. I think if we can see some breaker structures at lower highs, we come right back down again, and that kind of fill the range. That's a nice little trade to take advantage of. But yeah, CAD-CHF is kind of just moving sideways a little bit. Okay, so I will take a look at pound Aussie. I already had a look at NAS. I was pretty sure maybe the second or third pair I went through. So if you scroll back, you'll see it. Anyway, so pound Aussie is looking interesting. Possibly could be gearing up for a move to the low here at 1.88675. It's been very, very choppy. I have to mention it's been very, very choppy. Equal highs, roughly equal lows. Not the cleanest consolidation like we just saw in CAD-CHF, where the highs and lows were pretty much flat level. This one's a bit more erratic. Some lows a little bit higher, a little bit lower this time. So it's been a little bit messy, but this is still textbook consolidation in my books. And I'm waiting for price to kind of pick a direction. Possibly we could be seeing a big head and shoulder on the higher time frame. So you got left over here, you got a big head up there, possible right shoulder. That's obviously going to be our neckline. If we can get a nice break of that structure, then pullbacks, reversal, so on and so forth. That looks like a nice opportunity. But I need price to start breaking the lows, strongly with some bit of force, and then I'll look for my pullbacks and continuations. At that point, we're starting to print in some nice lower highs, break some structure, and we've got a nice trend there to follow. But at the moment, pound AUD is just sideways. So if you are looking to trade a range bound market, you've seen a few on the stream today. It's not a bad place to buy. Naturally support, nice move up, maybe another nice move up. It does make sense, but it's just these conditions is what I stay away from. I'm looking for consecutive low lows and low highs, and hopefully I can position myself from a trend in that perspective. But yeah, I don't like the conditions here for pound Aussie. I would recommend maybe Euro Aussie starting to break the lows here a bit more considerably. If we can pull back, that looks like a nice little opportunity there to short. What's up, Nick?
Hey, Miko, what's going on, man?
Nothing much. Nothing much.
It's like roles reversed. I join you when you're doing your stream segment. I could go for this. Maybe you can be the host and anchor, and I can just I'll waltz in and you can lead the stream. Miko, thank you for doing all the analysis. Sorry,
no problem. And I did feel a little bit opposite there. Maybe it's Trader Miko on the stream.
Yeah, right. We'll just change the stream. Anytime you're streaming, we'll just change the channel name to Trader Miko for like an hour.
I wouldn't mind that.
Miko, yeah, that would be interesting. Miko does, however, guys, for those of you who just enjoyed that segment, Miko did some awesome technical-based analysis there. If you guys do not already follow Miko, he does actually have his own YouTube channel. It's not called Trader Miko. Maybe we can convince him to change it, but no, it's Miko Audio on YouTube. If you'd like to, you can subscribe to him here. He's got his link in the chat right now so that you guys can check him out and keep up with Miko's latest analysis. Miko, thanks for going through that. I know you did a lot of pairs right there. I saw you just do a bunch of audience requests as well. I guess I have a final question for you. Of everything that you've discussed here, trade of the day, what's the number one interesting chart for you right now?
I'll probably say number one interesting chart for right now. I'll probably say dollar Swiss. I do like dollar Swift buys. It's looking a little bit bullish now. Maybe it's leaving me behind a little bit, but I'm pretty bullish on the dollar pairs, and it looks like dollar Swiss is starting to have that reversal. Been bearish for a while, starting to pick up some nice momentum, especially this move here on Tuesday. I do expect to see a move back to the highs there. So if I can get a nice little pullback at some point into a retest of some prior highs from yesterday, I'll be more than happy to follow that to the upside. But maybe might be breaking to the upside already. So we'll see if we get that pullback. But for the moment, dollar Swiss looks likely for some longs, in my opinion.
Very cool. Well, Miko, I don't want to keep up any more of your time. Everybody in the chat, let's get some thanks, Mikos, for coming on to the show here, helping us get through our 6-hour live stream today and getting us leading up into, of course, the big FOMC meeting. Miko, thank you for coming on. We've got your channel linked in the chat, and I guess we'll see you on the next stream, man. Thanks for coming on.
No problem. See ya.
See ya. There you go, guys. Miko Audu, again, highly technical trader, very skilled trader. He's been on the streams here with us for, at this point, pushing on a few years, and we always appreciate his commentary. We had his usual co-streaming partner, Marco, earlier on this morning. We've been going through it. Anybody still here from earlier? Guys, we are 3 hours and 45 minutes into this stream. I can feel my voice going a little bit, so I'm going to try and keep it relaxed here for a little bit, just because, again, we've got the FOMC stuff later on. Oh, my name is Frank. Yeah, I need to change my name. How do I change? Hold on. Do I need to rejoin? I think I might just be Frank for a minute, guys. To be completely honest, I don't know that I can change my name without having to exit the stream and come back in. So for now, I am Trader Frank. And wait, Chandler's got a message for us. What's going on, Chandler?
Oh, I don't know if you can hear me yet. Oh, there we go. I was going to hold the fort if you want to swap your name out.
Okay, yeah. You know what? Let me restart my thing so I can change my name. I can go back to being Nick. 1 second.
All right. He's going to go back to being Nick. Right now, you just got me. I don't have any charts to share with you, but I am floating through space. How cool is that? Whoa.
All right, I am back. What have I just walked into? We've got.
I didn't want to talk with this thing on because it was going to blast everybody's ears off.
Chandler, what do you think of my name? Is that a little bit better?
It's pretty accurate.
Now I am Nick, and in parentheses, not Frank. So thanks, Chandler, for covering for me there, guys. You guys are the best. We'll be back with the producers later on. But for now, couple trade setups, ideas, things to get us closer as we approach the big event. We've got numbers, we've got commentary, we got interviews coming. We got, he's in the chat, Mr. Jason Webb. Nick, you got to be tired by now. I am Jason, and I'm going to apologize now, Jason. I won't be doing your interview. We're going to have one of the lovely producers do that. I would love to collab with you more in the future. I know, Jason, we'd love to have you back on future streams. Today, I've got to build in some breaks for myself to get me ready for the big commentary, but I'm very much looking forward to listening to your interview, which will be up next on the show, guys. We've got a little bit of segment here where I'm going to go through some setups. We'll bring Frank in to prep for the big FOMC meeting. And again, we are pushing on, guys. We are on the downslope on this stream. We are 3 hours, 47 minutes into this all-day stream. S&P 500 staying strong here, guys. We are still long. I've got my order from this morning, which is currently in profit, about 1750 on the day. We'll see if that one can stay. Again, I'm being cautious with this because I have had a bad streak recently with the S&P and the NAS. So I've got this trade open, and I'll give you guys a little bit of my thoughts on this. We did break resistance, which is nice. Little breakout here. Nice overall upward trend going on the 1 hour chart. This is why I picked up the trade. I saw this weak retracement. Had a long conversation earlier today with Marco about this concept. Weak retracements can be wonderful pullback opportunities. One thing about, a flag pattern or a weak retracement or a dead cat bounce, whatever you'd like to call it. The cool thing about this pattern, it's a very different pattern than this pattern. These are two completely different price action models. They don't look that different, but they are. Because here's the thing. In this first scenario, this weak retracement shows that sellers did in fact come in and push back against price, but not with a ton of force, right? In a really bullish market, you usually see really brief, tired pullbacks and strong pushes again, right? You don't see much coming off the gas, basically. It's almost like if the car was moving, it's like the car has gas and then we coast for a second and then we push. It's not gas, brakes, gas, right? Two different price ideas. Regardless, this I would say is more on the gas, drift, gas idea. I don't know if that's the best analogy, but it makes sense in my head. Regardless, I'm long S&P. We've got this trade holding on, and I will be planning on holding this trade going into the rest of the day, probably the rest of the week even. So yeah, we'll keep a close eye on this one. In terms of price action, I would not be surprised if the S&P pulls back here today after this big pop. We do have FOMC coming around the corner. In fact, I would say probably we pull back further. Probably we pull back. Why? Because you have a big meeting here, and a lot of people who may have taken trades like I did, many traders might be taking their profits, especially day traders. Day traders might say, nope, let me get out of the way of this. We got FOMC, big question mark at 2 p.m. I don't want any of that. Close out the trade, profit, right? So I say that, and I hope it doesn't come back to completely haunt me for saying that, but I don't take profits for that reason. I trail stops. I let trades run as much as they possibly want to run. And for me, what that means is I will hold this trade until it either hits my stop or we can trail further and I can get stopped out in profit. Okay? So I do have plans to hold this trade going into the rest of the day. I am bullish on the S&P, not for the next 15 minutes or not for the next hour. I'm bullish on the NASDAQ and S&P pretty much for this month. Again, earnings have been pretty strong. Seasonality is in our favor. If you are someone who subscribes to that concept, if you're an EDGEFINDER user, you know seasonality is the idea of studying historical tendencies in the market. Whatever you'd like to call them, anomalies, tendencies, trends. Well, here's something about the S&P 500. It is expected for the remainder of this year, if you're looking solely at seasonality of the months of the year, it's expected to have a nice positive end to the year. I'm betting on it. Will I be certainly guaranteed to be right about that? Absolutely not. Something could change. The Fed could come out and say, yeah, more rate hikes got to happen. It's going to totally crush my idea in that case. Nobody knows the future. I'm weighing the probabilities. I like the trade. I've got the trade open, and I'm going to try and manage it accordingly and appropriately and risk properly. That's all we can do. Okay. What's your price target for the S&P 500? I have no price target. I, in fact, don't use price targets in my trading. What I do instead is I trail stops. So I'll give you a quick example. Let's say that markets rally through the highs after pulling back. On that higher low, I might look to trail a stop into profit. If it repeats, I'll do the same. If it repeats, I'll do the same. I let a trend as much as it wants to do before I get out of the trade. Okay? So I use price action and market structure to tell me when it's time to get out of a trade. I use fundamentals and sentiment, as we'll hear from Jason, who I know is coming on for his interview in just a bit. I know he does the same thing. You guys will hear some more about that context. He's kind of in the same camp as we are in terms of employing technicals, fundamentals, sentiment, and tying it all together. So looking forward to hearing more from Jason on that front. Jason is somebody who has the EDGEFINDER. He's somebody who trades with this kind of concept, and he's a funded trader. I can imagine that a lot of you guys will probably be pretty inspired by Jason when he comes on here. He's a remarkable dude, really nice guy, and he came a long way to come to our in-person event earlier this year. So I'm looking forward to his interview. I know many of you guys will as well. What's the seasonality for gold? Just so you know, anybody who has the EDGEFINDER, you can go through any chart you want ever. I will do gold for you because you've asked. But if you ever have questions about seasonality, you could just go over to the seasonality tab on your EDGEFINDER, scroll down to gold, and let's find gold. There it is. So gold, here it is. Here's the picture. I pay attention to the blue column, which gives us the last 10 years average. That's a good bit of data, historically speaking. We've got November is negative, December's flat, and things start getting interesting in January, where you can see it historically as a positive month. I will take this as an opportunity to let you know, guys, too. Also, if you are somebody who is an EDGEFINDER fan, but you do not yet have a copy, if you have not heard, today is the day to get your copy. Good news, if you're somebody who's been waiting, if you're somebody who's been looking for a Black Friday sale, I know a lot of you guys have been waiting for that. It's here. 45% off, guys. If you guys are not already EDGEFINDER users and you've been a fan of the show, you want to support what we do here at A1 Trading, if you like our data, we're a software company out of Atlanta, Georgia. We're a small business. It is my company that I started back in college several years ago, and we have gone on to basically build what you guys see here, a wonderful team of people that bring data and bring coverage to traders all around the world. We are thrilled to be here every day. And right now for Black Friday, for our viewers, 45% off is available. We thank you guys for making these shows possible, because there's viewers, because you guys are watching each and every day. We are able to do this. We are able to do shows. We're able to build software tools. It's all about you guys. And so as a thank you, we're doing 45% off. That is the biggest discount of the entire year. If you've been thinking about it, it's free to message us. We've got a link here in the description and in the chat. If you click this link, we'll chat with you and you can get your access, like I said, 45% off. So we'll drop that link here in the chat. When you click that link, it will take you over to the direct message center. It looks like this. Here it is. Click that link. It's in the chat right now. Click chat now and click Black Friday sale. If you're somebody who already has the EDGEFINDER, please message us about getting access to your smart alerts. You also get access to the Discord notifications. If you shoot us a direct message, we'll tell you more information about that. You get access to the COT report alerts, top setups alerts from the EDGEFINDER, so on and so forth. Ivan asks, Nick, is your voice starting to crack? And it is. I'm trying to speak quieter. The problem is I'm a really loud speaker and my voice carries a lot, and I don't want to lose my voice. So thank you, Ivan, for reminding me. If it starts to sound like ASMR in here, trust me, it's not intentional. It's that I am running out of voice. The key is to just keep drinking water, guys. Yeah. So with that said, S&P 500 still a trade that I'm looking at. I was looking at dollar CAD earlier. Dollar CAD level of resistance here. A couple tops formed. I mentioned potentially getting back in on my bullish trade. I caught this earlier in the week. I'm looking for possibly breaks and retests. If we get something really hawkish from the Fed, this could trigger a setup on dollar CAD. Again, resistance currently in play up here. We'll watch for breakout there. Dollar yen, another chart. Ivan says, are you streaming until after FOMC? No, I'm not streaming until after. We're going up to the meeting. We'll watch some of the meeting, and then we will call it good from there. In terms of, let's see, where are we at? Timeline. We're going to have Frank join us here in a second. We're going to talk prep for the Fed meeting. And Ivan, if you let me think. Hold on. We're doing stream scheduling on the fly, guys. We're 4 hours in. Give us 1 second. Yeah. Okay, so we're going to go to Frank here in just a second. We'll bring Frank in to talk about FOMC coming in hot. And Ivan, maybe, well, we've got Jason at 12:30. Maybe, Ivan, if you're around, do you want to come back on? You don't have to, but if you do want to, we might find a slot for you to fill in for 10, 15 minutes, because I do have to do so many more filming things. We got the big event, and then I got a podcast later, so I don't want to run out of voice. That's my concern. We'll bring in Frank for a second, and after, actually, let's do this. We'll come to Frank in just a second. Let's just run this quick break. We'll come back to Frank and myself to talk Fed meeting coming up soon. Here we go.
I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1Trading15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
All right, there it is, Frank, our acting debut, and we got him back in the building. That was the star special there, Frank. What's going on?
Yes, professional acting indeed. I'm doing well.
Remember when we went into space to film that?
Yeah, that was a long journey to FX2.
Yeah,
I have a question for you. So I was using your setup earlier, and I noticed that the chair was really high off the ground. That that my feet didn't even touch the ground fully. Like I was kind of on my toes. So I was wondering, we are the same height, correct?
Yeah. Well, what I do is, Frank, my legs kick in the air like I'm like a kid on the swing set.
You just need room to let your legs go.
Yeah, and I throw them around, and you know you can't really see it on stream, but I'm pushing things over with my feet and dancing around and
right.
No, they barely touch. I mean, they're touching the ground.
Are you on the edge of your seat?
Yeah. No, I'm not. I guess
we're all on the edge of our seat today.
Yeah, it is a day for that, for sure. Gave you the spin around.
Spin there.
Yep, thank you. All right, Frank. Down to quick business. We talked about this earlier. Give us your rundown. Anybody who is getting ready, as we now actually approach, what do we got? A couple hours to go, about an hour and a half to go before we get into the rate statement and the press conference after. What do you think people who are watching for clues, watching for, to see how it impacts their trades, what do you think the game plan is, broadly speaking, for this Fed meeting?
Yeah, so I think what a lot of people thought in the summer months was that we would see one more hike by the end of the year. And at this meeting, the expectations have gone way down from that. Everyone, well, at least according to the Fed Watch tool that I have pulled up, it's 98% are anticipating another pause. This will be the third straight pause. And I think what we're going to see today is, a drastic swing in the market, swing in the dollar. Everything's going to move heavily right at 2 p.m. But, it all depends on what Powell says today. And what I'm thinking is it's going to be the same sort of deal we've heard like for the past couple months. It just depends on the data. We're looking at inflation rates not really doing anything crazy. I remember you talked about wage growth slowing. So I think the market, because of today's pop in the S&P and NASDAQ and US indices, that we're looking at a already priced in sort of deal with the Fed. I don't think today is going to be like the deciding factor, because we got NFP Friday. And today is a big day. Everyone's very tense about it. Very, very nervous about what the Fed will do, but there's really no indication that there will be a hike. So I think I'm just leaning towards, we're going to see the same sort of market here, ups and downs, but no major, correction territory levels that we saw in October.
So I think, the expectation, I guess, Frank, right now, what many people are calling for is a hawkish hold. Now, a hawkish hold, I guess, explain, you've kind of already nailed this, I think, in terms of what is expected. But what if, okay, a hawkish hold, right? That basically is they don't expect to raise rates. As you pointed out with the Fed tool, we can see that they're almost certainly not going to change rates. They're going to hold them at where they're at. The difference, however, is that they're going to probably link that with commentary that is still hawkish, meaning we retain the right to, or retain the possibility of a further rate hike in the future and keeping rates higher for longer, and all the hawkish, dogma that we've heard for the last year and a half, whatever. My question, I guess, Frank, would be for the S&P, for the dollar, for markets in general, what would we need to hear to get a big move either direction? What do you think?
Yeah, what we would need to hear is that they're very concerned about inflation. If they were to say something like, it's coming in too hot and it's past our estimates and we need it to come down, things like that will, that's a very hawkish tone. But what they will talk about most likely is that they're just going to monitor it, and they'll keep that idea open for hikes. But I don't think saying things like that, saying the same things that they have been saying, isn't going to add much of a change to anything. And, the sentiment of last month was very bearish, but now everything is sort of turning around because we're not really in a bull or bear market. We're kind of in this limbo of ups and downs. And like, even on this chart I have pulled up of the S&P, you can just see that we are, I guess, trending lower in the long run since July, but we're in this trading territory where we go up and down, just different cycles of sentiment, and it's not necessarily just interest rate related. There's just been a lot more factors that we've seen, like the war that happened in the Middle East that's still happening, just things like that pulling the market down. And technicals are pulling through the S&P, the NASDAQ. They've all hit these serious levels and are bouncing from them. And what looks like they'll want to continue to complete the move back up to the top of this, and then from there, you just have to wait for breakouts, things like that. But I don't think what we would need to hear to make this a bearish sort of statement from the Fed is not going to happen this time. And the fact that we have this looming fear of another hike, is, you know, it kind of puts you into perspective. Like, well, we just have to adjust when the Fed adjusts, and I don't think they're really, I guess, like going to be all up in arms about interest rates, but they will always keep the door open for higher rates over time if they need to. Higher rates for longer too is going to impact, you know, everything, fuel costs, just everything in general. But overall, I'm sort of leaning on the bullish side. Well, obviously, I am. You and I took a long on the S&P this week, so we're riding this wave hopefully to the top. And you know,
Yeah, and Frank, I want to ask you about that in terms of, so we're both kind of generally on the bullish camp of the S&P right now. Where do you know what? I know where your stop loss is because it's like right where mine is at. How do you feel about getting out of this? Like, at what point do you call it quits on this bullishness? You've got this nice channel going on. Yes, it's kind of a daily chart downward trend, but I think we've been, you know, pretty clear in our analysis. Things have been sentiment-wise incredibly bearish. You know, this Fed today, anything relaxed from their narrative could pop the S&P higher. But where do you call it quits? How do you justify being long here? Where's your risk management? How do you stop out of something like this?
Yeah, so it's more so depending on the data, just like the Fed.
Mm-hmm.
What we can see from NFP Friday, what we can see from inflation, from CPI in the future, will sort of make my bias. But from what we've seen is, you know, slow to stubborn moves on inflation. So moving down from double-digit inflation to where we're at now, and seeing, you know, maybe there's a little rise here and there, but overall stubborn levels, things are staying where they're at for the most part. So it's not necessarily about, okay, we need to hike more, which we might, but I think keeping interest rates higher, the way the where we're at right now, 5.5% is you know, pretty high, and the rate at which we rose interest rates was, you know, unprecedented. We haven't really seen that ever.
Sure.
And it is a response to 2020, where we just had absurd amounts of cash thrown into the market and things like that. So this is just the aftermath. But, you know, we're kind of at the tail end of this year.
Fair
so
enough.
I think on technicals, you know, I look for, if it breaks lower, likely to go lower. If it hits support, likely bounce. Things like that. There's nothing like crazy. There's no insane calculation I'm working on. It's just, what do I see on the chart and what does the data tell me?
Yep. Makes sense. Well, Frank, thank you very much for that. Again, this has been kind of our fundamental game plan for the Fed meeting. Frank, I'll let you go, and we may see you back later. We may not see you back later, but either ways, anybody who's in our Telegram channels, newsletters, you guys will hear from Frank. He's got commentary all the time. Frank, thank you for joining me on the show.
Yep. Thank you.
All right. And now, guys, the A1 Trading Show is doing something a little different today. We're going to be bringing in just a moment, Jason Webb, who is somebody who came to one of our in-person events, and we have just been so proud of his progress in terms of where we've seen him go. One day I was on YouTube and I see him popping up. He's getting interviewed by you know, a major prop firm that he's funded with. It's very exciting news just to see him fly, kind of thing. We're going to have him on the show in just a minute. We're going to have an exclusive interview. It's almost like a TV station at this point. We got an exclusive interview lined up with the rising star here, Jason Webb. Again, he is a funded trader. He's someone who uses, similar to what Frank and I are all about, fundamental sentiment analysis as well as technical analysis, combining all three to get better results in the markets. He's an EDGEFINDER user. He's a friend of the channel. He's been a long-term supporter of us, and we are super excited to have him on the show in just a second. In just while we do this transition here, getting him in here, if you guys could just spam the chat with "Welcome, Jason," this would mean a lot. This is somebody who, again, started out as an audience member and is now funded, doing his thing. EDGEFINDER user. I mean, it's a cool story, and I'm excited for you guys to meet him. I'm going to be taking a quick break while we do this interview to listen into this, but alongside you guys, I'm very, very excited to welcome Jason to the show. We're going to do a quick break, and then we'll be right back for a little bit with Jason Webb. So right after this. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it. I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free EDGEFINDER, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below. Frank!
There we go. Okay. I noticed the icon didn't go away from me. Jason, how's it going, man?
How's it going, Chandler?
Yeah, but you remember me. Oh, that's awesome. We met at the, for those of y'all who don't know, who weren't at the seminar that we did, me and Jason met at the seminar. That was actually really awesome. I saw you walk in and I almost immediately knew. I was like, that's gotta be
I was
Jason.
surprised. Yeah, Nick knew me right away too. I was like, how do you remember so many people?
Yeah, well, you'd be surprised when we see some regulars in the chat. Like we're always like, oh, there's this guy again. Oh, we see him again. Like Vanessa was at the seminar too. She won an EDGEFINDER a minute ago, so that was pretty cool. Yeah, it was pretty awesome. I've never really done an interview before. It's been I guess since college. So you're gonna have to give me some mercy here. But I got some questions.
Sure.
And the first one is, how did you find out about A1 trading or Trader Nick, or whichever came first?
How did I find out about A1 trading? I think it was just looking up on YouTube of like forex strategies or something, like a year and a half, 2 years back. I found Trader Nick, kept watching a lot of his videos, noticed that he did live streams, so kind of just hopped on a lot of his live streams. Really liked the trading style. It's a lot different from what I was doing back in the day. Back in the day, I was doing a lot of scalping and things that just didn't really work out for me. So Trader Nick, his strategy really helped me. I don't want to say he got me funded to be like overall, but there's a lot of personal skill you got to put in there. But it really helped getting me funded and getting me profitable and stuff. So it was a lot of his live streams, just staying consistent, watching his live streams every day. Pretty much that.
What do you happen to remember when, like, the time frame when you first started?
Yeah, it was about a year and a half, 2 years ago. Finding Trader Nick at A1, or
just... well, I guess both. Yeah. Oh yeah. I started with Nick, I think September of 2021.
Okay.
So you probably found us about the same time.
2 years ago. Yeah, probably around there.
Okay, cool. Well, it's nice to know that the live streams are paying off for viewers. Then.
You guys are doing an amazing job. It looks like kind of a lot of work.
Oh yeah. Well, today, we were. I think Nick brought up the idea we're going to do 6 hours, and then me and James, our jaws went.
Yeah.
I beg your pardon, but we're doing it. We're hour 4. But
I'd want to go home.
Oh yeah, it's getting. I can tell Nick is getting to the end of his wits here. He's even got to do a podcast episode after all this is said and done. So that'll be fun for him. So what did you think of the in-person seminar when we put that together? That was something we'd never done.
For another one. Yeah, it was really nice. I mean, it's more for newer traders who would need to get more information and are really getting into trading. But there were a lot of golden nuggets there, even for someone like me. But it was really fun. The food was really good. I would recommend.
Oh yes, it was.
Throw another one for anyone to show up. It was really nice.
The Omni Hotel is not kidding around with their.
Yeah, I missed my
catering.
flight on the way home, so that was fun. But
yeah. Oh, you missed your flight home? Is that what you
I
said?
missed my flight home. Yeah.
Oh no.
My girlfriend.
Where'd you come from?
I had to catch another flight to Ohio. My girlfriend had to drive me drive to Ohio and get me.
Oh no. Oh wow. Well, you got a sightseeing tour then.
It was worth
you
it.
got a little more than you bargained for.
It was definitely
Anyway, I guess we should talk trading here.
Sure.
I'm not much of a trader myself. I competed in the office competition. I didn't do so hot.
I watched the
yeah.
No.
Yeah, they even gave me a pass because I lost what was it, like 5K and a one click of a button. That was terrifying. Yeah, that was not a good day. I felt the weight of the world on my shoulders that day. But I wanted to ask you, what kind of stuff do you prefer to trade? What's your go-to?
Yeah, so I like to trade a lot of the indexes and gold. Those are my real diamonds. But I do dabble in the forex, mostly USD pairs. A lot of stuff to do with the United States economy, because that's where I live. I live in the US, so it's really nice to be able to keep up with the news and our economy than to go somewhere else. But I do look at Canadian dollar, Japanese yen, and all those. But mostly just the US pairs and indexes and gold. That's really what I do dabble in.
That makes some sense because me and Nick were looking at what do people like most, what that we cover on the channel, and basically everything you just listed. Those are the ones that people told us, all right, you guys got to focus on this. So
yeah, it's usually gold and the indices, but that's also really dangerous because there's a lot of leverage that can be implemented.
Yeah,
that
was something. But that was something I learned in the competition. That gold can slingshot to and from.
Yeah, leverage can be very dangerous and scary. So
I guess I should ask, are you more technical based? Do you do fundamentals mostly? Or are you kind of in between?
Yeah, so I'm really kind of all of it. The sentimental, technical, and fundamental. I like to look at it all. What do I like more? I think I like sentimental analysis a little bit more. Sentiment analysis. Mostly the COT data is where I really like to position my trades around. I like to follow where the banks are going. But I do still use my technicals the second most, and then overall sentiment a little bit less than.
So you mentioned COT. Is that something I know you have the EDGEFINDER.
Yeah.
Do you often pull that up
Yeah, that's actually one of the primary reasons I bought the EDGEFINDER. For all the people who watch live streams daily, they know that the COT data comes out in a nasty text document, and it's hard to look at. You really can't decipher that stuff. And there are a couple other free ones you can do, like bar chart and stuff, but they're also pretty complicated to visualize. So one of the main reasons I bought the EDGEFINDER was to look at COT data and be able to track that more easily. And it also just saved me time. I like to not spend my entire day trading and trying to decipher text documents and all that. So saves me.
Yeah, I've seen that document. I know it. I put it as a graphic in some videos, and I saw it. It looks like a fact. It's bad.
It does.
That thing is pretty. I don't know how anybody could sit there, and you need a microscope just to look at the text on it. But so you've got a funded account now.
Yeah, so I trade with the funded trader. I trade with 600K, but I backed off a little bit. I don't trade with them like a ton anymore. I just kind of keep some longer term trades, mostly with the whole regulations that have been going down. I've been stepping away and trying to go a little bit more personal, but I still have some longer term trades going on, and I just take as much as I can out, withdraw as much as you can. But I'm keeping it a little bit more cautious with, the MFF situation that
Oh yeah.
down. And I live in the US, so I'm in one of those areas where, tomorrow all the firms could be down. So
yeah, that was crazy when all that was
it
going
was.
on.
Yeah.
I felt like every 5 minutes Nick was sending me a message. We got to make a new video. Something else has happened. I'm like, oh man, what's going on?
I actually had to make some disputes because I had a couple of accounts with them that were taken away. So
yeah, that was a very, very interesting time to be a trader for sure. Yeah, I saw that you were on. We had some I guess content get sent to us, and you were on the Funded Trader.
Yeah,
is it a podcast?
Yeah, so it was like a podcast. They sent some traders out to Miami, so they flew me out to Miami to do a interview.
Wow!
And it was like a weekend little getaway.
That's cool.
And I could not give. I had to give credit to A1. So I mentioned them a lot. But the crazy part is a lot of people. I don't sell anything. Just by the way, I don't sell a course. I don't sell anything. But a lot of people in the comments instantly just kind of like were backfiring at me and we're like, he sells a course. I'm like, I'm sorry, I don't sell anything. But I do give credit to the people who deserve credit, like A1, who in the EDGEFINDER, the software is definitely worth the money. So
yeah, well, we really appreciate it. We were super surprised. I was like, is that Jason on there? But yeah, that's the internet for you. You show up on the internet, someone's gonna come after you. I made a short for the channel the other day, or I guess a month ago, and it was about, I put in the caption that the JPY is dropping.
Yeah.
And I don't know what I'm talking about. I'm trying my best over here, and everybody just, that's not what's going on. I was like, huh?
I'm sorry, I don't. I'm trying my best.
Yeah. So now lately, I've been really talking to Nick, like, okay, is the wording right? Do I have this? Like, but yeah, that's the fun of being online. Yeah, you show up in the public eye.
Yeah.
So we've got FOMC coming out in just a little bit. What do you think? Do you have any kind of outlook on it? What might happen? Have you been thinking about this?
I'm hoping for no more rate hikes, but we're really gonna have to see what happens. I am currently long the S&P. I chose that one. Really, all the indexes kind of move the same way, but the COT data shows a little bit more bias towards the S&P at the moment. Probably just because of the holdings of the S&P, and trying to maybe get a little bit out of a tech. No one actually knows why the bank is doing that, but I have a trade on the S&P. I've had it going on for since around 4140 on the SPX.
If you have a chart you want to show, be my guest. You can share it if you'd like.
Sure.
Yeah, that's very interesting. So okay, so you're in an SPX trade. I think Nick might be in an SPX trade as well.
Yeah.
Yeah, very, very cool. Yeah, FOMC. Here we go.
I don't know how to do it. Oh, present. There it is.
Oh yeah. It's a present button, and then I think you can choose what tab you want to show. Is Scruffy coming on? Scruffy Trader is not coming on. Sorry to deliver that news. I know who you're talking about. We've had him on the channel in the past. He's a cool guy. Oh yeah.
All right. Entire screen. I am new to this too, so bear with me.
Oh yeah, sure. No problem at all.
Never mind. That will not be happening because I will have to close my browser, which will close the stream. So,
okay.
I've been in SPX for a couple days. Really hoping to reach around 4,300 levels. We'll see what happens with FOMC, but
yeah,
you can only hope for things.
Right. Yeah.
So,
we'll definitely be covering that. And then I think Nick will fall face first into the couch that's in the corner. I don't know if you were on the office tour.
But we'll see.
Yeah, but Jason, it was so cool having you on.
Yeah,
I'm glad you were able to take some time out of your day to appear on the show. That's pretty cool. We've seen you in person. We've had you on the show.
In person, yeah.
Yeah, this is awesome. But I super appreciate you having coming on and take some time out of your day to do this. So, do you have a YouTube channel, like somewhere people can find you? Or
so I don't really make a lot of trading videos. I mean, if there's enough demand for it, I might start making some videos. But I mean, I have this YouTube channel that I can just post a comment. Hi. I don't really do much. I haven't really posted anything, but I mean,
I figured I'd ask just to.
Yeah, I just got a personal Instagram, jason.r.web. I'm just a trader who made it. So we put the effort in and made it. This is my only source of income. It's just trading. And I guess that's it.
Yeah. No, it was, this is awesome. Getting a funded account. I know that's a big goal that most traders have. So the fact that you pulled it off, you have one, and you're being smart with it. You said you aren't going crazy, and that's amazing.
It is a different route to go down, but it is rewarding if you can be, if you can risk not a lot. You can risk manage very well. You can not over leverage. You just take it slow, take your time, patience.
Right. Yeah. No, it's great stuff. But anyway, Jason, thank you for coming on. James, if you're listening, I know you have a little something that you prepared that you might want to show, and we'll get that going. Yep, James sent me a message about that. James has made a funny video for you guys to watch because we figured that there may be some lulls in the stream, but we got something prepared for you.
I love the Oscar, by the way.
The Oscar.
The astronaut one. The editing was really well done.
Oh, thank you. Yeah, thank you. Yeah, me and James we're going crazy over here. We are 4.5 hours into the stream, everybody. Please hit the like button. We would very much appreciate that. It's nice to come out of this stream and say we got 30 likes. So, I'm kidding. We might get more than that. But anyway, Jason, thanks for coming on. I'll leave you to it. Yep, nice seeing you again, and we'll, I guess, see you whenever we see you, because we seem to be bumping into you a lot now.
All right, see ya.
All right, have a good one. All right, James, your feature presentation awaits, and I'll back out of here so you can show that off.
I know. Minus 55,000 ZAR. Somebody tell us, how much is that in USD? Whoa! One of the worst gambles in the forex market.
Go my way, I'm blowing this account. Let me add more trades.
He's adding more.
I know for sure if it doesn't go my way, this account is gone. Lot size 16. How many lot size 16s do I have?
And he's trading US30. He's got buys. So this man is betting that the market's going to go up, and if it doesn't go up, he's going down.
Best broker in the world at RCG Markets. I haven't closed anything today. Oh my God. Let's see how it goes. Let's see how NFP go. Oh my God. Oh my God. Whoa, behave.
98,000.
Guys, this will either make me a lot of money or I'll lose. Oh my God. Oh my God.
Oh, he's up. Okay, he's up 82,000 Rand now.
Let's go.
Oh my gosh, what happened? It was going so well. It jumped right away. He was up, and then all of a sudden just down.
This shit, man. Forex, dog.
I beg your pardon?
Feeling the sting of a big trade gone wrong? What's the solution? Wojak. Isn't this the Wojak guy? Okay. So he's gone long. What could possibly go wrong? I've seen these things. I know some of you guys have seen these. I've seen these like 100 times. They're still funny.
Yes. He bought.
Where lips are the only things that touch.
He went all in.
Don't beat.
He just bought. Just remember. Oh no. Why does this feel just like me? Why does this feel so personally relatable? Okay, Frank, this can't go wrong. Look at how up he's at. Wait, look, NASDAQ.
He's got the same trade.
What are these
open on
symbols?
So many trades open on the same thing. Wait, this is this futures?
I don't know, but
March 23.
Dude, these are half lots on NASDAQ times like 15 orders. Oh,
Okay.
Things are going great.
Nothing's going on here.
Not possible.
We'll
Look.
pull back.
It'll keep going up. Dude,
This
look how
is
many
on the minute
orders.
chart.
One set
He's actually on the
CPI.
30. Oh my god. What is this? Look, it gapped below. Oh, dude, all the orders. Look, watch the orders. Like, you can't even see what the orders say. There's so many of them, and then all of a sudden.
One set to CPI.
Well, it doesn't matter anymore. It doesn't matter what those orders were.
Let's see. Is he going to show like what happened to the account? Oh,
Account blown.
I guess he's happy he got out before it went lower like that, right?
Forex traders blowing accounts. Last part.
oh, he's showing. Oh, Frank, it's a live account. Wait, it's a live account with $7,000 in it.
How can you read this?
Okay, Frank.
How did he lose over 80K?
We're about to find out.
If he's at 7K.
We're about to
overall
find
in the
out.
account.
I don't know. FX Scorpion King, shout out. Oh, he's up. He's up. I can like barely see this. We're like,
Yeah, I have no idea.
he's in cells. He's in.
Oh my. You just stop it there.
Oh, no, the equity is minus 55.
How do you?
That's kind of impressive.
Did he have a stop loss someplace?
Let's see. No, this could be us someday.
This is why
Just
you
kidding.
don't buy
Look at this.
indicators that.
Oh my gosh.
Dude, imagine being that wrong.
I've
Just
never
kidding.
been wrong like that in my entire life. Frank, this is you and me yesterday. Look at the Christmas tree in the background, and what is the potato head in the back? What am I watching?
His reaction, not enough margin.
On a $10 account?
It's easy.
How do you even trade the US30 on a $10 account?
I don't know, dude. All right, he's in cells. We're in cells here.
He's just still going.
Just sell one. I've been told that this concept, Frank, the comment section has let me know that when they do this, where they put on like a bunch of orders at once, it's called barcoding.
Okay, I can see it. But
I guess it kind of looks like a barcode.
But why take so many small lots? Like, if you're gonna enter multiple trades, why not, step up the leverage some?
Well, if you take a lot of little lots, you can't lose a lot of money. Listen to the chanting. Listen to this chanting very closely.
It's a thing. Wait, Scott.
It's whisper.
It's a thing.
Please don't go up. Just don't do it. I want this guy to win. Oh, yes. Yes.
Go. Get out.
Yes.
Get
Yes.
out, get
Close
out
it. Close
now,
it.
get
Close
out
it. Close it. Close it.
Close it.
Ah!
How is it moving so hard?
I've never seen a
What's
chart move
happening?
like that. I've never seen one move like
What kind
that.
of brokers are these guys using?
That's
Not
how you know
quite
you're
right.
really good.
You're looking at it too much.
This simple for
God, this guy's
simple
back.
forex trading strategy blew up my $100 account. What you guys are doing?
This guy is so funny.
helped me
And wait for the
blow
price
up
to make
my
a shot.
account.
Did he say help? He did not say help, did he?
Simple forex trading strategy blew up my $100 account. What you
Okay,
guys
thank God. If he had said this helped my
are an uptrend, wait for the price to make a sharp retracement. At this point, draw a zone, and the next time the price comes.
Maybe he means like blow up in a good way. Like he's like, I don't mean
No,
really blow it
that's
up.
what he means, but like,
There's no
that's
way.
just not the right way to
Dude,
say
he
it.
must be memeing, right? He's not
No,
serious.
I mean, I think he looks serious.
I mean, what he's saying is not bad. It's just the way he talks sounds like he's like kidding.
How to stop blowing up your trading account with this
I
one.
thought he said start for a second.
Okay, so this guy, the other guy, wants you to blow up your trading account. This guy's trying to stop you from blowing up your trading account.
So which is it? Do we want to blow accounts or do we not want to blow accounts? I can't tell.
No, exactly.
I don't know who to listen to.
Hey, wait, this is me.
Oh, let's react to this one.
Oh God, what is that haircut?
So lost his 53k euro.
That's Peaky Blinders. You.
Oh, they are setting this man up. Watch how a forex mentor lost his 53k
Whoa, hold on.
euro.
Pause this. We're reacting to you reacting to a reaction video that's currently being reacted to by us.
That's wild. Keep on holding. This one was good though. This is a classic. So this is like, okay, so Frank, as far as I know, this is like somebody who was like in a live room with all of his students, and he was like all out gambling on his account. At least that's what was told to me in the comments for people.
His students?
Yeah. Holding Thunder Fire hodling from 53k euro to 1k.
When you see hodling, you know.
Throwback to the good old days.
2021, baby. AMC, GameStop.
Yeah.
Still holding.
Why is my reaction the same 2 years later? Oh my gosh, the account's gone. All of his trades got closed out. You keep on holding, guys. Let's get a rerun of that.
You keep on holding.
I mean, he's
You
up
keep
right
on
now. Now he's not.
Oh.
We don't need videos on how to blow accounts. We do that on our own.
The price has increased a lot. I could also sell with profit now instead of buying at an even higher price.
No, please don't sell me. I'm still growing.
Can you imagine if your chart talked to you like that? The chart tells him just don't sell me yet. I'm still going up.
What?
You gotta be kidding me, man. The chart has a face on it.
Still growing. If you sell me, you will lose potential gains.
But you can also go down in value. Now I will at least cover some gains already.
You see, I'm already more valuable than I was a few seconds ago. I'll probably grow even.
Has anybody else ever felt like the chart is talking to them like this? These are just relatable trading things. That's why I love these videos. They're so funny.
But I have to dollar cost average.
You were already about to sell me. Stop acting like you're a responsible investor and let me grow further to maximize your gains.
Okay, you're right. I can make a lot of gains as long as you're growing.
Oh
my
no.
God.
Instant pain.
I should have sold back there. You can't time the market. Let's forget about it and buy some more.
Oh no, wait. He's breaking the plan. He bought
Are
some
you sure?
up here and now he's buying more.
I'm literally still decreasing in value. You can get me for way cheaper.
Go away. I'm going to buy.
Wait, so now the chart is completely telling him the opposite. Man, this is so relatable to so many traders, I'm sure, myself included. The chart is literally telling him when the market's over here, it's going up. Chart's saying, don't close me. I'm still going up. And then when it's going down, the chart's saying, just wait, you can get me for a better price.
And stick to my dollar cost averaging strategy.
You see, I'm even cheaper now.
Damn it, you're right. Okay. I'll wait
Oh,
while
he's
you
giving
decrease
in.
in value, but at the slightest sign of you growing, I'll buy.
Good. I know you can do it. You can time the market.
The chart's saying, I know you can do it. You can time the market.
Really?
Psych.
Pump it.
Oh no. It said psych and went straight up.
Stop this. Dollar cost averaging is easy. I just need to buy and don't look at the price. But what if it will go down further? I could buy it for cheaper and I don't to buy while the market is decreasing. What are you doing, Wojak? Focus. Just buy it now.
You heard of forex, bro?
Nah, I wear a medium.
Nah, fool, the app, fool, you can make money off your phone, bro. Changing money in, bro, for real.
Oh, really? How much you make?
My dude in my group chat, bro, my mentor, he made $800
That is the go-to.
a day, bro.
How much did you make?
But this other
I like
bitch in
this
my
guy.
group chat, she made $400.
Nah, I'm asking how much you made.
Me, bro, I just started, bro. You know what I'm saying? I just
Always the same answers. It's so funny. This guy's hilarious.
started, bro. Come on, bro, for real. Look,
Nah.
let me show you something, bro. Look at
Let me
this.
see.
Look at that. See that? We
The
going
fuck is
up from
that?
here, bro. What you mean, bro? Look, it's money going up, bro. We only going
I
up,
don't even know
bro.
what that is.
See, that's your problem, bro. Scared money don't make no money, bro.
Extra rainbow dip.
He's working his job with his computer literally to the side of the customer. So he can keep one eye on the customer and one eye on the trade. And his new solution now is I can't possibly lose if I just watch it 24/7. And he's just stepped away.
Yes, please.
Sure, 1 second. Here you go, enjoy your coffee.
Oh no. Oh no, don't do it to him. Don't do it to... Okay. Okay, he's in... I was wrong. So far, so
Finally
good.
some luck.
Happy
If
guy.
the price goes down, I might lose all these gains. I can avoid that by putting my stop loss order at a higher price. Now I have guaranteed gains. Damn it, the price rises even further. I don't want to miss out on these gains.
Okay, so he's using a trailing stop. I don't hate this. You guys, if you watch my channel long enough, you know I love trailing stops. That's how I like to follow the market.
I made guaranteed gains now. The crypto gods are finally with me. This can't go wrong. Wrong.
Oh no. Why'd you have to say it? Why'd you have to say it, Wojak? Is that his name? Wojak? Wojak? Why'd you have to say what could possibly go wrong? You just challenge.
Bogdanov, he is securing profits with his stop loss orders.
That's okay. I can still make him feel like shit.
How?
Imagine the pain if you make you $100 profit, but it could have been 20.
Oh no. This literally happened to me the other day.
$2,000.
I understand. It will be done, my lord.
My lord. This guy's henchman is calling him my lord. That is hilarious. Okay, so now the bad guy, the Bogdanov, his strategy is going to be take his stop loss out and then make him feel terrible.
Look at
So he's locked in gains and now he's feeling great.
that. I sold at the peak for once. I love these stop loss orders.
Man, this is too relatable.
Nice job, dude. Congrats on your $200 profit.
When your trade goes to the moon with 8 cap, this is what it feels like.
3, 2, 1.
All right, we are back. I hope you guys enjoyed that little compilation of some of the funny TikTok moments and reaction moments from some of Nick's reaction videos. We are back with Frank, and we are also back with the wheel. So we are doing our second giveaway of the day. We are going to give away an EDGEFINDER 100% for free to one of you people watching. Shout out to you if you're still watching right now. We have been going for nearly 5 hours at this point. We have a little over an hour to go. Let us know in the comments, how long have you been watching today? I see Tim left and came back. Tim, it's good to have you back. Let us know, how long have you been watching? 1 hour, 2 hours, 3 hours, 4 hours, 5 hours? Has anybody been watching for 5 hours? Frank, do you think anybody been watching for 5 hours?
I hope so. We've seen, people stay in here for a while, so maybe they just have it open in the background or something.
I do. I recognize some of these names. I recognize Alex. You've been commenting a lot. Mr. Hustle Hard has been commenting a lot. Yeah, a lot of you. Mitch has been watching for 5 minutes. Welcome in, Mitch. If you guys have been watching all day, that is incredible, and we appreciate your support and hanging out with us all day. But let's go ahead and let's get some names on the board, because we have a giveaway to get to, and we're also gonna answer some more of your questions about the EDGEFINDER, because when we did this earlier, there were so many questions. It would have taken us 5 hours to get through all of your questions. But we're gonna do something a little bit different. I have a few A1 trading trivia questions. Mr. Hustle Hard, I have A1 trading trivia questions for you. I'm going to ask, how many questions should I ask, Nick? Or Nick, I looked at the name. It says Nick, not Frank. Frank, how many questions should I ask?
Probably should have changed
6,
that from
7?
Frank, not Nick.
Yeah.
You asked how many questions you should ask?
Yeah, pick a number 1 to 10.
Well, how many sections are on that wheel?
There's 18 sections, but I have a plan to fill out the rest of them. I'm trying to figure out how many questions I should ask.
Let's do 10.
10. All right. I'm going to ask 10 A1 trading trivia questions, and we'll see how many you get right.
And we'll see if I can get them right too.
Okay. Starting off with a pretty easy one. Who is our... Okay. I should also say, comment the answer to the trivia question. If I see that you are the first person to get it right, your name goes on the board. If it says something different on your screen, sorry, I can only see my screen. So whatever it says on my screen is what I go off of. If you get the answer right and you're the first person, you get on the board to spin for a free EDGEFINDER. So with that out of the way, who is our Tuesday stream guest? Happened yesterday. Who was our Tuesday stream guest? Stream guest every Tuesday.
It's not me or Nick.
All right.
We're the host.
All right. I see the answers coming in. And the first person on my screen that I saw get it, Mr. Hustle Harder. Congratulations, Mr. Hustle Harder.
He hustled for that answer.
Mr. HH. Mr. HH, Mr. Hustle Harder, you got it first. Tom is the correct answer. Tom is the correct answer. Frank, did you know that was the correct answer?
I did know that. Tuesday Tom, or Tom Tuesdays.
Tom Tuesdays.
Those are my favorite days.
Next question. This question is maybe a little bit more difficult. There are not a lot of people that work here at A1 Trading in the office. What is the name of our newest team member, our newest hire at A1 Trading? This person has been here for a while now, but they are the newest member of the A1 Trading team. Comment who if you know the answer. I'm curious to see if we know the answer. Natalie.
That's not any one of us.
Kind of close. Chandler, Harry, Tom, Nat, Julie, James, Mrs. Beast. Hey, there it is.
There it is.
Goran Jacobson. You got it right. It's Hallie. Hallie is the newest team member here. Oh, I'm writing Hallie's name on the board. Goran. Not Hallie. Cross that out. Goran. All right. Next question. Try and go through these a little bit quick. Okay, this is a good one. What was the name of the team that won the office trading competition? I'll give you a hint.
Come on, guys.
Both myself and Frank were members of that team. What was the name of our team that won the office trading competition?
This is a tricky one.
EDGEFINDER team, Nick's team, A1.
Dexter just said his name.
Dexter said his own name. A1 Bowls was close. If nobody gets it, I might give it to you, Trader JE11. I might give it to you if no. Well, now we have a predicament because. Okay, there we go. That's the correct answer. It was Team Pit Bulls. It was the Pit Bulls. Trader JE11, you were close. A1 Bulls was close. E-Trades, PP Bulls. I don't know if that was a typo or if you meant to say that, but Pit Bulls is the right answer. So I'm giving it to Matrixy.
Yeah, Pit Bulls it was. Trading Worldwide.
Matrixy, your name's on the board. I don't know if we have time to get through 10. This is taking a long time. So I'm going to do 2 more.
You want to do 5?
Yeah, let's do 5. Let's do 5, and then we'll get into some other stuff. Question number 4. What is Frank's birthday? That is a real question I have, but I'm just kidding. That's not the real question. It's July 16th, everybody.
It is in 4 hours.
I didn't expect anybody to actually know that. Okay. Ooh, this is a good one. I don't know. I might save this one because this one's hard. Oh, okay. Dang. Some of these are a little hard, but we're gonna see. Okay. What was our Black Friday theme last year? For the entire month of November, we had a sale theme, just like we're doing space. This year's theme is space. Last year's theme, what was it? We'll see if anybody gets it.
I don't even know that.
You don't remember?
Well, I wasn't here either.
Oh, that's true. You weren't here yet. Well, you were, but you weren't.
In spirit.
He was here in spirit. Zombie. I like how people were actually guessing your birthday. A lot of people saying zombie theme. It was not zombie themed.
Barbie themed. That's 1 year early.
I'm gonna give it 5, 4, 3, 2.
That's Shrek.
1.
That's a good theme.
Nobody got it right. It was gold themed. We did a gold theme.
Oh, that's kind of lame.
It was okay. Let's see. Do you want to pick a name since nobody got that one right? Would you like to pick a name to go on the board?
I really like the Shrek comment. In fact, I kind of want to do
Ella,
a Shrek theme for one of these ceremonies.
Ella, congratulations on writing Shrek. That gets your name on the board. Ella. All right. Last question. Last question. All right, we'll do an easy one. This is an easy one. 5th and final question. Who does live coaching calls and webinars at A1 Trading? Who does live coaching calls and webinars for A1 Trading? I don't see the right. Oh, yeah, there.
I see it.
What? Okay.
That's a long name.
This was the person who got it first. I could probably fill up the rest of the wheel with all of that. So I'm just gonna write is Mimi.
There's no way that's your whole name.
Is me.
That's like a sentence.
All right. I have more questions. Maybe at the very end of the stream. It's a meme name. Don't worry. I would like to know the story behind that. Maybe at the very end we'll do more trivia questions because I do have a lot more trivia questions. This was fun though. This was fun, but we have other stuff to do, and we have a lot more names to put on the board. So don't worry, we're still putting names on the board. But Frank, if you could share the EDGEFINDER with us for the next 10 or 15 minutes or so, we're going to do what we did earlier. If you didn't get your name on the board, don't worry, because I'm about to start writing names on the board, and all you have to do to get your name on the board is ask a question about the EDGEFINDER. We have our 45% off sale going on right now for Black Friday, the month of November. We're doing 45% off. It's our biggest discount of the year. There has never been a better time to get our software and products than right now during this sale. So go ahead and get it. And we've also launched a brand new product. It is EDGEFINDER Alerts. You can now get EDGEFINDER Alerts sent directly to your phone. So we have a lot of cool stuff going on. I'm putting names up on the board. Frank is going to answer your questions. All you have to do is leave a question about the EDGEFINDER or about EDGEFINDER Alerts. We're going to go through some of your questions over the next couple of minutes. I'm going to put names on the board from people asking about the EDGEFINDER at random, and then we're going to spin and give away an EDGEFINDER. So I'm going to go ahead and start with that. Frank, if you would like to, here, let's see. Let's find a question here. Well, here, Izam said, can I get alerts to my phone? Frank, why don't you tell him if you can get alerts to your phone? And I'm going to put his name on the board.
Yes, you can. If you have Discord, if you're in our trading community, you will get Discord alerts from the EDGEFINDER that can go onto your phone. So as long as you have this add-on, you'll see Discord messages from the EDGEFINDER. Just the EDGEFINDER doesn't send you one from Looker Studio, but you'll get one on Discord if you have purchased the add-on. But yeah, before we had no alerts at all. So this was a good, I guess, reliable thing to look at every now and then.
So Trader JE11 has an interesting question here. He says, how does EDGEFINDER determine risk on / risk off? So for people who aren't familiar with risk on, risk off pairs, maybe you could explain that really quickly and also show him the risk on, risk off meter.
Yeah. So in top setups, we kind of measure that too, based on what global markets are doing. If there's a general risk on or risk off sort of sentiment going on, depending on what the central banks are doing and how interest rates are moving. But we also have built a separate risk on off tool, which will just show you in the short term, a little bit longer term. So if you're a day trader or a swing trader or even a longer term swing trader, we have gauges for that, and it measures performance of various things such as the S&P to the yen futures to bond yields to the VIX. The VIX is a very important tool for measuring volatility, and it's usually quite the opposite of what risk on pairs do. So when you see something rise in the VIX, you see prices of the VIX rise, you kind of look towards selling in the market and bearish tones. And when all these things line up, you sort of get a bearish or risk off environment. So we have the meter running from negative to positive, negative being risk off, positive being risk on. And then it will show you which pairs are bullish or bearish as a result. Not pairs, but individual currencies. So if you're looking to buy Aussie in the last week, we're looking at risk on sentiment. and Aussie's been sort of, rising with the stock market. Gold has been on a tear as a result. So these things will just show you over time. You can look at dailies, weeklies, monthlies of, what is the current gauge and what will be the gauge later on. And if the monthly is pretty risk off and the rest line up with that, then you can probably assume that, okay, we're in a pretty risk off territory. But right now it's mixed. We got a mixed daily signal, a risk on weekly signal, and a risk off monthly. And monthly is because October was incredibly bearish for a lot of those risk on assets. So that's something you can look at if you want. We have other metrics that we look at for risk on and off, and it has to do with kind of what the Fed is trying to do, what interest rates are doing in the moment. We have our 2-year yield plotted on the chart. This is just 2-year bond yields. Right now we're looking at the gold commodity. So whenever the 2-year is above a moving average, this is an 8-day moving average, it's kind of a short-term projection. So if we see a cross above the moving average, that's bearish, because if yields are rising over an average amount of time, then it scores it as bearish in the short term. So this number is constantly interchanging, but it gives you a good read on, our yields kind of staying where they're at? Are we seeing a lot of crosses, or are we seeing a lot of yields above or below the average for an extended period of time? And so right now what we've seen is a yield crossing above the 8-day moving average, so we get a -1, something like that, just a general risk on or off sort of score, and that goes into the interest rate score.
All right, so you guys have been great with asking questions. I should say. I'm gonna try and rapid fire here through a couple of these questions. We'll do a few more, and Nick is actually going to join us here in a couple minutes as well. So let's see. Steven says, "Does EDGEFINDER show oil?" It does. Frank, do you want to just show him the what the oil page looks like really quickly? I'm going to look for another good question here with individual kinds.
Yes. So
this
we
is our
have
oil
commodities. We have gold and oil as our commodities, and you can look it up on under the All Trade Ideas tab. This is a general breakdown of just how things are looking. It's similar to currency pairs, but because oil is very driven on it's driven on a lot of other things that currencies aren't, that we have to include other stuff. So economic figures, this goes into the indices as well, but they do take much more of a toll or an impact on gold or on oil than they would on some minor pair. So we got retail sales change month over month, change in manufacturing PMI. We have its own inflation study. So yeah, you can check out oil on the EDGEFINDER as well. It's all there for you.
Gail, I've actually seen this question a few times, but Gail asked, "Does the EDGEFINDER cover exotic pairs?" So I believe that the ZAR, the South African Rand, is considered an exotic pair. I am not sure which other pairs are considered exotic. So Frank, maybe you could clarify if we cover any other exotic pairs other than the ZAR.
No, we don't really cover exotic pairs. We do majors, minors, indices, gold, and oil. So yeah, there's not
all of the main stuff. So US dollar, euro, pound, yen, Swiss franc, New Zealand dollar, Australian dollar. And we also do have USD ZAR which I do think classifies as an exotic pair, but that is the only exotic that we have. We also have indices, not just US indices. We have the JP225, the German 30, and the UK 100 as well. So there's, I don't even know how many assets, a lot of assets, individual assets that we track here in the EDGEFINDER, and it's pulling in so much data for each of these. Okay, let's see. Did you have anything else you want to say, or should I get another question?
Yeah, no, I mean, we don't have exotics, but we probably will look to add them at some point. We just had our main focus on, you know, what are most people trading, and you know, a lot of traders just don't talk about exotic pairs, so we haven't focused on it.
Here are two quick, easy ones. John asked, is the EDGEFINDER web-based, or is it software that you have to download and install? It is web-based. One of the perks about it being web-based is you can actually pull it up on your phone as well. We do have a phone layout to it, or if you are capable, you know, if you're using like a tablet or something, you can pull it up on your tablet if you have access to it, as long as you have that link saved. But yes, it is web-based. And Tenday, I believe I'm pronouncing that correctly, Tenday or Tendai, said, am I too new to adopt the EDGEFINDER in my trading strategy? And I don't think so. No, I don't think that you could be too new or too grounded in a strategy to use the EDGEFINDER, because at the end of the day, you should not be basing trades solely off what the EDGEFINDER tells you. The EDGEFINDER is supposed to help you with your trading, help you find setups and potential trade setups. So, for example, if Frank pulls up the top setups page here, we have a few different assets right now currently that either have bullish, bearish, or very bearish biases. But just because it says very bearish doesn't mean you need to open up your chart and immediately take a sell. You should look for possible entries, good entries, maybe wait for a retest and a pullback, something like that. This is a tool that is going to give you as much information to make you, to give you the ability to make the most educated and best entries that you can. This is not a signal service. We're not just going to tell you when to buy and sell. This is to help educate you and make you the best trader that you can be based off of your specific strategy and trading styles.
Right, and it's meant to be for all levels, all different types of experienced traders. So if you're just starting out, this is meant to be a very easy thing to look at. And if anything at all, you just look at these scores here. They tell you like strength and weakness of one thing over another, and whether it's bullish or bearish, and that's just how it goes. And all these other tabs are there for you to dive deeper into what we're scoring and what we're doing. But overall, it's just a easy to use and very readable tool. So it's mainly for all types of traders.
William says, can I change the color scheme of the EDGEFINDER? I wish. Unfortunately, that is not something that's available to EDGEFINDER users. The way it looks is the way it's going to look, but that would be cool. Let's see. Edward says, is EDGEFINDER a monthly subscription? It is not, but it is 45% off right now. And you can message in and ask us about getting it for a super discounted price. Let's do one last question. Maybe we can even get Nick's input on one last question, and then we'll spin the wheel, and we have some more stuff to get to. So let's see. This person says, in the absence of Nick and Frank, will the EDGEFINDER still function? Are all the data updates auto?
Yes.
Yes. The data
that would be a heck of a job to have to, like, if Frank and I were manually doing everything, I think we would die.
Yeah.
Nick and Frank do not manually update the EDGEFINDER. They do add updates to the EDGEFINDER regularly. They have recently added a bunch of new charts and a bunch of new data. They're pulling data in from newer places. They've updated some scoring algorithms to make them more accurate. While we're doing this, we should also shout out Giles, who is one of our software developers on the EDGEFINDER. He's like the main guy behind the coding of the EDGEFINDER. Nick and Frank are kind of like the idea guys and do a lot of the design stuff. And Giles is kind of behind the scenes working, but it definitely could not be possible without the help of Giles. But no, with Nick and Frank absent, which I hope never happens, the EDGEFINDER will still function, and the algorithms and the AI built into the EDGEFINDER pulls stuff automatically, so they are not updating it manually.
Let's do our spin, James.
Let's do the spin,
right?
All right, so the board is full. We're gonna spin and give away a free EDGEFINDER. I hope that the person that wins is still watching, because that was an issue earlier.
I'm
good for now. But
you're hanging freely in the air.
And the winner is John H. John H. I believe we answered one of your questions. Let me scroll up a little bit. John H. John H. What was your last name? Harrison, I think it was. John Harrison, I think was the person. Scrolling up.
John Harrison. Yeah.
Did he just comment?
I do see it.
No, that was earlier. He commented earlier. 120.
You see John here? Yeah, there's John Harrison.
He's here.
Yep.
What's up?
John, message in to the chat. We're gonna drop the link. If you message in, again, nobody pretend to be John Harrison. We will be able to know who John Harrison is. You can message in. You just won the EDGEFINDER for free. Congratulations, John. I know, Mr. Hustlehearted, you got your name on the board. But we do giveaways every once in a while. So if you're a frequent live stream member, don't worry. You'll have your chance again. All right, so we actually had a poll. We had a poll that we're going to go over here. Let me see if I can pull it up here. We have a poll that we're going to go over that I put in the Telegram this morning.
By the way, if you guys aren't in our Telegram, join the Telegram. We do polls like this all the time. James putting out some stuff. You can participate. While he pulls that up, you guys can vote in future ones if you join the Telegram.
All right. Wait a minute. The thing went away. Hold on a second. There it is. Okay.
We're just going to
share that.
And then afterwards, you guys are off.
All right. So here is the poll that I put up. It says, are you going to keep trades open during FOMC? Yes, no, I have no trades open, or I always trade after the news. Nick, what would be your answer to this question? Are you going to keep trades open during FOMC, or are you going to trade after the news?
My answer is yes. I already voted, and I voted yes. Just because I do have trades that are more swing trade oriented, and I oftentimes do hold through news. I will clarify, I don't gamble on the news release. I just hold trades that happen to have news that play out while I'm holding them.
I'm a little surprised that this answer is so high. 48% of people say yes, they want to trade during crazy news spikes. I figured that it would be high, but I didn't think it would be 50%.
Yeah, that's pretty high. 40. I'm surprised by it too, but I think Frankie, you're a yes too, right?
Yeah, I think if you have trades open, you're probably likely going to say yes, especially the initial reaction on things like the FOMC statement's going to be a wild direction in probably both ways. So
yeah,
might as well see where it goes if you're somewhere in profit.
Yeah.
I act like I'm surprised about people keeping their trades open. And I have talked before about how I occasionally trade on a demo account, and I know that I have a USD CAD trade open on my demo account right now that I don't plan on closing out through FOMC. So we're going to see what happens with that trade as well.
James, are you long or short dollar CAD?
I have to double check. I honestly don't remember. I when I was pulling up TradingView earlier, I believe that I had put a limit order in on USD CAD. And when I was looking at the charts earlier, getting that information for the news segment, I noticed that I had the trade open. So I am currently short USD CAD. In fact, I can show you my entry if you want. I need to put the executions back on. Okay, so here we go. So you guys can roast my USD CAD setup here. I'll share this with you guys.
I'm curious how it's going.
It's not going well at the moment. Actually, it was in profit earlier when I was looking at it, but it is no longer in profit. So this is my setup right here. I shorted USD CAD on this candle here, on this candle right here yesterday. When I was looking at it earlier, I was actually in profit, I believe on this candle here. I'm looking at the 1 hour chart. And if I go out to the daily, I can kind of give my thought process behind this. We hadn't really cleared, we hadn't closed above this level here. You know, price kind of came up, but then came back down. Price went way up here, but didn't close all the way up here. The highest close as of recently was up here, and price had continued to go down. So we had a high here, and then a higher low right here, and then a higher low here. We kind of broke out of this range that I had marked up. So I kind of thought that price was going to test these highs and then go back down here. At least that was my hope. But that does not seem to be the case. It looks like price is, well, it looks like price is actually broken through this high right here. So I guess
James, we'll get some more clarification on that with the Fed news pretty soon. That will be pretty dollar impacting. I got to kick you guys out because I got a couple things I got to get done before Chris joins us. Thank you guys both for covering for us, getting us through, and got to kick off our final hour here.
All right. Well,
see you
good
guys.
luck with FOMC, and I hope that you have a good stream with Chris.
Thank you, James. Again, we'll let you go. You guys take a break. I know it's a lot. So James the man, everybody in the audience, big thanks to James and Frank for getting us up to the hour. So James, we'll catch up with you later.
Yep. See ya.
All right, guys. It's game time. We're coming into the final hour of the show. I've had my tea. I've had my coffee. I've had my Coke Zero. I've had another Coke Zero, and I've had a boatload full of water. So we have no excuse. The home stretch is here. I've got about an hour and a half left on camera. About an hour will be on the stream, and then I got to go 30-minute podcast after the stream. Today is a crazy day on the content side, but we're getting through it, and we're going to get through it together. If you guys are enjoying the show, do me just a solid favor. Hit that thumbs up button. Share the stream with your trading friends. It's time. I need that voice, that raspiness. It's time. You know, the announcer. I got to rip off the jacket. I mean, it's time, guys. We're getting serious for Fed meeting. All right. So where's the NASDAQ at? Where's the dollar at? Where's everything trading at here as we come in the final stretch? And again, running this marathon has been a lot of fun. I want to thank you guys all for sticking around. We were talking about it earlier in the office. A lot of you guys have stuck around pretty much all day. Let's get us some charts. Let's get ready for this event before Chris Pulver joins us for commentary coming into the interest rate decision for, of course, what we've got here, November 1st. 2023. So, all right, big start here. I want to, well, actually, you know what? I just got a text from Chris Pulver. See you soon, Chris. I just got, looking forward to it. We've got a loaded final hour for you guys. It's big. We got Chris Pulver coming in. He'll be talking a little bit with us about markets, what we should expect, what we should be ready for. And I want to start where we usually do. What's the latest with the US dollar? Well, the US dollar defies gravity here and does seem to be wanting to break higher. Now, be careful with this, guys. We've got Fed meeting stuff right around the corner, but it does look very much so like the dollar doesn't want to quit. This candle, big rejection candle, but then so far we've just acted to fill that wick. Now, again, there's still 20 minutes left on this. About 20. No, there's an hour and 20 minutes left on this 4-hour bar. But let's take a look at the hourly chart. The hourly chart showed support was held very well for dollar bulls. Dollar price action seems supported as we drift closer to the announcement of the Fed's decision on interest rates. And again, if we could, guys, on the producer side, if we could drop the links everywhere, if we could get it out on the Discord and the Telegram and just anywhere that we can to kind of ramp up the get the viewers back in here for the big event, that would be great. I meant to do that before I stepped on, but we've got a busy schedule to close out here. Okay, so again, big push to the upside for the dollar index. 106.8 did hold for the bulls. And I think path of least resistance price still wants to move higher. We do expect kind of a hawkish hold from the US Federal Reserve with their commentary. It's all about the Fed, the conference, guys. A lot of people are going to join for, of course, the statement, the rate, whether it gets hiked or paused. Of course, there's almost a certain chance that it is going to stay flat. But it's all about that commentary that follows, whether the Fed is going to stay unimpressed with the data that we've got, all the economic growth that we've seen. If that's going to be unimpressing to them, then there might be more in the cards for rate hikes, so on and so forth. Another market that a lot of traders are watching for is gold. Gold is sitting at a support level. It tried to rally off of these lows and fell right back down on its face to sit where we currently sit, which is 1980. This 1980 level has been so meaningful to both the bulls and the bears. From the bull perspective, this area has been a launch pad and a level of, a stronghold level for the bulls, right? They don't want to see this price break out lower. If this does in fact break out lower, it could signal the end to all this bullishness that we've had on gold recently, despite geopolitical events remaining kind of a persistent pressure to the upside on gold. If we see a Fed that is in any way incredibly hawkish again, like renewed hawkishness, do not be surprised that despite war concerns and so on and so forth, gold could still fall flat on its face and fall through these levels. But it all comes down to the commentary. Where am I generally positioned? I'm generally positioned thinking gold has more upside. Same thing with stocks. I am bullish going into the event. As I've mentioned, I picked up a long trade. I pointed out I am long SPY and disclosed that several times here on the stream today. Picked up an S&P long this morning as it drifted back into support, broke out, clean reversal here. But I know when to call it quits. If we see something with the Fed today that totally kills the idea for me, we will, without hesitation, look to manage risk on this trade. Thought process in the S&P 500, we have a good pullback, and I know we're going to talk about, I know this is a good conversation for Chris and I to talk. We always talk indices when he comes on, talking a little SPY, talking Qs, talking all sorts of good stuff. We might even get some gold and dollar commentary, but he is here. He is coming in hot. And before we bring in Chris, let me just say, if you guys have not already heard, we are doing our 45% off Black Friday sale. If you're somebody who would like to get access to our trade alert service, our coaching webinars, or if you'd like access to the Edge Finder. I saw somebody asking if we have pricing options or different options available for the Edge Finder. The answer is yes, we do. We have many different options. And for just a quick announcement, for those of you guys who are here with us for the big event, we are going to be doing 50% off. This is a limited time for this hour only. We're going to be doing 50% off, the complete half off discount if and only if you message us right now while we are live. We've got some people in the office who are ready to help you. If you've been thinking about getting Edge Finder Smart Alerts, which we just dropped here today, or if you'd like access to our Discord notifications, trade alerts from Frank and I, or coaching webinars with Ivan, all of that is half off if you message us right now while we're on stream. That is a flash sale going on as we come into the final stretch, getting ready for, of course, FOMC. we're going to go ahead and bring in Mr. Chris Pulver, our headline guest here, and say hello to Chris. Hey, Chris, how you doing?
Good, Nick. Nice to see everybody today. Happy FOMC. Happy November. What's happening?
Yes, good to have you back on the show, Chris. This has been a regular occurrence for us, and Chris, to warm you up here, we've had so far. This is going on 5.5 hours that we have been live with guests from all over the world. So to make you feel extra special, you're our kind of headline guest here for the main event. So we're glad you're here. It's all been leading to this, and I've got some questions for you as we go into this. Where's your head at? What are you watching? What's top of your watch list as we come into this Fed meeting? And give us a little bit of your game plan. I know, obviously, there's not a lot of expected action from the Fed, but there's a whole lot of pressure surrounding what that press conference has for us in store. So give us your thoughts. What do you think?
Yeah, so I intentionally positioned this week for an up, down, sideways. Last week I did the same thing. The last 3-4 weeks of my stocks and options trading, it's been killer. We had a trade last week that we basically pinned price at 410 on the S&P, and it was a 10-to-1 return. It was an awesome trade. So I know you said before, like, you're just starting to dabble with options. Dude, I'm telling you, let's start talking more. It's some pretty good stuff to trade. So I'm watching the S&P for the following reasons. Last week when we hit 410, that was my measured head and shoulders on the downside. So I think that 410 to 400 is where the bulls can step in and defend. That's critical support, in my opinion, for this market to stabilize and find a floor. Obviously, we've rallied Monday, Tuesday, Wednesday coming into the Fed. The rate decision is going to be a bit of a nothing burger for maybe 20 to 30 minutes as the market just digests the same expected rate pause. Actually, the one thing I had looked at, Nick, I'm going to look at this right now. Let me go to the CME watch tool, and I'm going to see, like, so the big discussion was when in 2024 is the Fed possibly going to cut rates? Because the things that really matter right now, look, markets can ignore a lot of noise. And right now we have geopolitical concerns. We have a conflict going on. We've got inflation data. We've got the Fed. We've got markets for the year. Are they going to finish positive or negative? Who knows? A lot of this also goes into 2024 with an election year. And typically an election year is, gridlock is good for the markets. We don't want any crazy decisions. I could care less about the politics, but I'm just curious how the market's reaction is going to be. So right now, I haven't looked at this in probably a week or so. The anticipated rate cuts were starting to sprinkle themselves in like May and June. And I know that's when we saw, like, from the July peak, that's when we started to see the big dip in the broader market. Is that correction was they pushed out the pause cycle. The pause is going to go all the way to like May, June next year. I'm seeing right now that the higher probability is out to June of 2024. So higher for longer, pause for the Fed looks like we're going all the way out through summer trading, or all the way out through May, and then June could be that first 25 basis points cut. By the end of the year, so I'm looking forecasted from June to December, the anticipated rate for December of 2024 is going to be 4.5%. So we're looking at like a 3 to 4 rate cut cycle going from the second half of next year. And I think the big pivot for the market, maybe this is what they're looking for from Powell. I don't think he wants to deliver that because we still have an FOMC December 13th. I think the big pivot would be two things. One is if the Fed is no longer so stern and strict on sub 2% inflation target, and somehow they acknowledge that a 2 to 3% is more reasonable. They're seeing appropriate, like, slack in the job market. They're seeing appropriate, like, cuts everywhere and whatever. Like, they're looking for softer data points to continue to say, like, look, we're high enough. But going into next year with an election cycle, it wouldn't surprise me with the cuts coming that we're going to see, like, mild quantitative easing. We're going to see rate cuts. We're going to see some type of, like, Fed put and stimulus to just kind of keep things stable. That's ultimately the Fed's job, is price stability. So I don't know. I'm really, and I've had a lot of back and forth. I started to get some active trolls in my Discord channel, and so I've had to kind of temper that enthusiasm. But it's like, look, I don't like perma bears and I don't like perma bulls. It's like I trade what's in front of me, and I trade to make money week to week. So,
well, yeah, Chris, to add to your commentary there, you had a string of really great points. I want to kind of unpack that a little bit for the audience.
Sure.
So when we are talking about this, I know some people in the audience might be like, well, Nick, Chris, you guys, can you talk about the dollar? Can you talk about gold? What we're talking about here impacts everything, guys, because, let's take it from a dollar perspective. What Chris is saying is that you know, and fill in and correct me if I'm wrong. We're coming into a Fed meeting where sentiment has just been really, really pessimistic on risk on assets, right? The stock market has been just, you know, going through a corrective period. We're down, I think, at one point like 10, 11, 12% on the S&P. We've had a sell-off. We've had sentiment that's just incredibly risk adverse. They want to be in safe assets, and the dollar's been strong for that perspective. And, you know, while there is a case to be made that Jerome Powell's going to get up there and it's going to cause the markets to be volatile, you kind of have to start asking yourself, well, what is the room expecting? They're expecting Jerome Powell to come in here and come in with the heavy hand as he has and say, inflation's not where it's at. GDP, all these numbers have been so strong, but everybody already knows that. That's why the dollar's up. Yep. The question is, what is he going to say that's going to get us to break the 107.2 level, which has been our daily chart resistance level for the last few months? Here's your last few weeks. You've got 107.2. But maybe to your point, Chris, too, and it sounds like I'm kind of in the same camp. You look at it and you say, well, you got an election cycle coming up. You got yes, there's been hot inflation, but if that's an under discussed topic, that idea that if the Fed kind of says short term, we're cool with the idea of getting to 3 so that we can get through this tumultuous time and get through that, that would be so dollar bearish, because that would say the threshold has completely changed. So again, I think when you go into these events, guys, you have to be aware. I think, and Chris, I think you probably would agree, everybody expects the dollar to be strong because of hawkishness. So the risk is not necessarily, in my opinion, a blast through the highs. A risk, if you're a dollar trader, is a drop rather quickly in some sort of dovish narrative. Yeah. So I would say the bigger potential move would be to the downside on the dollar. Now, I'm not necessarily a bear. I'm just saying that if there is a surprise there that sounds more dovish, that's going to be the more unexpected thing that could happen, which would send stocks flying. It would send gold flying. It would send counters to the dollar flying, and it would send the dollar dropping. So what I'm trying to get at is, of course, Chris and I are talking here about all markets. We're not just talking about one. These are all going to be impacted by what we see. Do you think that's a fair statement, Chris?
Yeah, and to that point, I mean, one thing that is nice about trading like the dollar or looking at the chart like the DXY is, and I've said this very vocally the last couple of weeks, my chart alarms on the DXY are sitting at 107.35 and 105.50, which is essentially your range you have on your chart. So for me, I know that this week, and this is it's always an interesting shift. Like the Fed was never the first of the month. The Fed was always like the third Wednesday in the month. And it's like the Fed has become so important and so much of a priority that now it's the first data point we really have for the US to kick off the month. So we have FOMC today. We have non-farm payroll on Friday. This might be just a noisy week. So a lot of volatility, a big spike up, big spike down, maybe no real direction. But post FOMC, DXY chart, do we have confirmation above or below? Because if we're breaking higher, Nick, I think that breaking above that 107.20, 107.30 level, there's room to push to 109.50. There's room to get back to the multi-year highs back that we had in October of 2022, all the way back to like 114, 115. So, absolutely. I mean, the dollar has room to maintain this bullishness. But to the point of, if the markets are going to have a risk on rally in any way, shape, or form, to me, I think the dollar has to get weaker. I mean, seeing that gold has been ripping the way that it has and outperforming silver, seeing that Bitcoin has broken that 31, 32K resistance, and somehow those two instruments not seeing the dollar move at all, that is weird to me, because now it's like, where's the lag and where's the catch up in that correlation?
So Chris, here's one thing I'll add to that. And I think this might be where we slightly differ. So I think that the dollar, I am pretty bullish when it comes to equities. Clearly, I showed everybody on the stream, for better or for worse, my positioning. I'm bullish on the S&P. I've got my trade on the S&P. As you mentioned, I have dabbled with some options. I've been selling some covered calls, so I guess I'm not super ultimately bullish. But the idea being, I'm generally bullish going in. I actually think that in the case that we get a dollar sideways movement or a dollar downwards movement, that this is still bullish for stocks. And I'll give you my point on that. You've got Europe potentially entering into a recession. You've got the Japanese yen falling off of a cliff right now. And you've got a lot of fear in the world. So that fear, is that the standalone thing that's holding the stock market down? I actually don't think so, because I think you can have an environment where earnings are good, GDP growth is still happening, people are employed, stocks rally on that because the Fed just says we're going to stick it out here with potentially, we're going to leave it unknown. Because then what that does, it takes away the fear of further rate hikes, which we, of course, further rate hikes, that's what's going to get you to get that breakout, as you mentioned, in which case, totally agree. I'm probably stopped out of my S&P trade at that point. I'm probably even looking for dollar trades myself, just tucking my tail between my legs on this idea. But I think, I think there's a world where we don't necessarily see stocks or the dollar have to crumble in order to get a stock rally. So I think the market is so bearish that it takes anything and it probably pops. I mean, even you got Apple earnings tomorrow. Who knows? That hasn't been a big thing. Mega tech companies have not been able to really save the market by any means, but Apple's a big player. It's the biggest S&P. So.
Sure. In your EDGEFINDER, Nick, do you guys have the AAII sentiment? Do you guys pull from that at all for overall investor positioning in the stock market, like bullish, bearish?
No, but we should. That's a wonderful idea.
Okay, because the 1 year bearish mark that marked a pretty big bottom in the markets, this would have been the end of 2022. It was a 52.3% bearish bias. And the historical average is around 31% bearish. So it was way extreme. And right now, as of last week's trading, 43.2% bearish, 29% bullish. So I think there's some wiggle room there for the market to have a seasonal run, right? If anybody's heard of the Santa Claus rally, a lot of stuff gets ignored in Q4. A lot of stuff gets ignored. I mean, everything in the Middle East going on right now, everything with the Fed right now, because the reality is Jerome Powell isn't saying anything different. His messaging is going to be, there's been jokes out there about taking his statement and just replacing one word. And that's essentially what he does every month for Fomc.
Yeah.
So it's very calculated.
And to your point, Chris, just to showcase what you're talking about, the Santa Claus rally, for people who are wondering what Chris is referring to, we've got the data here on the screen here.
Yep.
So this is the seasonality of the S&P 500. This is just a last 10-year historical average. And you can see, look how spot on it's been this year. It's actually uncanny how spot on. The white line represents the number or the actual gain or loss on the month.
Okay.
And the blue chart represents the historical average in the last 10 years. Look how it's pretty much followed suit with seasonality this year.
Right.
So if seasonality is a predictor, which by itself, it's not a holy grail, but it is something to consider. If seasonality is to stay persistent, potentially a Santa Claus rally or end of the year, fourth quarter rally could occur for stocks. And perhaps that does mean a back off in the dollar. So I guess, like I said, I think it can be a sideways dollar and still see a stock market rally. But
I agree. I really agree. Yeah, I think that could totally happen. And then we'll figure out maybe Q1 next year is when the dollar gets some traction, or maybe the whole dollar stuff is going to be a big pivot when the Fed finally makes its first rate cut. Whether that's bullish or bearish for the dollar, I don't know. We'll find out. But it's I don't know, Nick, how many traders have you been discussing the Japanese yen with? Because I'm so frustrated I don't think the Japanese yen is tradable in a sell perspective at all. You're better off just buying every dip and just focus on the bias. If you're trading Japanese yen right now, you are literally trading and waiting for something with the BOJ. And right now they're doing nothing other than just weakening their currency. And who knows how much further it can go. It's do not fight the yen or call tops. It's a terrible experience.
I'm with you on that one, Chris. I think the Japanese yen is an interesting one. We've got breaking news here, guys. Just bear with us. We'll be right back for the number as it comes out here. I'm right back to your Japanese yen concept. Let me just make sure, in case there is any surprises, unexpected, of course, but the number is out. Euro USD dollar dropping just slightly here on the 15-minute. These are 15-minute charts across the board. Let's see. I mean, if it's anything other, it would be obvious. So we've got 5.5% as expected. And what I mean by that, guys, is if there was any surprise in the Fed funds rate, you would have to scroll out for 5 minutes on your chart in order to see where that price action went, because it would move so far, so fast. Regardless, the the dollar is dropping here initially. I mean, you've got to move on the 1 hour chart, but we say this every time, Chris, and I could take the words out of your mouth because I know we're both in the same camp with it. This next 30 minutes it's not a whole lot of meaningfulness because, again, this is exactly what the market expected. What truly matters is the statement and press conference that come afterwards.
Right.
So, Chris, I won't keep you on too much longer, but I do want to ask you for this upcoming meeting,
Yes.
the press conference. What's the game plan for you? What are you looking for? Would there be anything that shakes up your view on the market or just kind of confirms your bias in either direction? What do you think coming up into the press conference?
Yeah, I mean, I'm pretty neutral to see. What's going to be interesting is how price closes today. If the market just rips up on Powell, I mean, I'm looking at intraday levels, Nick, around 423 to 425 in the SPY. Downward levels, we fill the gap from this morning at 418 and change, possibly rip down to 415. That's a very volatile day. And then the market maybe comes back to center by closing bell, and then we deal with a quiet tomorrow and then a Friday that's non-farm payroll. So all in all, I mean, I think what really matters is don't get stuck in something ugly. Don't overtrade or over leverage with a day like today when the markets can move really quickly and you might be on the wrong side of it. Obviously, the right side is great, but Friday's non-farm. I say let the daily candle settle for the week, let the weekly candle settle for the week, and then see where we're at. So, Nick, I'm going to do this. I'm going to text you at the end of the week. One of my trades for the SPY, I've got basically an upper, middle, and lower level. If one of those gives me a nice solid payout, I'm going to give you a little heads up. Last week we had one that paid 10 to 1.
Please do. I've got my SPY trade open too. So I mean, it's obvious. Mine is straightforward. If we break the lows, I'm out for a loss, and if we rally higher, then I'm trailing a stop on it. But Chris, if you do that, if you want me to or don't want me to, maybe I could share it with the audience as well for people who are curious to keep up with you. Chris, I want to thank you for coming on as always, giving us your rundown, your game plan. And I also just want to say, for those of you guys who would like to keep up with Chris, he was our main card today for a reason. He's a brilliant dude, market money manager. He's got a long history of education and working with traders all around the world. So Chris, thank you very much for coming on the show. We've got your YouTube channel here. If you guys would like to get in on his daily live streams and his market analysis, find out more information about what he does, please feel free to find his channel using that link. And Chris, thank you very much for coming on the show. And I guess we'll see you next time.
All right. Thanks, Nick. See you, everybody.
I'll talk to you Friday.
Sounds
See ya.
good, man. See ya.
Yeah, see ya. Yep, guys, always good to have Chris. I mean, like I said, Chris has a long history in the industry. He's been trading for quite a long time, longer than I have. And of course, I'm always honored to have him on the show. Here's an updated look at the dollar. The dollar has been able to break through this high, right? Here's that 106.8 level, which we did crest above it. We did trade back above it. But guys, it is, as we mentioned, I saw some people in the chat saying that they were disappointed with this. If you are disappointed, Jesus says, I'm disappointed. If anybody was like, hey, that was nothing, it's because it hasn't happened yet. If you're newer to fundamentals, if you're newer to the markets, the event has not happened. Do not go anywhere. The event hasn't happened yet. The event is news, right? What came out was not news. It was completely expected. As expected, 5.5% were holding rates. That's just a tiny blip of what really matters and what is yet to come. What's really to come is in 30 minutes, we have the press conference with Jerome Powell. The Fed chair, Jerome Powell, will have a statement that he will issue, and he's doing that, and then he'll have the press conference at 2:30. What he says in the next hour will dictate what happens to markets, because what he will say will be dissected by everything from algorithms that are listening to his speech to large-scale hedge fund managers that make decisions. And they're going to watch and listen to what he says. Every word he says is, of course, going to be closely monitored. So as we proceed, it's not about the spike here. It's not about, I want to be clear here. These events are not necessarily spike and one direction instantaneous moves, perhaps like an NFP event. What we've got in front of us now, guys, is we've got Fed speak, and Fed speak is some of the most market impacting stuff that we could possibly get. and it's coming to us in the next hour or so. So here's the thing. As we continue on, let's see, you guys sometimes don't, will you be sharing the stream? Yes, if Chandler or James, if one of you guys could start digging that up for us whenever we get ready. We will, of course, like I said, we'll be reacting to Jerome Powell and his commentary. Full transparency, as I have made mention to, I am still long SPY. My stop loss is in place. I know I've got my trade plan activated. I picked this trade up this morning inside of our VIP signals group. I'll show you guys what that trade looks like, and I'll continue to show you where we're at. Yesterday I took dollar CAD, no longer in dollar CAD, all trailed out, took profits on that one. I pointed to the seasonality that we discussed with Chris moments ago, and how important that was. And then in terms of the S&P, like I said, I picked it up this morning on this week retracement. I liked the setup and went ahead and went live with that one. So I'm still in that trade and very much keen on hearing what we have to hear from that. If you guys would like, by the way, let me just make this very clear. I said this a second ago. If you're a regular and you have been thinking about getting access to the EDGEFINDER or to our VIP signals group, right now, during this stream only, it is 50% off. Okay. We're doing our Black Friday sale this month. It is our biggest and best discount on any of our products of the entire year. And if you're somebody who's been watching us for a while and you've been thinking about getting access to the EDGEFINDER, or you've been thinking about getting access to our Discord, or you're excited about the new EDGEFINDER smart alerts that just dropped, message us right now and you'll get 50% off. That's bigger than our other sale. We're doing a Black Friday sale all month, but for stream viewers, it's an extra big discount for you right now if you direct message us on our website. So click this link. Again, that is a celebratory FOMC discount that is available to you right now. When you click that link, just do this. So that link is in the chat right now. When you get taken to that link, click chat now. You'll be speaking to a real person on my staff. Click Black Friday sale, which will get you 45. They'll actually get you 50 if you ask for it. They'll do half off for you if you let them know that you were watching the stream. And if you're somebody who already has EDGEFINDER access, click this and get access to the smart alerts. Those are also available for you. Okay. So yeah. FOMC last discount was 55%. No, we've never done 55. 50 is the highest we've ever done. We never go higher than 50. The reason I know that is because the last time we did 50, I said we'd never be doing that again until Black Friday. And Black Friday is here. And it's only for this stream. We're not doing it all month. All month, we've got 45% off. But if you message us right now, we're splitting the cost in half. We're cutting it in half for you, and you can get access to anything from our store for 50% off. Okay, so I'm holding on to the SPY. I'm holding on to S&P. We're going to see how this trade plays out. I want to cover back, circle back and take a look at gold here. I made this point earlier. This level has been so stubbornly strong for the bulls. Okay, what I'm talking about is 1980. Remember, if you watched, for those of you guys who have been every day, if you're an everyday viewer, whether it be live streams or videos, we have discussed this level at length, the 1980 level. We saw this as a level of resistance. We finally broke it. We held it and we shot up from there. Well, we're back, right? We double topped, came back down, broke through this trend line, and now we're kind of in chop land for the gold market. Okay. The thing here is, at 1980, is this going to hold? I would say path of least resistance is yes. I think that path of least resistance, but that's also a bearish bet on the dollar, and I'm not necessarily a dollar bear. So I'm giving you this context for those of you who are gold traders. I am somewhat neutral when it comes to actually taking trades on gold. It's why I have not been trading it. I think we probably stay range bound for now until we get some clear, strong news. So if you're a gold bull, again, I think 1980 holds. I could be wrong about that. Again, it's not something I'm putting my money on. I'm just telling you, I think from a price action standpoint, yes, we've lost that upward momentum. We're still in a sideways market. I think these lows are fairly oversold, and we'll see if that is in fact actually the truth. So again, time will tell. Jamie, thank you very much for this. I do appreciate this. For EDGEFINDER users who speak up about how it's helped them, I just want to say, as a small business owner and how much work and dedication we put into our tools, I do very much appreciate this comment. Jamie says, I'm an EDGEFINDER Pro user. If you're not sure if it will help you, it has made a massive difference for me, helped me be a lot more profitable, and now looking to scale my funded accounts. Jamie, congratulations on your growth, your progress. And like I said, as a small business, I do very much appreciate that. I'm glad that the softwares are helping you. And as Jamie said, if you guys are thinking about it, please feel free to shoot us a message and at least at the very least, message us and we'll give you some information. Why not right now, as it is the best time ever? If you're ever going to buy the EDGEFINDER or consider it, do it now when it's 50% off. Again, shoot us a DM. That's your chance. So in terms of other markets, I mentioned that I had a dollar CAD trade. It did end up closing for a profit. I closed out of that trade, rode this market move higher, and now it's kind of gone into chop land. I'll give you my, if dollar breaks higher, if we break out here, it could be a very interesting thing to take a closer look at. I'll be watching dollar CAD. Is it still a top setup? It was, yeah, there it is. Dollar CAD bullish. Bullish because it's getting a nice upward trend. The economic figures favor the dollar, inflation, all that good stuff. And just a heads up, Chandler, when we do get that, I think it's at 2:30 is when we get the Fed speech. I can see you've got it pulled up. Whenever we get there, in case I start to forget, you could just throw it on the screen when we get there. How much is it, and does it need a laptop? There is a semi-decent mobile version, though it is definitely better for a desktop. If you're a desktop user, the EDGEFINDER is going to be better. Jose says, the EDGEFINDER is a big part of my weekly analysis, and it's a big factor. Thank you, Jose. Appreciate you. Hold NAS buys. Well, we'll see what JP has to say, but I am currently, like I said, holding bullish on my S&P trade, which of course by proxy is very much similar to NASDAQ. Funded Engineer says, nice content, Nick. Thank you very much, Funded Engineer. I appreciate you on that. Should do a marathon like this once a month if possible. I will I'll speak to the team about it. We're going to look at the analytics, to be completely honest with you. We'll see if people like these all-day streams in terms of viewers showing up, then we may consider it. We may look into it more. I'm here all day. Cold J, I appreciate you, and everybody else who's been sticking around with us. And again, let's keep going. I want to cover some more markets here. We haven't talked about oil. Oil has dropped off the face of the earth in the last few hours here, which, by the way, low key or perhaps high key, this is bullish for stocks. Why? Energy prices have a lot to do with inflation. Okay. If energy prices are higher, people are paying more at the pumps. It trickles down into everything else. And so this drop in oil prices is potentially a relief for inflation concerns. Unless there's like really big recession fears suddenly. But for now, it doesn't seem to be the case. But this drop in oil prices seems interesting. Dollar yen. The question is this a buy on a pullback? Right? Many traders wondering about the yen crosses today as we had an explosive move higher. Well, let's take a look at what the crowd thinks about dollar yen while we're speaking on it. Taking a quick look at retail sentiment. In just a moment, we'll cross over and see what smart money thinks. In just a second, we're going to take a look at COT data. But first, let's look at the crowd. So how to read this? Retail positioning shows us what retail level traders, amateur traders who typically lose money, what are they buying? What are they selling? And where are they positioned? Well, you take a look at dollar yen and we get a bullish signal. This column is our signals column. Okay. Why is this bullish? Well, look, retail traders are 85% positioned short, at least on the data that we've pulled, which is a good sample size. We pull in from various brokerages. 85% of positionings on our population test short. Dollar yen, retail traders are betting against the move. Now, Chris Pulver made a good point before he hopped out of the stream. He pointed out that a dollar yen short is basically betting that the yen will strengthen. The Bank of Japan will be able to save it. We got to talk about that in a second. Not Trade just says, how much is the EDGEFINDER? If you'd like pricing information with our half off sale that we're doing today, please feel free to message us. We'll drop the link one more time in the chat. Like I said, it's Black Friday. We got the black shirts on. We got the space theme. It's half off if you message us during this live stream only. It's not going to be half off all month. Not 50%. It's today. The big event, big stream, 50% off. You're going to be getting a better price than anything else. That is the best price. Okay, 50% off. Message us. We'll give you pricing options, different products, things we have, and we'll make it work for you. Whatever budget you have, we have different options. So if you're like, I don't know, I can't afford it, just message us. We might have something that works for you. Just message us and we'll find out. So Jay Powell, what's up, JP? You have a meeting in like 15 minutes. What are you doing? What are you doing in the... anyways, dollar yen, like I said, getting a bullish signal based on this, and it adds confirmation to the setup, in my opinion, on the long side. You know what else adds bullishness, though? This is what else adds to bullishness. This is the COT data, okay? COT data, if you don't know, it's a way to track institutional positioning. Week to week, what are they long? What are they short? It matters a lot because if we can see what the smart money is doing, that's why we call it the smart money tracker, it can be a useful indicator to potentially align ourselves on the right side of the market. Now, is it a guaranteed easy answer as to which way the market's going to go next? No. There is no, to my knowledge, unless you have some sort of insider trading information, there's no holy grail indicator that tells you what the market's going to do next. However, understanding what institutional money is doing is another level of confluence. So let me show you this. When we talk about the Japanese yen, what's the signal here? Very bearish. Positioning, look at this, guys. Institutional money is 80% positioned bearish against the yen. Huge, huge short bias on the yen, okay? What about that US dollar we just talked about? What's that all about? Look at this. Huge bullish positioning. Now these aren't your amateur traders. Remember, amateur traders are short dollar yen. We just confirmed that with the data. But what about institutional money? They're long. 76.88% of positions tracked from the COT report data on the non-commercial side of things, those are the pros, long US dollar. They've held a long position. They've been on the right side of the market. They've been making money. Yen, they've been short. They've been making money. Pay attention to this, guys. I mean, this is what the pros are doing. The reason we track this data is because we want to see what the pros are doing. Okay. Now let's continue on. This second half is very important data as well. This shows us the non-commercials change week to week. This is the latest data. Well, if you're wondering why I went long S&P, this is one of the reasons. Look at this. SPX, number one, most bullish change. Big money, they bought. You know, it's like that meme, he bought. You know, that meme? In this case, this is like the opposite. It's like he bought, oh, that's actually bullish because it's the pros, right? It's not a guarantee that it's going to go higher, but it's a nice confluence. Same thing with gold, by the way. Gold got a nice bid. Dow, nice bid. Silver, nice bid. Flip it around. What's not so promising? NASDAQ, a little concerning. Kiwi, pound, oil. By the way, oil dropping. Guess who sold this week? See how useful that can be? If you're somebody who doesn't have access to this data, like I said, we're a software company out of Atlanta, Georgia. We build tools for traders, and there has never been a better time to get copies of our software. Is this a sales pitch? Yes. There's no question. I'm not trying to hide. I'm not trying to deceive you or trick you or anything. This is powerful data that we've spent countless hours building and curating for you guys to use. We have thousands of people using the EDGEFINDER, and if you'd like a copy, this is the best time of the entire year. when we're doing this 50% off sale to get a copy of the tool. Yes, it's a sales pitch, but it's a powerful tool. It's why I use it every day. It's why Frank uses it every day. And it's why so many other traders, we even had Jason come on earlier in the stream. He uses it every day, right? And he's not even an A1. He doesn't work for us. He's just someone who has benefited a lot from the tool. And we have wonderful people in the audience who have taken their journey to the next level with the EDGEFINDER. So is it a sales pitch? Yes. I'm not trying to disguise it as anything else. It's a wonderful tool, though, that we fully use ourselves every day. I don't think that there's anything better than that. If somebody is using their tool every day and they genuinely benefit from using it, again, I would not sell anything unless I feel confident that it is worthwhile. Okay. Back to dollar yen. How do you trade it now? You got bullish confirmation from the smart money. You got retail that's piled up short. Okay. For me, the setups are pullbacks into perhaps this 50% retracement zone. Okay. I like the dollar yen on the long side. I think the path of least resistance is higher. If I'm super conservative, I'm thinking a stop below this previous kind of explosion higher. That would be super conservative. Now, when I say conservative, when you widen a stop, you got to reduce your position size, right? Because you can't just take a ginormous trade and a ginormous stop loss. You got to manage that risk accordingly. However, if you're more on the swing trade or day trade side of things, you may lower your time frame, perhaps, and perhaps you're looking for a tighter stop. Now, of course, this is, if you agree with this idea. I think that dollar yen looks bullish on a retest. And we'll see if we get it. This is my personal opinion. As always with these streams, these are not financial advice. I'm not a guru. I'm not a fortune teller. I don't have the future crystal ball in my back pocket. I wish I did. Trading would be super easy. But as you all know, as myself, I say it all the time, trading is really difficult. You're trading up against some of the best, people who are not going to let you have their money for free, right? You got to beat other people in order to make money in the markets. That's just the reality. How much time until the meeting, guys? We got 8 minutes or 7 minutes now. We're closing in on the main event. Fed speak from Jerome Powell at 2:30, the press conference. How are we looking? Let's shape up the market, size them up here as we get closer into it. The dollar staying above 106.8. And again, guys, this is 36 minutes left on the candle. We'll watch to see how price action forms here. If we can stay above this area, 106.8, I think, again, path of least resistance would be higher, but we've got plenty of time left in this candle, and JP is on his way. We got James in here. James, do you want to say something? Do you have something to add? I see him in here. I just can't. I saw he messaged me. I'm sorry I missed your. Let me check off screen what you had to tell me. To kill time, do trivia. James, don't worry about it. I got it. We're good. We got, I'm tired, but it's fine because we've got Fed speak coming in and I can just listen and take notes on what JP has to say. So I'm off the hook in a few minutes, kind of. James is looking out for me. Appreciate you guys. Again, for those of you who are just tuning in, we have been live officially for 6 hours. We crossed the 6-hour mark. Wow. We've never done that before, guys. That's the longest stream by far ever. I want to thank everybody who's been hanging out with me. We got time. We're not going anywhere. I know people rush to start leaving the videos and stuff as soon as I say that. We're not going anywhere. We got Fed speak in 5 minutes here. And, like I said, I will stay transparent about this. You guys know my game plan. I am long S&P with plans to stop out if we break back underneath the lows. Okay. Very clear. Staying clear on the S&P 500. I am not invincible here by any means. I like my setup. I think my entry was pretty good, but it's going to come down to Fed speak. Fed speak is either going to help to give us a bit more of the rally that we're looking for on the S&P, the dollar train, etc., or it's going to erase that and change everything, right? Now you might say, well, Nick, why are you in a trade if you have no idea what's going to happen? Well, I don't know what he's going to say specifically, but I generally still fall back on, I think in the coming days, regardless of Fed speak, The disinflation trend is still in play. We have CPI around the corner. We have jobs numbers on Friday. If we continue to see what we saw last time, which is wage growth normalizes while people stay employed, I think that's bullish stocks. I think that could continue to be a nice catalyst to the upside. And that could continue, like I said to Chris, I think it could continue to support the dollar bullish thesis. I don't necessarily think that there's a world in which the dollar has to come down for stocks to go up, or the dollar has to go up for stocks to come down. I think that there exists a possibility that we see strong economic data. You compare that to the euro, the yen. That is how the dollar is quoted after all. It looks at the other currencies. And the dollar may stay flat or slightly drift higher. And I think the stock market can also do the same. So I've been clear on my agenda there. Will I be right? It's very hard to get the markets perfectly right, but we will. That's the plan. Okay. Am I still in a pound dollar short? Nope. I stayed dollar bullish and traded dollar CAD instead. We took this trade earlier, yesterday. Here's a 1 hour chart. We had dollar CAD long here at support, went sideways for us and then exploded higher, trailed stops, took profits on the way up. So if you guys are in the Discord, then you saw that trade. I'll show it to you. Just because you never know. I remember, when I was new, I'd always hear people on their stream be like, yeah, I took this trade. And I'm like, did you actually? Well, I shared it inside of our Discord. And if you're in our Discord, then you saw this trade. I took dollar CAD long. This was the initial idea, right? Breakout, retest, support, trend line. Most importantly, fundamentals looked good to me. I'm still overall, like I said, dollar bullish. Trailed stops, price exploded in the right direction. I even added to this trade mid-trade. Trailed stops again, and then stopped out for a profit. Do you agree with Santa Claus run? Yes, I am in that camp. Is that a certainty that that will work out this year? No. There's no guarantees in anything. Markets are not that easy. Seasonally, I like the chances for an upside run. But it's all chances. We have to understand something. The stock market, the forex market, the futures market, none of it is absolutely predictable like social media gurus might have you believe. The reality is markets are not that predictable. It's all about weighing the odds, managing risk, and taking positions when they come to you, not chasing. If you agree with that, then do me a solid favor and hit that thumbs up button on the stream. I think we crossed over 300 likes on the stream. We've been live for 6 hours. And if I'm being kind of honest, that's a little bit depressing. We've had like thousands of people in here and 300 likes. If you guys could just help us out. We've been working all day on this, trying to keep you guys up to date with everything going on in markets. Help to blow up that like button for me one last time. If you have not clicked it, I've never begged more for the like button in my life. But it would really much be appreciated if you enjoyed this free service we're trying to bring to YouTube. Again, guys, we've got Fed speak coming up in about 1 minute. So they say. We'll see if last time around CNBC dropped the ball on the mic. They dropped the mic almost, basically. Something happened. They didn't have sound last time around. So hopefully they have sound. CNBC. I don't know. Maybe A1 Trading should just take over CNBC. What do you guys think? A1 Trading better than CNBC? I can't even say that. I listen to so much CNBC to try and stay up to date with markets. Though, I think what we do is in some ways more relatable to people. It's not so newsy. Well, it's kind of newsy, but it's not as, prim and proper. I say some really stupid stuff on live YouTube every day. I don't know, 6 hours in, I got to be going crazy a little bit. I haven't done 6 hours though. Let me not take away from the rest of the team. Guys, we got the speech here coming in. I believe we've got video and audio, sound, and yeah, we got something. We got an empty podium, guys. What if, what would be crazy? What if the empty podium just caused the markets to go insane? Like just the fact that there's nobody at the podium. Oh, there he is. There he is, guys. Everybody get their salutes. I know about half of you guys just put up your salutes ready for
Good
Jake.
afternoon, everyone.
Here he
Welcome.
comes.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process
Frank,
of
maybe
getting
I'm wrong,
inflation
but this
sustainably
sounds
down to
pretty
2%
bullish so
has
far.
a long way to go. Despite elevated inflation,
No,
longer-term
yeah,
inflation expectations
I don't
appear
see
to remain
anything
well anchored,
alarming
as
here.
reflected in a broad range of
This is kind of
surveys
what we want to
households,
hear.
businesses, and
Yeah.
forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Wow.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. A restrictive stance of monetary
Just 1
policy
trillion.
is putting downward pressure on economic activity and inflation.
Just a little
The
trillion.
committee decided at
Not a
today's
lot.
meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly.
So
in
we gotta
recent
see
months,
lower
driven by
NFPs, what he's
higher,
saying.
longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks.
Frankie, you trailing
In
stops on
determining the
SPY?
extent of additional policy firming that may be appropriate to return inflation to 2% over time,
I'm at break even
the committee
still,
will take into account
but
the cumulative tightening of monetary policy.
I'm looking right
The
now.
lags with which monetary
4
policy
hour.
affects economic
You know,
activity
if it
and
breaks
inflation,
higher than the last 4
and
hour,
economic and financial
I might put
developments.
a stop underneath
We
those two
remain committed to
candles.
bringing inflation
Okay.
back down to our 2% goal
Let me see.
and
Let me
to
pull
keeping
it up so
longer-term
it's
inflation
easier to see.
expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
What are you thinking NFP wise?
Howard Schneider with Reuters. Thank you,
I think
Chair
it comes
Powell, for
to
doing
the
this.
concept
To what
again.
you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such a stance. So that is the broader context into which the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. If things are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. Second thing is that the longer term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So in the meantime, though, perhaps the most important thing is that these higher treasury yields are showing through to higher borrowing costs for households and businesses. And those higher costs are going to weigh on economic activity to the extent this tightening persists. And, the mind's eye goes to the 8%, near 8% mortgage rate, which could have, pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't. We're not confident that we have. And that is the way we're going to be going into these future meetings, is to be, just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
So it's the same thing.
Yeah.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So let me start by saying we haven't made a decision about September. You're asking a hypothetical, but we're going into the December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity, and so we'll be taking, and also the broader situation, the broader financial conditions situation, and broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. I think any kind of an estimate that was, precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say
Did he ask if there was still a risk of recession?
I
missed that question. If that base case is still a recession, they said no.
Households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be. And it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
If I could follow up, I guess what makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we just we take it as it is.
Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture, and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth. We look at growth insofar as it has implications for our 2 mandate goals. We look at that, and we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay. And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So it's the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time sustainably? That is the question we're focusing on. The next question, as you know, will be for how long will we remain
well, that's pretty obvious.
Restrictive. And what we said there is that we'll keep policy restrictive until we're
higher rates for longer
inflation
is what he's been talking about.
Sustainable path down to 2%. That'll be the next question. But honestly, right now we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think the first, it's so important to get that first question, as close to right as you can.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for 1 additional hike?
I think you're talking about 1 additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time. That's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking is, should we hike more? It's not, and that is the question. And you're right that in September, we wrote down 1 additional rate hike, but, we'll write down another forecast, as you know, in December.
Thank you, Chris Rugaber at Associated Press. Well, since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated. And that goes for the war in Ukraine. It goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So the UAW strike, as you point out, is appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation. And we're very focused on getting confident that we have achieved a stance of monetary policy that is sufficiently restrictive. That's really our focus.
Great. And just one quick thing. You last month had gone to York, Pennsylvania, where you talked to last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did they
Ideally,
pick up on?
he's trying to get a strong labor market and lower inflation too.
I wouldn't say I was terribly
Which,
surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive.
May or may not happen, but
have
looks,
put together in the face of some
it looks like it might
trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability. Fully restore price stability and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. We've been saying that we need to see below potential growth.
Yeah, I was gonna say that sounded dovish right there.
Strong, but yet we're still seeing this. I think
for him to acknowledge the inflation trend, that's what we were saying before stream.
I still believe that it is likely to be true. It is still likely to be true, not a certainty.
So it's confusing then looking at NFP.
Some slower growth.
I guess as long as CPI comes in lower,
to get to fully restore
seeing
price.
a beat in expectations on NFP is probably one of the best scenarios.
Yeah. It's interesting. I think overall, Frank, this, I've got to hop off here in just a second for the podcast, but I just want to read some notes here that I found that kind of summarize what we've got so far. The Fed kept the target range the same, but kept the door open to another hike. Nothing different about that statement. That is completely what was to be expected. What's interesting, though, the Fed also raised its assessment of economic growth and acknowledged that stricter financial conditions would have an impact on the economy. So them acknowledging it and the way he kind of softly spoke to like the awareness and the not wantingness of damaging the economy is something that's a bit more new. He hasn't said that. In the past he's been more like it's probably going to happen. Now it's saying we recognize that we don't want that to be, we don't want that collateral damages or minimal collateral damage. And he also just nodded to the fact that the progress has been impressive without the economic damage. So that to me, it's clearly not selling off the S&P. The dollar the dollar kind of flat on the hour. But I don't know, Frank. I think we might have to do. We'll be back for the rest of this week. It's been a 6.5 hour stream. There's 639 people here. Can you guys do us a favor? I'm sufficiently beat up after this 6 hour stream. Don't know about yourself, Frank, but Frank, I think we should call it there. And
let's go for 8.
Yeah, let's go for 8. Why not? Frank, thank you for joining me on the call for this. For of course the official JP speech. And I guess we'll call it good. The last thing I will say, if you were here all day, look at you. Thank you guys. Very much appreciate you. More dovish than I would have expected today, which perhaps dollar weakness, perhaps we stay alive in the S&P trade for another day. Remember, guys, we're doing our Black Friday sale. Everything is 45% off right now. And if you made it to the end here with us, it's 50% off. Final call. The 50% off is no longer available after the stream ends. Shoot us a DM. Use the link that's in the chat right now if you would like to get access to that. Half off if you DM us. Get access to the EDGEFINDER, Frank and I's trades. If you want to see our trade alerts, you can get in on that. And the brand new trade, the EDGEFINDER alerts. If you guys don't have the EDGEFINDER, if you do have the EDGEFINDER, but you don't have the alerts, I'm telling you, we've got some awesome new features that are coming out or that are now out. You can get notifications from the EDGEFINDER about upcoming COT data, top setups from the EDGEFINDER, score flips, so much stuff. So message us. Take advantage of that 50% off FOMC stream sale. And with that said, guys, that is going to come to close with our 6 hours, 38 minutes, 49 seconds long stream. Frank, any final words?
Thank you guys for watching, and especially you people that have been there all day. That really means a lot to us. So thank you.
Frank, I say we salute and we end the stream there. I think we're lagging, Frank. There it is. All right, guys. Thanks, everybody, for watching. Have a wonderful evening. And I'm going to go. I got to do a podcast. But then I'm going to go fall asleep. So see you guys later. See ya.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.